All right. Good morning. Good morning. Okay. Let's see. All right. So futures are higher. We're off the best levels of the session. We're up like 30 plus handles earlier this morning. Let's see. Let's go out and look at that. Make sure you read the gamma update. So it looks like we hit 63.73 right around 8 o'clock. I don't think we were higher, were we? Let's go take a look. Actually, we're much higher. Looks like the high was 63.74 at 6 a.m. Listening to listen to Schwab CNBC. Can we still keep climbing? They're funny. I swear they're clueless to Gamma. Schwab. You got Kevin Green. He's always on top of that. They're starting to wake up to Gamma and what institutions are doing, how they're positioning. Okay, Netflix gapping up this morning, trying to get back above 1,200. Netflix shorts covering. Okay, NASDAQ 100 looks pretty good. We got about 50-50, 50 green, 50 advancing for now. About 30 stocks unchanged and about 10 to 20 that are declining. So the majority is either advancing or unchanged, with about 10 to 15 decliners on the NASDAQ 100. 100 stocks. You could probably name most of them if you had to sit down. Somebody give you $10,000 if you could name the top, name the 100 stocks on the NASDAQ 100. I think you could probably come up with the majority. Okay, Krispy Kreme. I was reading an article about Krispy Kreme, and I saw a tweet or a X post about Krispy Kreme. I had no idea. I haven't been there in 4 years. When we first moved down to Myrtle Beach. They have them big down in the south, but $2.70 for one donut, flour, milk, sugar, and egg. You fry that and charge $2.75. I mean, the gross margin must be crazy. Anyway, that's been up. That's more. They've been talking about that as a meme stock. It was like $4 the other day. It's up near $6 now. Krispy Kreme. Okay, all of the FANG stocks are starting to tick higher. New York FANGs ticking higher. Netflix gapping up. Okay, that looks good. Netflix gapping up. Okay. Did see CoreWeave also moving. Let me just check that out real quick. CoreWeave is up again. Uh, 133.50. UMAC, looking for that to get back above 11 or 12. UMAC, the drone stocks. Also looking for SMR. Oklo, the nukes, looking for those nukes to bounce. Most of them pull back to the 21 day. Okay. Let's see here. We got about 4 minutes to go. 4 minutes to go. The builders up. Probably going to add to Nail.
We actually don't assign year-end targets that would be somewhat predictive in a way that our indicators are not. Listen, the breakout is a bullish long-term development, and if you were to assume the trajectory of the current uptrend, it could get the S&P 500 close to about 6880 in the sort of middle of 2026. So not as impressive as the gains that we saw perhaps in 23 or 24, but compelling enough to warrant.
What are you
at least
doing to my
holding
chair?
most of your long
Huh?
positions and
You
looking
sharpening
for
your
those
nails?
opportunities like we're seeing in the
Stuck?
relatively oversold
There you
segments
go.
of the market.
You gotta trim those nails. Don't get a cadicure, huh? All right, so builders and
Secular bull trend in Bitcoin. It's also a bit overextended, perhaps in the near term, poised for some consolidation by our indicators. We're interested also though in the altcoins.
this morning we were talking about builders and retail catching a bid, starting to see rotation.
Bitcoin longer term and positive on the altcoins as they finally join Bitcoin in its rally.
Okay, let's look at XRT. Okay, we got 2 minutes to go. XRT turning back up. This has been a multi-month endeavor with retail. We've been talking about retail. Some of the retail stocks looking better than others. Still looking for Target to follow through. Target, looking for that to get going here. Target. Okay, what about Walmart? Walmart, does that get back above the 50-day? Not yet. Walmart, Costco. Went by BJ's the other day. It was not busy. Not busy. Very few people in there. Of course, it's summertime. Maybe that has something to do with it. But Costco's always busy. Costco is down below the 200-day. Looks like we're headed back down maybe to a triple bottom. Okay, I bought some Lulu last week. Bought some Lulu. Looking for this double, triple bottom to play out right here. Lulu. Looking for it get back towards the upper Bollinger Band. So it's consolidating in the lower half of the bands right now. So that's neutral to bearish. We had retail and builders rotating in. We also had junk bonds. Junk bonds are giving us bullish signals. Junk bonds and high yield corporate. We also have Bitcoin trying to take out the recent highs. It's still consolidating. Bitcoin. Let's get ready. We're about to open here. First 15 minutes, I'm not doing much of anything except taking profits off the table, reassessing the markets after 945, 950, looking for stocks with high relative volume for trades. Okay, we are on the move. Okay, builders. Let's see what Nail looks like. Nail. Okay, CoreWeave, got some sellers. Profit taking. Got profit taking on CoreWeave. Okay, profit taking across the board, looks like. Okay. All right. Apple. Let's look at the New York Fangs. New York Fangs, similar to what we saw yesterday. We opened up, stocks were higher, and then they just immediately sold. Watching NVIDIA on the move. Okay, Netflix pulling back. Netflix dropping pretty quickly here. 1180. Okay, I don't know what's going on there. Somebody sold a bunch of Netflix. It looks like Netflix. Okay, JP Morgan looking for a follow through. JP Morgan. Okay, we started the position in JP Morgan looking for a retest of these highs, adding on dips. JP Morgan. Kind of gappy this morning. Robin Hood, Elise, Alyssa, sorry. Robin Hood. Well, it's above 100. It needs to stay above 100, right? Needs to stay above 100. Okay. I'm watching. I'd be watching the 100 day. What the 21 day? Okay, let's take a look at Robinhood earnings. Okay, Robinhood earnings. Hood. Okay, Robinhood. 105% earnings growth. Okay, Robinhood revenue growth. We got earnings growth of 105%, revenue growth 50%. So yeah, I would think it's probably going to bounce. Look for a bid around the 21 day. Okay, Apple dropping off here. Looks like profit taking. All right, so we're looking for grind higher. Let's check out. Let's check out what the markets are telling us. Okay, so we got support right in this area. If we lose this support, we should see a move down here. 63.15, 63.20. It's early. Okay. So let's see what's going on here with the S&P. Watching the flow. Still early. Give it a few minutes to see if the New York Fangs can shape up. By the end of the day yesterday, New York Fangs looked really good. Let's go take a look at that index. New York Fangs. I know this kills your eyes going back and forth, but New York Fang. Okay, it's early. You don't want to jump into anything first off. We're still in this channel, this upward sloping channel. 21 days just below. We came down a little bit there. Let's see if we get a bounce. RSI is still fading. MACD stochastics fading. The trend is up 921.50 above the 200 day. Junk bonds look fine. Let's go take a look at junk bonds again. We closed bullish yesterday, junk bonds. Okay, so we're just kind of flagging. NVIDIA still moving. NVIDIA still moving. NVIDIA still holding on. JP Morgan, watch JP Morgan. Yeah, I like Dell. Dell's on the watch list as well. Dell, when do they have earnings? It's on the watch list. So just check the watch list for earnings dates. Dell. Okay, that's at the 21 day. Okay, so if you're going to look at Dell, make sure you check out TSSI. All right, TSSI. I sold my position on, what was it? Friday, I think, on this move up. Didn't want to hold it over the weekend. So we gapped up on Monday. We're holding right at the 21 day. So if this starts to follow through, most likely TSSI will keep going. watching Super Micro as well. Okay, let's see what's working right now. We've still got about 50 stocks advancing. NASDAQ 100. Let's see what the survey says. 337 stocks advancing on the S&P 500. The majority is advancing. We got 55 stocks on the Qs advancing, 45 declining, or unchanged. We got 975 stocks, 980 stocks on the Russell 2000 advancing. That's basically 50-50 on the IWM and the Qs. S&P 500 has the advantage right now. We have builders seeing rotation. Builders, I would probably assume, I would assume that we're going to see multi-week moves in XHB and nail. Okay, so I have a position in nail. It's a leveraged ETF, so I'm not going to trade options. It's three times the home builders. Okay, so if we can make it back to a midpoint, that'd be about a 60-point move in nail.
Yeah, it's a little patchy in industrials right now, Jim. Lennox is helping to lead, but Otis is helping to lag.
Otis, look, Judy Marks is going to come on Mad Money, and she has held in and done great things and made a lot of service revenue, including China. And she'll tell you over and over again that business remains very strong. So I have to find out more.
Okay, months to get there. Just don't buy the high. Okay, NVIDIA is still moving higher. Okay, JP Morgan on the move. Okay, JP Morgan, the morning run.
But did you see what people are saying about the cruise ships again? Oh my, this Royal Caribbean, someone downgraded Royal Caribbean the other day. Forget that. That was just sort of one more chance to buy it. The price target bumps for these stocks are insane. But then again,
okay, Broadcom turning up, NVIDIA looking pretty strong. So let's take a look at NVIDIA. JP Morgan on the move. JP Morgan. Okay, I'm going to turn off the extended hours. I don't like this choppy look here. Okay. JP Morgan. Okay, yesterday's entry. Okay, we needed to take a swing, it looks like, to get to where we were looking to get yesterday. We finally made it today. Okay. JP Morgan making the targets we were looking at yesterday. Given the strength, I'll just go ahead and hold on to this one, swing it. Let's see. Okay, so we're just waiting for the opening ranges. No hurry here. I'm not going to take, I'll take stock movement this morning with a grain of salt until I see a trend. New York Fangs, the majority of them are lower at the moment.
Although to your point, the stock had quite a move. It had a huge move. Whole move was based on the fact that the previous quarter they seemed to be very optimistic, and now they're back to their usual pessimistic ways. It's all tone. It is. It's all tone. And it bothers me because I think there's people at home who are going to sell the stock thinking there's something wrong. No, they're fine. But there are auto tariffs issues I mentioned. And when you start
Broadcom looking good. I like it, Rob. I like Broadcom. Okay, Apple pulling back. Okay, so that'll be an opportunity with Apple, most likely. Okay, JP Morgan looking good.
It's not as bad as the reaction from Fiserv today, Jim, which does cut their organic revenue guide to From 10 to 12, street was at 9, they go to 10, but she's down 17%.
Oh, my. I mean, that was one where I thought that's a high flyer.
Okay, JP Morgan. Let's see what the New York Fangs are looking like. They're mixed at the moment. Okay, so we have a doji for now, spinning top on the New York Fang. We're sitting on top the 21-day. We're anticipating a move to stretch back to the highs, so we'd like to see futures turn back up for a potential long here. Watching futures. Okay, watching the dealer hedging flows, watching that. Okay, so the flow from yesterday, keep an eye on it. Let's see what Trace looks like now.
Cyber espionage has been a key contentious point. The Chinese have literally an army devoted to doing nothing but
Watching the dealer hedge flow, we want to see that start to point higher, higher highs, higher lows. It's a little early to take a long. We could get something going here, but I'm watching the dealer hedge flows for a nice turn. Okay, this looks good. Let's see what Broadcom looks like. Broadcom, I want to see what the dealer hedge flows look like on Broadcom. We want these to be moving up and to the right. Okay, Rob. Okay, you can see your flow on Broadcom, the flow. Looks good. Coming off the low. Okay, let's take a look at the chart on Broadcom. Chips and security. Broadcom also has security segment in their business. Okay, that looks okay. JP Morgan at the highs.
10 straight. That's the longest streak on record, and a lot of chatter about approaching a golden cross.
There would be, listen to
JP Morgan. Okay, let's go check out what's moving the markets right now. We had builders and retail in play yesterday. It's still early. It's only 9:44 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's only 9:44. Okay, let's see. S&P 500. Lamb Weston, big move today. Don't want to chase it. Okay, Thermo Fisher gapping up. Lennox, AC, Lennox, Carrier, and Lennox. Those are some of the top units that big box retail uses for their HVAC installations. Lennox. Okay, let me just take a look at the earnings on Lennox. LI. Okay. Nice earnings. Okay, July 23rd. That was this morning, right? Lennox, they beat. Okay, here's Lennox. 14%. Earnings growth, revenue growth, single digit, but growing. Climate control systems, HVAC. I prefer Lennox over Carrier. The last time I was speccing those out. Okay, Lennox. And we had earnings today. Good. 1.48 billion. Lennox. Okay, big gap up. I wouldn't chase this, obviously, but it looks like on a weekly time frame, once the builders and everybody starts to chug along, we can start to add to positions. Builders and retail, seeing the rotation. So we're looking for these sectors to continue to perform. A 50% retracement here would be about what, 5 to 10 points, 5 points. Whereas if you take nail, this is 3 times the ETF. You could probably see about 60 points on this one. Okay, so I would go with nail. I don't feel like trading options on this. You could trade options, but if you did, I would be looking at individual names. It kind of defeats the purpose. So I'm going to stick with nail for now. Toll Brothers. Okay, well on its way. Toll Brothers. DR Horton. DR Horton. A lot of conversation about DR Horton yesterday. That looks good. DR Horton. Beazer Homes. They do a lot of cookie cutter, big developments. They'll clear 200 acres. They did that recently, several places here in Myrtle Beach. They clear a bunch of pine forest, 200 acres. They put about 500 homes on them. No trees. It looks ugly as hell, but that's what they do. You know, they clear, they build, they plant, you know, a 6-month-old sapling in, in everybody's front yard. They get away with it down here in New Jersey, New York. You couldn't get away with that. You couldn't be cutting down so much. Anyway, so Beazer does the southeast. I think they do a little bit in the northeast too, but the southeast predominantly, I believe. So this looks pretty good. You can see a 5-point move in that one. Let's look at the daily. Daily, yeah, it's above the 200-day. Trying to get and stay above the 200-day. You got Hovnavian also in the northeast. Hovnavian. They used to be a penny stock, $2 or $3, $4. They had a reverse split. They're doing a lot better. Management, I think the management changed quite a bit. You got Lennar, LGIH, another home builder. All of these home builders look very similar, TPH. So maybe put a little bit in there, 2 or 3% of your portfolio. Maybe buy some builders or do what I'm doing, which is to buy nail. So you have coverage on all of them. And you don't have to worry about earnings. And I'll just sit in there. I'll just let this go. I'll hold on to this. Donut pulling back. Krispy Kreme's dropped off. Krispy Kreme's dropping off. Okay, Constellation Energy. A lot of talk about energy stocks lately, especially utilities. Okay, Constellation finally breaking out.
Japanese 40-year weakest demand on that JGB since 2011.
For Dr. Frank.
We got the 20-year of our bone today, and mortgage apps were basically flat with the 30-year fixed at a 4-week high. Stay with us.
Okay, so Dr. Frank got me interested in Constellation again. We've traded this one before. I know, Frano, you traded Constellation back last year when it made that big move, right? Over here. Okay, so here's the deal. Okay, so this should get you excited if you're a swing trader, especially. Okay, so a couple of things here. All right, when I look at a chart, first thing I see is a cup. Okay, I see some sort of base. And then the thing that jumps out at me most is the trend. Trend, consolidate. What's it doing right now? Bollinger Bands are opening up after a 8-week base. Now it's starting to trend again. This is exciting. You don't want to buy the high of the day, but Constellation Energy, I would definitely stick with this one. I have January, I believe, no, June. I have June calls. Constellation. I believe this is going to be a nice trend over the next few months. So I'll probably add to these. Probably add June 2026 call vertical. Likely roll. All right. Let's see. Got quiet in here, huh? It is almost 10 o'clock, 9:51. All right. So look for the trend. The trend is starting again. Okay. So buying inside the base, it's okay as long as you have enough patience not to sell it when it pulls back a little bit on you. But now it's breaking out. We're looking for a volume. Volume should pick up. Volume should pick up. Okay, Apple and Microsoft are acting like rotation out of tech. Apple, Microsoft.
Yeah, what's really interesting, Nicole, is, we're going to get some earnings reports here, later next week from Amazon with AWS, Microsoft with Azure, and IBM is a company that has something called the hybrid cloud. So they have tools and software that allow you to have on-premise, so to speak, private cloud, and then also you can use IBM Cloud, which is their public cloud product, which is equivalent to Azure, AWS, GCP. So they have a little bit of a different caveat, a little bit different approach to the cloud.
All right, Netflix starting to catch a bid. Looked like somebody took some profits on Netflix. I do have a put credit spread on this one. Okay, it's below the 50-day. Probability of touch is about 75% right now. So I have 1160 put credits. I have 1160, 1150. So this is getting close. I'll have to do something if it gets much closer. But Netflix starting to turn up right now. Buyers stepping up. So maybe I see, let's see over here. I did see an area of liquidity. Okay, an area of liquidity on the daily chart. Look at the daily. Okay, there's that 1160. Okay, you see this area of liquidity right here? Okay, so these are people here looking to buy on any dips. So looking for this to bounce at this area, could drop through it, take out some stops and push back up. Need this to get back above the 50-day. That's the only thing I really have to manage of the premium credit spreads that I have. That's the only one I have to manage at the moment. Okay, we got Tesla turning up. That's looking good. Tesla with earnings tonight. All right, so I did take my Tesla position off yesterday into strength. We had a nice rally. You can see over here, nice rally into the close. Okay, Tesla, nice rally into the close. I took some options off, 235s, 335s that I had. Okay, so we'll look for Tesla to do something today. We're above the 50-day, the blue line on the right. The red line is the 200-day. Supply is overhead. I plan on selling some premium for Tesla earnings today. Let's see what Tesla has in store for earnings. They beat on revenue, but the stock still falls because. Hold on one second. The stock's up nearly 30% so far this year. Aftermarket pricing in about a plus or minus 6% move, just over $17 either way. So I looked at a strategy that takes advantage of that higher implied volatility while still giving myself a pretty good probability of success. So going out to the July 25th weekly cycle, so just a couple days to expiration, really short-term positioning. If you think this stock's going to consolidate or fall or even go higher, but just remain below a specific level. Selling the 295 strike call, and then against it to make a risk to buy the 305 strike call. So a short $10 wide call vertical, you're going to collect roughly about a 250 credit on it. It takes your break even up to 297.50 over the next 2 days. That's about 4.5–5% above the current share price in IBM. So that all-time high, this would still be above it. Even if the stock goes higher, I still have that. All right, so Tesla only has 6% implied move. I'll probably sell some call credits. NVIDIA, very quick move to the downside. All right, so they pumped this up. Sold into strength, it looks like. Most of the New York FANGs are starting to look a little ugly. So I'd be cautious, Rob Broadcom, it does look good, but the New York Fangs are mostly getting sold. It looks like rotation out of the leaders, the tech leaders, specifically the New York Fangs.
Yeah, the stock's just below those all-time highs. Nearly $250.
Okay, we're almost at 10 o'clock, so we're looking for dealer hedge flows to turn. Nothing yet on the S&P. Nothing yet. Let's take a look here. Looking for hedging flows to turn up so we can take a long. We could get down here to 6,300. We want to stay bullish above 6,300, bearish below. If we drop below 6,300, feels like it's just rotation though. So yesterday we had what looked like a doji early. S&P 500. Okay, S&P 500. We had a doji to end the day as well. We had a gravestone doji on Monday. We're still following the trend. We're not selling off. We have, for the bears, the problem with the bears have, even though we are at highs and could pull back, the problem the bears have is what happened this morning with Japan, a deal, tariff deal with Japan. Yesterday it was Indonesia and Philippines. So all the president needs is to put together some more deals that get signed. So that's a headline news risk. I don't want to be short right now. I'm looking for an opportunity to buy the dip. Being patient. Apple and Microsoft, Nvidia look like a little selling. We could be seeing some rotation, folks, from the tech leaders. Google's been on the move. It has earnings tonight, right? Google. Okay, Google. Okay, so we'll see if they show up again. Tesla's starting to turn up. Tesla with earnings tonight. Tesla with earnings. Okay, can we stretch this and get the Bollinger Bands to open up? I'll probably sell something like the 350s.
Even if the stock goes up, I can still profit on this trade, but you're still profitable anything below that 522 break even level.
Thank you. Tom White, a good look there. Microsoft for us, and prior to that, Canada. Thank you for those example trades, Tom. Appreciate it. Morning trade, so we'll preview. To the close. Down to 168.
Trading at Schwab is now powered by Ameritrade.
Let's see.
Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for
Okay, so still seeing weakness in Apple, Microsoft, Nvidia, Netflix, Google, a little bit of strength in Tesla. Okay, Krispy Kreme, D-Nut Donut. That one's catching a bid right now. A little profit taking at the open. Okay, Tesla, watching Tesla. Coming up to an area of supply that we ran into yesterday. JP Morgan, a little profit taking at the high. Okay, Tesla still pushing.
Good Wednesday morning to you, and welcome back to Morning Trade Live. I'm Nicole Ladies. We've had some pop outs here this morning, and that's the trade deal with Japan from some optimism. We wait for
Nice Paticus on GE Vernova.
keeping our eye on any possible records. While we have not yet seen a record today, we have seen some just recently with the S&P and the Nasdaq.
Okay, Reddit. Looking for some. Okay, Reddit looking good. Okay, it's a little after 10 o'clock on the East Coast. It is Wednesday the 23rd. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Just watching the markets right now. Looking for a opportunity to buy, to get long on the S&P. S&P cash. Okay, we're still seeing hedging flows. That purple line is still pointing lower. Okay, we want to see that turn up. We have some support levels coming into view, 6,300. We want to stay above. Let's see where the 0-day options are trading. 0-day. Okay, so 0-day, we got positive dealer gamma right here at 63.10. Got negative dealer gamma just overhead. So we got some sellers here. Okay, it looks like profit taking. You see that drop from 13.6 million to minus 480,000. Looks like some selling there, some profit taking. So we'll look for that to bounce. Looking for the market to bounce.
What's going on with June existing home sales? Doesn't look that good. Is that
Not the number that we were hoping for, certainly. Existing home sales decreased by about 2.7% in June. Month-over-month sales declined in the Northeast.
IOVA.
Honestly, in the West. Looks like European
Nice.
sales,
Wow.
in the Northeast and West.
Iovance, Biotherapeutics. You guys have traded this one before, I believe. Okay, watch the S&P trying to turn. Okay, we're right at an area where we could see some support in this general zone. Okay, let's see. Let's go to the S&P. Okay, dealer hedge flow from this morning. Okay.
Demand is still relatively strong in past reports. The supply has been on the lighter side, but homes have kind of been staying on the market for a little bit longer. So we're seeing contracts, likely there's some expectation that we'll see contracts start to pick up as the year goes on. And don't forget, we have later this week, we have new home sales as well, which is expected.
Okay, watching for the, you can see there's lower highs, lower lows on the dealer hedge flows. We'll look for this to turn up.
the median price is right around. It's not like you got the demand is there. And granted, some of the houses are on for longer, but it's not like you're getting some bargain. In the meantime, some of these home builders.
Netflix heading a bit lower again.
Yeah, we are continuing to see the home builders do pretty well. I mean, there
Tesla.
concerns if we look at the new home
Tesla heading back up.
report, the drop we saw canceled.
Okay, watch the S&P here. We might get a nice little entry on S&P. Okay. S&P. Hedging flow starting to turn up. Feels a little early, but we might get something going. Yesterday, if you bought around 10 o'clock, 10:30, when we first saw the flows changing direction, it didn't really get going until later in the evening. So you had to be patient throughout the day and not sell. Okay, let's see if the S&P can turn up here. Watching the S&P.
Still using all cash. That's around 29%. First-time buyers have dipped a bit, but still about 30%. How about what watching?
I'm certainly going to be focused on durable goods on Friday. I think that report is something that investors are going to want to pay close attention to. If we look at the last report in May, we saw items like airplanes, appliances, computers. They were
starting to turn a little bit. Could be a bear flag, so don't fall into the trap yet.
Falling about 6.6% in April. That's the strongest increase we've seen since July of 2014 and well above expectations. Transportation really led that increase. That was up over 48%, primarily on the non-defense aircrafts and parts. If we exclude transportation, we still saw orders up about 0.5%. So I think those
Tesla still hanging tough here.
We're going to continue to focus, of course, on
New York FANGs are all weak.
Which are going to be coming out as well on Thursday. Obviously after that surprise report last time, I think investors are keen to look at
Apple looking for the turn. Apple.
Right, Jeff Pierce, it's great to see
All right,
you. And
Apple
Colin,
looking for the
news
turn here.
what's going on here in this market. Appreciate it. Now,
Okay.
time for the morning trade. Tesla. So it's reporting its numbers after the close. Of course, if we get so many headlines, there's a lot of noise. And then
Okay, dealer hedging flows, watching for turn up. Nothing yet.
Good morning. Good morning, Nicole. Yeah, so what the street's looking for is EPS of 39 cents. That would be down from 52 cents a year ago, so roughly 25% decline if it comes in line with expectations.
63.15.
$2.53 billion.
63.15.
$25 billion a year ago, so a drop of about 11%. It's also worth noting that in the past 3 quarters, Tesla's revenue did come in under expectations, so that may be anticipated here. Tesla stock has been moving up though in recent days. We're in the green today, about 0.3% right now. And it has returned the company to a market cap above $1 trillion ahead of their earnings call later. But they're down 18% year to date. So it does make it the weakest performer in the Mag 7. And it marks a shocking shift. Their sales plunge in the last 18 months has been such a surprise for a company that before 2024 had only recorded one quarterly year-over-year sales drop. So a really new time for Tesla to be on the decline. Investors will really be focused on gross margins today, though, Nicole. That will really
Okay, we're starting to turn. Watch the hedging flows.
Insight into the profitability of Tesla's operations. We already know vehicle deliveries were down 13.5% for the quarter. That's the second straight quarter that sales were off more than 13%. But they will be watching to see whether gross margins have improved and how the company is guiding deliveries for the coming quarter. There is also some risk of Tesla losing its title as the world's biggest EV maker to China's BYD. So definitely we'll be listening for any indications of that as well. Likely also coming up, another major headwind is this expiration of the EV tax credits. With the passing of the One Big Beautiful Bill Act, they will end those 17.
You just see this hedging flow turn up.
Programs at the end of September.
That purple line needs to turn up.
Effectively a 100% margin income stream that will disappear. So a lot of potential for that to be in focus. Also tariffs being a potential issue here. Tesla, unlike other automakers here, does make all of its cars in the U.S., but it does import parts that are very important and raw materials, which will be tariffed, including last week Chinese graphite that's used in its batteries. That became subject to another tariff that raised the cost 160% for last year. So a lot of major things in focus as far as headwinds are concerned. There are some major growth engines as well. The robo-taxi, of course, we've been talking about, that will be a major focus. And this Optimus Robotics, and what the future looks like for robo-taxi and robotics. Those are two big potential drivers for Tesla here, Nicole.
We talk about, you mentioned the robo-taxi. Robotics is, we don't think of Tesla as just a car company. There's so much more to this. Every time I ask the guests and say, should we rate it like a car company? They say no. They look at the energy.
Okay, dealer hedge flows, watching these to turn.
All these different facets, right?
Absolutely. And I think that is a primary focus, and I imagine will likely be a major driver on the call today. Those are their two biggest growth areas. They both highlight progress. We got the robo-taxi launch in Austin in June, so there will likely be questions about when full self-driving.
Okay, Tesla on the move. Tesla going.
Unsupervised use, because right now they have a safety driver in the robo-taxi, but also in their commercial vehicles as well. And they did have a big week.
first restaurant in Los Angeles on Monday.
Okay, what's going on here? Do I have to reboot?
So it did effectively demonstrate that it is capable of doing tasks, but there is still some disagreement about when
The S&P still looks like a bear flag.
they would be on the floors, thousands
Tesla.
of them, he said by the end of 2025. But Chris Walke, who was their former robotics lead, has said that humanoid robots like Optimus are not suitable for factory environments.
Okay, Target had a nice little move there. What do I have here? Target.
If at all, we will see the Optimus robot in factories, when it will be scalable for factories and commercial use. And you also mentioned energy storage. That has been Tesla's fastest growing segment, but megapack battery deployments have declined for the last 2 quarters. So likely lots of
Target.
questions there. With the passage of the One Big Beautiful Bill Act, it does look like it might be hard for them
Okay,
to
Target
reverse
looking
that
good.
growth
No
trajectory
follow
that
through
they
in S&P
previously
yet.
had, but likely questions there as well.
Target.
As well as this budget model
Oops.
that everyone keeps waiting for. For years, Tesla's been talking about this
Target.
$30,000 budget vehicle.
A little bit off the high, but turning the corner. Target.
If they're able to release anything, even a rendering or a potential timeline for that, that could be a potential growth driver for them as well, Nicole. Yeah. And look, she'll say if BYD is doing so great and, beating them, I'm not sure how much he'll share on that. But I am interested to hear where he's sleeping. Is he sleeping in the factory? Is he going back to politics? Anything just to get into the mind.
Of course, there's valuation risk at 23.
Okay, watching the dealer hedge flows.
With growth outperforming values for demonstrably over the last decade. That might make me sound bearish, but we're really not. We still think the valuation dispersion beneath the surface remains unusually wide, which is an attractive environment for value investors like us. And we think we put together a really attractive portfolio at a fraction of a market multiple and with less risk than what's lurking in these indices from a concentration perspective. So still finding new ideas.
All right, we'll leave it there for today, Michael. Thank you.
Here's our roadmap for you for the rest of the hour. Nuclear energy teams up with fossil fuels. We'll talk to the CEOs of Oklo and Liberty Energy about their new partnership to power data centers.
Plus, the CEO of KeyCorp, just out with earnings, is that bank. We're going to get his read on the consumer, bank regulation, a lot more.
And getting constructive on home builders, we'll talk about the surprise strength on names like Horton and Pulte this week as we just got that existing home print. Pulte coming the sector, actually coming off the best day since 22. Big show still ahead as Walk of the Street continues.
Okay, so no change in dealer hedge flows yet. Target looking good. Oklo on the move. All right, so SMR, are those changing direction? Okay, so those pulled back recently. Okay, nice little gap up. Okay, nice gap up on SMR. Could get something going here. SMR. Okay, watching SMR. The nukes, watching those. Thank you for the update, Rob. Okay, Oklo. Oklo looking good. Daily. Daily, nice bounce at the 21 day. Exactly what we want to see. RSI turning up. MACD. Bulls are in control. Volume looks pretty good. It could be better, but it looks good. We know that the news is supportive. Nanonuclear and Lightbridge, the CEO of Lightbridge has been on the financial news networks lately. BR Lightbridge Technologies. All right, that's bouncing as well. $12. Doesn't move as much. Okay, so if you like movement, it only moves about $1 a day. So if you bought it right here, you'd probably be disappointed because it's most likely not going to move much more today. If it does, that'd be good. It does have a nice pattern on the 5-minute. Lightbridge. We got SMR, New Scale Power. That looks good. I don't know. I'm going to pass on those for now. I'll get back into SMR at some point. Okay, what's JP Morgan pulling back a little bit? Tesla still pushing.
Happy with it.
Despite a regional bank ETF trying for its fifth positive week in six, boosted by a slew of regionals reporting results this week, including KeyCorp reporting a clean quarter, raising its net interest income growth outlook.
Meta looks like it might do something. Meta.
Joining us now is KeyCorp CEO Chris Gorman.
Meta
Chris, it's good to have you. Welcome back.
had a nice little run up towards the close yesterday and then faded, but it was a nice trend. Could see Meta follow through. Inside day for now.
What are you seeing in terms of client activity?
Meta, if you like, NVIDIA, if you like NVIDIA, had a nice little dip. Looks like some distribution up here, but we're starting to bounce. Looking for a buy order block. Looking for buy order blocks.
Is the wealth effect in the United States. You know, in the last 15 years, there's been about $100 trillion of wealth created. And so
Buy order block right there at the open, you can see. Actually, that was yesterday at the close, right? Right at the close. So shorts covering.
I think it misses this wealth effect, which obviously is a significant amount.
Okay, so if we look at the NASDAQ 100, we can see energy stocks are leading today. Energy.
On the commercial side, it's interesting as you talk to all of our customers.
Energy and electrical utilities
They'll always tell you about
like Constellation Energy, Baker Hughes, BKR, big gap up.
And so I find a little bit of a,
Pinduoduo, Chinese stocks, Pinduoduo. Okay, that's been on a move for the last week. Pinduoduo.
50% of them.
ANSYS, that's been on the most actives. ANSYS, that gap down
I think we're on a pretty good path. You know, it talks about tariffs.
recently, right?
Obviously significant. You know, 30% of our customers.
Why does this not look right? ANSS.
Impacted in a significant way. I think there's pretty good momentum actually in the economy, and this bonus depreciation for closely held businesses, for private businesses, I think is going to be a big boost to CapEx in the back half of the year.
Well, that's a very positive, optimistic outlook. What do you think happens to rates? I know you raised net interest income guidance. Given that,
ANSYS.
where do you think rates go?
Something doesn't look right. This was
For
yesterday's price action. Yeah, this isn't updated. This is not right. Okay, I can see right here the date is 17 July. That's weird. That's weird. What's going on with stock charts?
So that
S&P. Correct date on S&P.
interesting. You also had the fee growth was good. from
Okay,
investment
let's see.
banking.
Netflix below the 50-day. Netflix looks like it's going to start consolidating, or rather create a base down here somewhere.
This is about 10% of our revenue. So for a bank, a regional bank, it's a very significant piece. The last quarter was interesting because we had our second best second quarter that we've ever had, and that was in spite of kind of a 3-week hiatus, obviously in the last 3 weeks of April. So we feel pretty good. The backlogs are about where they were coming into the quarter. But one thing that we haven't yet seen the pickup in is a lot of M&A activity, which for us is really important. And I think you'll see a bit of that in the back half of the year. The other thing that's happening out there in the marketplace, we have a very good real estate platform, and I think kind of the bid ask is starting.
Okay, Microsoft's starting to bounce. Microsoft has been in a trend. Okay, this is the first time it's tested the 21-day and 13 weeks.
Look at a 5-year chart of your stock. Obviously, you're well off those lows we saw in 23 as there was a lot of concern around commercial real estate, but you're still not near the highs the stock saw, at least back in early 22. Do you see yourself participating at all if there was a wave of bank consolidation, either as a buyer or seller?
We're not really focused on depositories at this point, David. We've got a great opportunity for organic growth. We have a pretty good track record of actually going out and buying entrepreneurial
Bitcoin bouncing too. Bitcoin is bouncing too.
and successfully integrating those. We're investing.
Nvidia starting to bounce more. Okay, Nvidia looking better.
Front end of some consolidation
Nvidia looking better.
industry, but that's not a huge area of focus.
Okay, looking for a buy order block Nvidia. Let's go check out the hedging flows.
A lot of enthusiasm around this sort of deregulatory period on financials in general, but do you get the sense that the industry is going to feel free to step on the gas on fees when there's been some discussion in the sell side just about on where fee trajectories are right now?
Yeah, I actually think that I think it will continue to accelerate, and I do think the regulatory environment will be helpful, not necessarily just around banking, but just the opportunity around, I think.
Okay, hedging flows on Nvidia look fine.
Mergers, and merger approvals. I do think I think dereg is a big thing for the economy, and I also think obviously it's a big thing for our industry. I think it'll be helpful.
All right, so where are you on crypto? Yesterday on the show, a partnership with Coinbase. Schwab was on the show talking about how they're going to launch a Coinbase competitor. Now that we have some regulation here around stablecoin and crypto, how are you feeling about getting in and
Tesla looks like it wants to push some more.
platform and option for your clients?
I mean, it's early, but I think it has a lot of promise, and particularly around stablecoin. And obviously, the Genius Act was just last week. But when you think about stablecoin, there's really a few things. There's the institutional piece, which will be the equivalent like prime brokerage. That will be dominated by a single handful of international banks. The huge volume, relatively narrow margins. That's not really an opportunity or a challenge for us. The next is as a store of value. And clearly, to the extent, Sarah, that our clients want it and they want to hold it in their wallets, we will accommodate that. And so we'll be sure to do that. Then there's the sort of discussion around, is it going to cannibalize deposits at banks? I actually think that's a fair, I think it's a threat, but I don't think it's an immediate threat. And I think the industry will respond. I mean, whether it's with tokenized deposits, which I think you'll see banks like Key do. You may well see.
All right, Nvidia just sitting here, S&P 500, looking for a bid.
As part of a consortium of banks that issues a coin. And then I think the two best applications are really international payments. Right now, international payments are sort of this Byzantine approach of all these correspondent banks. It takes a long
Meta,
time. There's a lot of friction.
Tesla hanging in there.
Stable coins could be a really good solution for our clients. It could be faster, cheaper, better. And then it's just programmable payments, which every bank needs to do, whether it's escrows or other programmable payments. So I'm actually, particularly on those last two applications, I'm pretty enthusiastic about it.
Yeah, it sounds like you're thinking a lot about it. What it looks like for the future of banking. Thank you, Chris. We appreciate it. It's really good to talk to you. Chris Gorman, CEO of KeyCorp.
Meantime, Texas Instruments on pace for the worst day in several years, sitting at the bottom of the S&P today. We'll talk about why after the break. Later on, the CEOs of Oklo and Liberty Energy fresh off this new partnership to help address the country's ballooning energy needs. When we come back.
All right, S&P starting to rally a bit.
Your time horizon, we may be looking at some much lower yield at that point. So I think longer term yields will have, they should come down thanks to innovation AI. It's just a matter of this for a large get right now, whether or not that's come all over the near term.
Yeah, final thought here as far as your big picture. Because we're waiting on the August 1st deadline for the EU. That may get pushed back. We heard Scott Bessent say that he's really looking for quality over timing. What are some of the big picture trends and thoughts that are on your mind right now here today?
Deals over the years, or yeah, I think monetary policy is one that I'm more questioning right now. There's some talk about putting in a shadow Fed chair and the challenges of Fed independence, and that really concerns me. However, I think it could work the opposite way and surprise a lot of people. Jay Powell's term as Fed chair ends next May. His term overall in the board of governors is
S&P trying to push a bit higher. S&P is trying to push up. Dealer hedge flows still not cooperating. Nvidia. Okay, hedge flows are starting to turn up now. Just as I said that. Hedging flows starting to turn up on the S&P. See if we can get more.
We'll look at the chart, the fundamentals, morning trade live. We will be right back.
New York fangs are still mixed. The Q's still 50-50. Let's look at up-down volume, up-down volume. Up-down volume is basically 1-to-1 for now. 1.5 up on the Qs, 1.6 up on the SPY, 2-to-1 up on the NASDAQ Composite, 2.7, nearly 3-to-1 up on the New York Stock Exchange. So if you're in doubt on what the indices might do today, let's look at the New York Stock Exchange. Check that out. New York Stock Exchange. Okay, this looks pretty good. Okay, looking at the 2,000 stocks on the New York Stock Exchange. Looks good.
Catch me on Fast Market. Weekdays at 2 on the Schwab Network.
You'll love Schwab. Take a left here, please. But there's Carl's way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do. Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you want to catch
Okay, S&P looking for a rally. S&P looking for a rally.
Live from the floor of the New York Stock Exchange, only on Schwab Network.
All right, I bought some 63.45s.
I have a question for you.
Bought some 63.45s. Looking for a retest of the highs. Lottos.
Really started with nothing. He worked hard, and after he passed away, the torch has been passed.
That's a 16 Delta.
My advisor Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Let's see how far we can get with this. Broadcom, no follow through. Okay, Nvidia coming up off the low. Nvidia looks like it could do something. Nvidia. Volume's not there yet. I'm looking for the volume. Volume's been tapering off on this move higher. The industrials, Joel?
It's time for the chart master. We're in the thick of earnings season. Today, the key names to watch. Jenny Horn will take us through the fundamentals on 3 names, and Rick Ducat will go through the technicals, looking at the charts. Now, these three stocks report the quarterly numbers, earnings, if it's positive, right after the closing bell. So we'll start with Alphabet, Jenny. Let's take a look at that. Yeah, the name to watch.
Oh, Dow Chemical. All right, Dow Chemical. Dow Chemical. Yeah, flat base.
Its various legal battles, which is again kind of an unprecedented time for Alphabet. So
Needs to break above 32.
$2.18. That would mark a nice growth from $1.89 a year ago. Sales are expected to rise about 11% to $94 billion. If Alphabet does hit those numbers, though, it's likely due to the performance of its cloud and AI-related demand. Cloud segment
RSI is rising. Yeah, Joel, it looks good. The volume is tapering off on the push higher, so needs to get through 3160. Above 32, this would be a break to the upside.
you need to see that cloud revenue growth accelerating, not only posting double-digit gains, which is very difficult to do when your force as large as Alphabet has become. This year, though, is a huge read-through of like the waning demand of all things AI. So the other part of the cloud is increasing its investments as it does make its move further into data centers. We've seen spend $53 billion last year in capex, up 63% from last year. It's now projecting roughly $75 billion in 2025, which does make it one of the largest companies as far as its capex presence. Meta is, I believe, around 65 million. Microsoft is somewhere also in that same ballpark. So those three are shelling out cash, and where we don't expect that to slow anytime soon. First quarter, we saw about $17 billion in capex. Analysts are expecting another $18 billion this quarter. Again, any slippage here will be marked because even if they put up big numbers, we have to see that accelerating capex. I think right now this leads the relatively far.
Tesla coming back down now.
76% of their 2024 revenues also expected to rise by 8%. And within that is Google Search Ads, which is still over half of their sales, expected to rise about 9%. So it's been a long time since we've seen Google's dominance in search be questioned, but that is happening right now. Huge reason right now that a lot of the focus has been on the acceleration of their growth. And we've seen the same.
Okay, we're not seeing any kind of follow through. We got a doji on Nvidia. S&P pulling back a bit. S&P pulling back in. Okay, it's a doji up here at the highs.
Google user can, and we're already seeing that again play out in real time. You can do it right now. So a lot of times we talk about like the future of AI and the ways companies are building out, which they're definitely still doing. But the fact that you can already use some of their AI applications again for free of charge, I think is huge. Look, a lot of people, as you're talking about the PE ratios and the value of this name versus the other Mag 7, they think this one is the cheaper one, the one to buy, because it hasn't run to the top in the same way. I mean, we did have Guggenheim adjust the price to $210. They did that this morning from 190 with the buy rating, so still some optimism here.
Okay, chop. A lot of chop.
Yeah, so a chart that kind of exemplifies the overall.
Okay, a lot of chop for now. S&P. Can we get something going?
207.05 in this case, a steady downward decline into the April lows when we had our tariff news announcement that so shook markets here. But many tech stocks, Google being one of them, have recovered very significantly here. Google has broken out of this area of more range-bound trading here. 165 to 181 was the rough boundaries of that point here. But
The industry, these kind of partnerships.
I certainly think it is. I think there's a real benefit to having baseload.
Supermicro. What's going on with Supermicro? I pulled back the last few days. Supermicro. Gonna get something going on Supermicro. Nice bounce. The nukes, SMR, nanonuclear, Oklo. Looks like profit taking. Oklo's okay. Okay. The builders, XHB, and Nail. Okay, buyers at the low of the day. These are probably going to continue to trend over the next several months. Soundhound, what's that doing? Soundhound. Okay, bouncing, Soundhound.
Yeah, I mean, this is one of the cool things, right? We first got to know Liberty actually, through former CEO Chris Wright back in early 2023, and then spent a lot of time with them. They got pretty excited about what we were doing and made a strategic investment in us at the time. Seeing that ultimately for opportunities like this, where they can bring the things they can bring to bear with respect to their piece, experience on certain field operation services, coupled in with this kind of longer term power play. And I think what their experience said is bringing power to sort of the oil and gas field operations really matches well with being able to be a pretty turnkey provider that integrates well with what we're doing.
Tesla pulling back. Nvidia pulling back. Broadcom pulling back. All these New York FANGs are pulling back at the moment. Okay, let's look at junk bonds. Junk. Just a pause. That's all it looks like right now. It's bullish to neutral right now. Junk bonds. High yield corporate. Let's go take a look at breath. Breath. Starting off the day. Okay, these look okay. NASDAQ a little flat as you would expect. Small caps moving higher, mid caps, S&P 500, 500 stocks. Okay, last time I checked, we had about 317 now. 317 stocks advancing on the S&P 500. Still 50-50 on the Qs. 50 advancing, 50 declining, or unchanged. Okay, Doji feels like a Doji day. 1-to-1 up down volume. 1-to-1 up down volume on the Qs. 1.6, a slight edge on the Qs on the S&P 500 spiders. New York Stock Exchange 3.5-to-1. 3. Wait.
Minerals, mining, things like that are relatively energy intensive here in the United States. And I think we're seeing now a recognition amongst policymakers, the regulators, that we have to find a path to enabling the supply of energy that's so important to enabling these industries. So I think we're starting to see a lot of support in that regard.
You got 3.5-to-1 up volume on the New York Stock Exchange. All right, so the overall market, while we're seeing some rotation, looks like rotation.
Support, a lot of tailwind behind us to start to build the energy infrastructure necessary.
Well, I'm curious. I mean, Jake said, of course, it's needed now. What are you seeing on the ground right now, Ron, in terms of needs for data centers, for example? As we watch, Abilene and Louisiana.
Yeah, it looks like rotation. Not to get too concerned. All right, let's say you're an investor, right? And you just tuned in to the show, the podcast, and you're wondering what the market's going to do. You hear everything that the media is talking about, and then you look at the New York Stock Exchange and you go, well, that's interesting. New York Stock Exchange is trading 3.5-to-1 up volume, and it's moving away from its bullish 9, 21, and 50-day. RSI is rising. Stochastics MACD turning up, volume looking good. So what's the deal here? Well, I don't know what the market pundits are looking at, but when you look at the New York Stock Exchange, most of the time it's going to tell you what's going on. This is trending. You got junk bonds, high yield corporate higher. You got breadth improving. Let's take a look at a few more things here. We want to see this indicator turn up. Okay, so this is in the neutral zone, but it's turning up. So this is the McClellan volume oscillator. So the red and the green are extremes, overbought, oversold. So right in the middle, there's no signal here, but the New York Stock Exchange is making new highs. Let's take a look at new highs, new lows. I'd expect to see this higher today. It is. Okay, we got advanced decline, NYAD.
It's evolving still in an exciting way, but I think one of the things we see is obviously the executive orders help support sort of solving the two biggest timeline drivers for us, right? One is the regulatory piece, the permitting timelines, and then the other is fuel availability. And so we're taking sort of advantage of what this opportunity looks like to see how much we can actually push things to the left, right, not to the right. Right now, the NRC, the Nuclear Regulatory Commission, has made it clear they expect reviews to be in 18 months.
Okay, so that looks good. Let's look at the S&P Equal Weight Index. S&P equal weight index, removing the weight of the stocks that are rotating out of favor right now. New York Stock Exchange, S&P 500 equal weight, not bearish.
Including some of this excess plutonium that could be a really useful fuel in reactors like ours that was just going to be thrown away, but could be worth 3 to 4 gigawatts of power capacity going online. So that opens the door to go sooner, faster in terms of scale. So we do expect there to be significant benefits on building more plants sooner. That first plant, it's still kind of got some constraints on how fast it can get out, which we expect 27. But what I think is really exciting is this puts us in a position to build more follow-on plants more quickly. And that's what really matters. Obviously, getting that first plant built is important, but scaling and ramping beyond that is what's really critical. And so we feel pretty excited about that. But look, it's still evolving, and we still see some benefits and some tailwinds to move this to be faster.
Well, Wall Street's excited about it. Today, especially, we're up 10% on almost 20% on Liberty. Guys, thank you so much for joining us to discuss the news of the day.
Okay, this is looking like rotation to me. That's all it looks like.
All of this, the White House is releasing today its AI action plan.
Okay. We're seeing some rotation out of the big cap tech names, but everything else looks pretty good.
Just posted it on their website, and officials briefed reporters just over the past half hour on it. Take a look at a couple of the highlights here of what the goals are for the administration in terms of AI. They're talking about partnering with industry to deliver AI export packages. That is, they want American AI to be the default AI system around the world, countering China. So the idea here is to export entire packages of AI so that American AI can set the standard globally. They want to expedite and modernize data center permits, really focused here on environmental regulations that they feel are in the way of creating those data centers, removing federal regulations, hindering AI development. Again, that's largely about these environmental restrictions that are slowing growth of the industry, they say, and then also upholding free speech in the new models. And this one is largely around DEI. Officials briefing reporters just now from the Trump administration saying they don't want DEI built in to AI models. They say they want accuracy, fairness, and truth in AI, and they don't want any ideological agendas built in. I asked officials on a call just now, who is it who's going to decide what's an ideological agenda and what's not? That can be a tricky thing to do. And they said largely what we're focused on here is DEI and making sure that that's not built into these models.
Dow Industrials. Okay.
Details released on the website, and also we're expecting some executive orders from the president later this afternoon. And
Dow Industrials. We'll look at those for you. Okay, let's just go here.
These are reversals from the Biden AI EO. Is there any let up?
Dow Industrials, Farmer Jim. Okay, here's the Dow Industrials. Nike, Merck. Okay, these are leading right now.
Yeah, I haven't seen that yet. I mean, they just released this 28.
Nike, we mentioned Nike.
Going through that now, but it seems, Carl, broadly here that the discussion around AI has sort of left that safety issue in the dust, and it's full throttle ahead in terms of AI development.
Some pats on the back for open source. We'll get a lot more detail, as you said, Eamon, as we work our way through that document, and we'll hear from the president later on today. Next hour, we'll talk more about the White House's AI plans with the administration's federal chief AI officer. And then after the break, home builder stocks coming off their best day since 22. Some downbeat signals crossing on the housing market today as we got existing homes. We'll talk about that when Squawk on the Street continues.
Okay, Nike looking good. Nike. Nike looking good. All right, here's the Dow Industrials for you, Farmer Jim. Nike looking really good. Did they ever sign? What's her name from the WNBA? Caitlin Clark, or is she signed with somebody else? I read somewhere that the average WNBA player makes $80,000 a year. That's crazy. Manager at Target probably makes more than $80,000 a year. But you got to sell tickets. You got to sell tickets if you want money. It's subsidized, the league, from what I understand. Okay, just watching the markets. New York Fang, it just looks like rotation, folks. If you get too focused on the New York Fangs and you don't look at the bigger picture looks pretty good. All right, looks good. Oh boy. Mm-hmm. All right, looking good. Dow Components, Nike. Merck finally bouncing. Merck had pulled back recently, so that's a nice little bounce. Merck, Farmer Jim. If this does get above, to confirm, if it gets above 85, it'll confirm that this trend is likely to head higher, stay bullish. 921 is above the 50-day, so this is only developed over the last 6 weeks or so. I'd like to see Merck do a little bit more. I do like the company. I like the stock. Caterpillar finally breaking out. Caterpillar. Nice move on Caterpillar. Okay, so it took a breather on Friday into Monday. Yesterday, got some buyers to step up. Most likely, these companies are going to continue to perform. Earnings are going to continue to beat. And as these tariffs move to the wayside, and we get countries like Japan, they're heavy into agriculture. I'm sure they have, was it Kabuto, or whatever their equivalent is, made in Japan. There's going to be a lot of secondary markets that will probably buy Caterpillar and John Deere products. I don't know what the specifics are with Japan, but I heard that there's a deal now with Japan, Indonesia, the Philippines. Now we just need Europe. We need Germany, UK to sign some deals. Okay. So Caterpillar looking good. We got IBM finally turning. IBM spacing right above the 50-day. IBM. CRM, nice trend on CRM coming back up to the 21-day. It's a flat base, so I'd be looking for a breakout. It needs to break out of the flat base. Look at this flat base on Constellation Energy, which will be providing a lot of electrical power for some of these big installations. I don't know if they're doing the Microsoft or the Meta deal. I think they're doing Microsoft, right? Where is Meta building their supercluster Prometheus? Oh, check. Let's check.
Back of what we've seen from the likes of Texas Instruments, for instance, Pfizer as well. We'll dig into that in a minute. But obviously, we've been tracking the meme stock comeback as well. So we've seen, obviously, a lot of attention on coals. Now it looks like this morning, Nicole, it's all about GoPros and donuts. Krispy Kreme.
Yeah, meme stocks, right? We had GoPro, Donut, Open, and Pulse. And let's talk about what you're on your mind, George. What are you watching?
Well, we talked about this earlier, Nicole. There's a continuation occurring in the
Okay, so that's okay. So they're doing Microsoft and Meta. Okay.
Still some softness in the Nasdaq. I think there's some underlying rotation occurring. I think the Japan trade deal is a big deal, and it also is emphasizing or influencing international trade positively.
Constellation Energy. It did fade from the high, but it's going to break out.
China also trading very well. The dollar is firming just slightly today, but it's been down, and I think that's suggestive of the fact that maybe, of course, tariffs initially that were expected going back to February, March of this year weren't going to manifest into anything much. In other words, these negotiations are going to be really benefiting the United States, either from a lower inflationary environment, but at the same time, export-led growth from the emerging markets. If you look at the EM, it's trading to new highs, at least for the year, decent 2-week highs. China's stocks also performing quite well. Japan stocks like Toyota, Honda Motor Corp, those are two major exporters of Japan, both in the double-digit moves to the upside. So I think the move may be based on softness in tariffs. Trade deals are going to benefit import-sensitive companies.
Yeah, we've got SMR. These are following through today. Okay, looking good. SMR. Okay, SMR. I'm gonna buy some more SMR. Looks like it wants to go some SMR.
In those areas, but I think for potentially the market to continue higher, we have to
SMR, nanonuclear, Oklo. I believe Oklo has that deal with the Department of Defense in Alaska, right? That's one of the first deals they're doing. So this looks like a breakout, double top breakout. Oklo.
Here, what else is jumping out at you?
Yeah, I mean, just to follow up with what George was saying, obviously with the trade deals, it's really important
Potential for a double top breakout in Oklo.
just in the last couple of hours or so. What he was basically saying was that will only lower tariffs if a country agrees to open its market. If not, much higher tariffs will be there. Now, obviously, we did see
S&P. All right, looking for that to follow through.
$550 billion worth of investments there. And that really is what Trump has been wanting to get out of this, is that commitment to the FDI. So, a lot of what the market is now wanting to see is whether this is going to be a template or sets the tone for more deals to come from that, particularly all eyes now on the EU. Obviously, China has been given a little bit of that extension, but I think, that obviously is
Up, down volume. 3-1 on the New York Stock Exchange. So the buying is starting to subside a little bit. New York Stock Exchange.
Just month to date, so keep an eye on those. George Dilla, Sam Bonas, thank you both so much. Great to see you. I'm Nicole Petalides. Thanks for being with me every day here on Schwab Network. This is Morning Trade Live. I see you at 9 o'clock, and I'll see you at 2 p.m. Eastern Time. Trading 360 with Diane King Hall.
All right, so maybe we catch a bid in the markets. Palantir, okay. Palantir, maybe a day trade on Palantir. A little slow going this morning. S&P trying to push a bit higher. If it gets above this pivot, should go. Maybe try some lottos. Okay, we got buy order blocks here. Buy order blocks, S&P.
Plus cash management solutions, all designed for
S&P buy order blocks. We need to get through this pivot.
for cash withdrawals worldwide. No overdraft fees and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
All right, S&P is on the move. Meta's on the move. Okay, Meta pushing. Meta. Did I ever buy any Meta on the dip? I did buy Meta on the dip. Okay, so I have Friday calls. All right, so this needs to get a move on. We need to see at least 710 on Meta. Meta, I got 710s on Meta. Fingers crossed for Meta to get to 710. Maybe today. Nice move. NVIDIA turned back up. All right, so NVIDIA is starting to catch a bid. Inside day. Okay, so the rule here is, and if today we close on a doji inside day, the rule is what direction does it take tomorrow? Okay, does it move higher? That's the direction you want to trade. Does it move lower? Then that will be the direction we'll want to trade in the short term. But we got a doji for now. This could change by the end of the day if this starts to break above the supply at 189.50, 189.60. If it gets through this area, we got buy order blocks stacking up. You can see the stepping. You can see the stepping up of the buy order blocks over here. Okay. All right, so this stepping, we got these buy order blocks here stepping higher. Okay. So we got buy order blocks stepping higher. Now we have supply that we need to deal with right here. So if we get through the supply, this should go. NVIDIA. Okay. NVIDIA looking like it's going to run. Maybe I'll take a trade on NVIDIA if I don't already have something. I think I have NVIDIA. Yes, I have some NVIDIA. Is that for Friday? No, it's for August. All right, so I already have August 175 calls for NVIDIA. A little bit out of the money right now. They're underwater, but they should quickly move back to break even. There goes Broadcom. There's Broadcom moving there. Rob.
Good morning, everyone. We are about 90 minutes into the trading day on Wall Street. Welcome to Trading 360. I'm Diane King Hall, live from the floor of the New York Stock Exchange. We've got green on the board. Let's start out with our roadmap. Coming up on today's show, in our 360 Spotlight, we'll preview Alphabet, the parent company of Google's earnings after the bell. It comes after the close. Where does it rank in the AI race? Today, its disruptor is Alibaba. The stock is moving higher after releasing its latest AI offering.
Okay, there goes NVIDIA. NVIDIA on the move. NVIDIA's cranking.
Political actions on the bottom line. All right, let's wind down, take a quick check on where markets are.
NVIDIA's cranking here. Watch it, NVIDIA. All right, so do I want to add some short term? I already have calls, NVIDIA. Those are August calls. Maybe I'll do some Friday calls real quick. NVIDIA. The 30 Delta is only $1. So I'm going to buy some of these 30 Deltas. Buy some 30 Deltas. If this gets going, should run. Okay, the 30 Delta is 172.50s.
Personnel's on Truth Social by President Trump yesterday evening. The Dow right now better by just shy of a 0.5%, rallying 196 points there.
172.50.
The star of the show, again, up more than 1% at the moment. Let's take a look at some of the price action and some of the other asset classes. We are going for that spotlight in just a moment. You'll see your treasury up 30 basis points right now.
Okay, NVIDIA.
Dollar a little change, really range around that
Decent
moment around
stop.
97 against the basket of currencies. Gold is a little bit lower amid seeing a little bit of risk on sentiment, especially when it comes to equities. Gold off by a little bit.
Tesla back up. S&P moving here, looking good. S&P moving a bit more.
Crude oil lower by more than 0.5%, just below $65 a barrel for West Texas Intermediate. Bitcoin off by 0.9%. So, but I mean, you know, you can't knock Bitcoin. It's been hanging in.
They just like ramble. They don't really give you much to go on. Ramble, ramble, ramble. All right. So we're just hitting the highs and getting rejected at the moment. Broadcom at highs. Okay, looking for the S&P and NVIDIA. Looking for these stocks to continue. And the indices. Okay, squeezing on NVIDIA, S&P. S&P has started moving sideways to slightly lower. Looking forward to get above those pivots. Okay, we're starting to build what could be a doji more. You got buy order blocks, you got sell order blocks overhead. We're starting to oscillate in this area.
Very close to arrive at sort of sorts, because that tends to indicate for us that, hey, I'm a little more hesitant to outlay a lot of money for whatever reason, inflation, uncertainty, whatever the case may be.
Okay, Tesla pulling back in now.
We're not seeing an increase in drive-to, which means
Apple squeezing at the low. Microsoft, still a little weak. Netflix weak. I'm going to go ahead and take these put credits off once we get a bounce. If it looks any worse by the end of the day. NVIDIA looking like it wants to go. NVIDIA looks like it wants to go. Watch NVIDIA here. Okay, let's see what.
Interesting. Mike, always great to get your perspective. Thank you. Let's continue this travel conversation because Hilton is posting higher profit and revenue in the second quarter. Also raised its earnings outlook for the year. Still, the hotel operator's revenue per available room fell 0.5% due to decline. Joining me now, Chad Bynum, reported group gaming, lodging, and theater analyst. It's good to see you. So, as we are looking at these numbers, it looks like the company did trim its net income forecast a little bit, although some of its metrics look good. What's your read on the quarter?
12 p.m.
Thanks for having me. Second quarter came in slightly better than expected. I think some of that was timing around termination fees and just kind of how the holidays impacted some leisure versus business travel. Their third quarter guidance came in a little below expectations and where consensus was. So positive on Q2, negative on Q3, and then for the year they kind of stood pat in terms of how they were thinking about the year. I would say the tone was slightly more positive, particularly calling for more of a business travel recovery in the back half of the year. And then as it relates to the leisure traveler, as your last guest talked about, I think things are fine. I think consumers continue to prioritize experiences, and we saw that.
Okay, Broadcom at the high. NVIDIA is still pushing.
Going to Europe or leaving the country is a little bit more expensive this year. So as we've seen, people might stay closer to home and vacate with drive-to or shorter haul flights.
Well, and I was talking earlier too about what we heard from the airlines, which seemed to be that sort of full service premium customers were holding up better. Are we seeing that play out in the lodging world as well?
Absolutely. When we analyze the chain scale trends, revenue and occupancy.
Okay, Broadcom's still pushing. NVIDIA looks like it wants to go some more. NVIDIA.
I think that's been the case for almost a year now. So it's certainly what's going on with lower end economy chain scale focused brand or portfolio. So we continue to like those that need a little bit more upscale, as we know the consumer is kind of fickle here. People are enjoying experiences, but the last 2 or 3 years, I think people extended their budgets in every age bracket. So the people in the luxurious level were spending a little bit more, but also people in kind of the lower chain scales were spending more. So that's kind of what we're keeping an eye on, and our ratings kind of reflect a view towards some of the higher end brands.
Well, I was going to ask. I know you got a neutral rating on Hilton. Is that why? Because they, just because they're
Okay, NVIDIA breaking above another pivot. Needs to break above this pivot here. NVIDIA got some wicks right along this area. Okay, got a wick right here. Okay, starting to move through this area. NVIDIA. Okay, another buy order block. Okay, we got another smaller buy order block right here. Okay, starting at the morning. Start at the morning. So far, if we make it all the way up to the high today, that's 5 to 1.
And we are waiting for a little bit of a broader recovery to become more constructive on Hilton.
Let's talk about Hyatt, which I believe is still your top pick in the industry. We have to wait for their earnings a little bit. They report they're due August 7th. Similarly, is this a combination of sort of valuation, but also where they skew?
Yeah. So.
Okay. Let's see where we're going now.
Consumer versus Hilton or Marriott, that's really bigger and slightly broader. It's focused on. So bigger is better.
Still 2 to 1. Still 2 to 1 on that last buy order block.
Caribbean markets, all-inclusive markets, and they've acquired some boutique types of portfolios around the globe. We like them because of their valuation. It's a asset-like transformation, right? They're selling their own assets that they've owned for decades. Hilton and Marriott have already done this, so I think as they sell these assets, and we're seeing prices for luxury goods, whether it's hotels or sports teams, right? They rank for prices. So we think there's a good market for Hyatt to hit the bid there. And as they bring in the fees, we think that multiple will re-rate most of these franchise world multiples that we're seeing.
Okay, we continue to move higher.
Every month is different than the prior month, right? I think in every quarter we're seeing 2 good and 1 neutral in terms of data points. So it has been difficult to kind of think about what growth will be in the back half of the year, and then more importantly in 26 and 27. Across our coverage, particularly in the gaming space, we're still seeing names that are trading historically low valuation levels.
Okay, these pivots looking good.
Private equity companies, they have a lot of money that they're trying to deploy. So we're focused on quality, consumer-driven companies with lower valuations, and particularly those that skew more towards, the higher. But yeah, I think the wealth effect from stock market, property market, what we've seen in the past couple of years, there's a lot of turmoil around the election, around Liberation Day, but there's a lot of wealth that's been created. employment still looks good, gas prices are low, and wealth creators have been high. So we expect people to spend on that discretionary
Okay, looking good.
scale, which is a little bit more cyclical than consumer areas. Thanks, Julie.
We check in on the NASDAQ and some movers, including Lucid. You're watching Market Cap. Hey, do you dread scrubbing away stubborn?
Okay, NVIDIA bouncing again. Tesla. All right, we just ran into some resistance, NVIDIA.
Scan the code on the screen now and find out. This is the spinning wheel, your new best friend when it comes to food. It's got a powerful motor that can keep you high speed, so no more scrubbing by hand. It can different brushes, so no matter what you're playing, you've got the right tool to control. From your bathroom tile to kitchen countertop, spinning scrub easier and way more. The spinning scrub. And right now, if you order today, you'll get 20% off. Trust me, your cleaning routine will never be the same. Go ahead, scan the code on your screen right now and get it. We'll take you.
Okay, looking good. Oh, S&P needs this to launch like it did yesterday, late evening. We had a nice little pop late evening to sell into strength. That's all. If we do that again, that's where I would sell some of those lottos.
Get triggered when the prices break above certain levels here. You get the cascade and then the breakout here that can lead to, runaway profits. It would be the hope. Nevertheless, momentum was trending downward here out of that overbought area on the verge of breaking through to the upside once more here. If we were to consider some other levels based on our volume profile study, we can see the bulk of the trading is down here near 73. Not really any clear
Meta, looking for the breakout.
in terms of volume in the near term, but we can see our 77 level, a frequent stopping point for price, lines up fairly closely with the 63-day EMA to the upside, plus one standard deviation channel around 89.50 or so.
Okay, all right. Don, I'm going to yield the floor back to you because you said this one pains me. Is it a personal pain point?
It really is. It definitely is. But you know what? Rick is actually spot on with this one. It's dealer gamma that often actually breaks these to the upside, and I'm just not going to stand in the way of it right now. I mean, the marketplace is still really strong on a relative basis. Look, we are seeing some fading inside of the Nasdaq. The Nasdaq is massively unchanged on the week, but that could change tonight with Google earnings. Tesla to a lesser degree. Tesla tends to be its own animal. You start to look at Google, though, that could change the way we feel about the Nasdaq. Right now, we're actually seeing rotation, not necessarily towards tech. It seems like everything else, and Wells Fargo fits right into that.
Well, you set up nicely. Our next segment, actually, we are going to be taking a look at the tech sector. We'll leave it there, though. That's Don Kaufman, co-founder of TheoTrade, and Rick Duquette, our lead market technician here on Schwab Network. Thanks both guys. Coming up next, like Don said, we're going to spotlight big tech. We've got two members of the Mag 7 reporting after the bell today. That's Alphabet parent company of Google and Tesla. We will start out with a look at Alphabet on the other side of this break. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
All right, NVIDIA will fade from the high for now.
Trading at Schwab is now powered by Ameritrade, unlocking the power.
Okay, Broadcom starting to see a little bit of profit taking. All right, NVIDIA pulling back in. This buy order block will be erased here shortly. All right, we're starting to move through it. Let's see if we can get a higher low somewhere along in here. Okay, there goes Palantir. Palantir's on the move. Palantir is on the move. Maybe that retraces. Palantir. Big move off the low. Palantir.
Or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and
Palantir, more buy order blocks. Palantir.
You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Palantir looking good.
Trending the trending names every day. Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Trade 360. I'm Becky King Hall live from the floor of the New York Stock Exchange. Talking about the spotlight, mid-cap tech sector, starting with Alphabet, parent company of Google. Those results due after the closing bell today. Joining us now for perspective is Scott Kessler, analyst at Third Bridge. Scott, thank you so much for joining us. The expectations for Alphabet Google consensus, we're looking for adjusted EPS of 220. Revenue expected to come in at just below $94 billion. Is that around where your expectation lies?
Yeah, look, I mean, I think that's the consensus. I think a lot of times people are wondering what's going to enable the company to at least beat those forecasts or what could be disappointing. I think in the past number of quarters, past number of years, people have focused on a couple of things.
Supply is at, looks like one.
Look, this is a company that's still driven by internet search and related advertising. I think it accounts for 75% of revenue.
Well, that's you making all that noise, huh?
The big question
I
is,
thought there was something outside. You're trying to get into my cabinet, kitty cat? All right.
Last day, where if you look at the AI results that come up when you input a search, those results often result in, frankly, the company not gaining as much in the way of advertising opportunities. If that momentum continues, it's probably a headwind for the company. In addition, I think people are looking at margins, right? And they wonder the amount of spending that the company is doing on AI to fortify their kind of investments, their offerings, and their competitive positioning. If they're spending a lot more than people want, that's going to be seen as a negative as well.
But let me ask you this, Scott, especially like what some may see as the elephant in the room, AI and the threat to its core search business. At the same time, Alphabet, Google has Gemini itself. So how big of a
Okay,
threat
watching for dealer hedge flows to turn back up.
could it potentially be seen as friend instead of foe?
NVIDIA.
I think that's the way the company is trying to position itself.
Apple's starting to turn. Apple turning.
There are a lot of benefits that the company is garnering.
Apple.
From more of like an operational perspective, whether it's
Okay, let me go to the 5 minute because it's been pretty choppy this morning. Apple.
look at the company's
5 minute.
performance platform. Experts we've spoken to have consistently indicated that it's helped
Apple.
in terms of driving ROAS, which is the
Apple's starting to turn.
advertising
Okay,
spend
hedge flows are
that,
starting to turn as
advertisers
well.
and marketers using the platform, they want to see the highest possible returns. However, I think it's pretty clear that, let's call it the days of
Okay, Apple.
Google search.
Okay, so here's a good example, Lucas, if you're watching. Okay, here's an entry area potentially. Okay, extend the risk reward. Extend your risk reward up. You can do this visually or you can do it mentally. Put a stop underneath these buy order blocks right here. Okay, and that gives you almost 3 to 1. if we get a bounce here. All right, so entry a little bit lower now. Okay, 3-1.
Marketplace for what Google is doing, and that obviously makes times a little bit more challenging from an operating and
Okay, Apple might be next.
What are your thoughts on the views
Apple
that
might turn.
Google can offset search volume loss with stronger, even including AI within?
Yeah, I mean, obviously that's the narrative that the company is going to articulate probably for months, quarters, and years to come. It's something we've consistently heard from experts that we speak with on this topic. We'll see to what extent they're able to do that. I think one of the challenges is, of course, being able to deliver the value that I alluded to. The reason that Google historically has performed so well as an advertising vehicle is because advertisers and marketers consistently derive value from the platform. If there are alternatives that are doing a comparable job for less money, then you're going to see dollars flowing to those platforms. Now, what's interesting is if you look at the competitive kind of set right now, I think a lot of people think about, OpenAI and ChatGPT, increasingly Perplexity. Those are not kind of advertising supporting vehicles. Could that happen over time? I think a lot of people are expecting you're going to see those companies, those products moving in that direction. In addition, like we talked about, the AI overview functionality that Google is already
NVIDIA.
which I think a lot of people find particularly compelling, that is really not driving much in the way of advertising revenue. And so I think they're going to have to figure out the right way forward here. It's definitely a lot more complicated a landscape than they've navigated in recent years, I'd argue.
Okay, speaking of just kind of competitive landscape, what about YouTube though, especially as it relates to, the potential for advertising growth there? I mean, YouTube is pretty sticky. When you think about just younger generations, that's where they go.
Yeah, no, I mean, I think you're absolutely right on that front. People really don't watch television in the way that you and I used to, I'd say. I think a lot of times when you're watching a screen, especially as a younger person, you're actually watching YouTube. The thing about that, though, is it's not necessarily solely about consumption. It's also about monetization. And YouTube has an interesting kind of dual monetization model when it applies to video, because on one hand, you have the subscription service that people are familiar with, that frankly is a primary way a lot of people get their video content. And then I'd say the more kind of omnipresent kind of free internet content that you're able to access through YouTube. And what's noteworthy is that they've kind of had free reign to a large extent in that, digital streaming video advertising category. But what have we seen over the last couple of years? We've seen Netflix move into that category. We've seen Amazon move into that category. And I'm talking about streamers that are monetizing with advertising. Obviously, Netflix and Amazon Prime Video have been at it for years, but only more recently do they have ad-supported tiers. And I think there are a lot of indications that those particular offerings are disrupting and actually taking share. I'm not talking about viewership now. I'm talking about advertising dollars away from YouTube. And the one wrinkle, which is really important to keep in mind, is historically, YouTube has been very brand advertising focused. That is not the kind of advertising that people are seeking in the context of today's economic backdrop. What we saw during COVID, and this has continued, is a demand for performance advertising, direct response advertising, essentially advertising that's indicating, hey, we know this, that, and the other about you, searches you've been conducting or what have you. Would you be interested in this specific item, this specific purchase? And it's incredibly effective. It's not something that YouTube does especially well.
Okay, well, I know there are some who would.
Okay, looking for NVIDIA to get going again. Watching the dealer hedge flows at the moment.
Certainly look forward to Google's results after bell and see what the AI threat looks like for them, if they are really, if it's more friend than foe. see if they meet all metrics or what the forecast is from here. Scott, we'll leave our conversation there for today. That's Scott Kessler, analyst, Third Bridge. Thank you, Scott. Coming up next, the disruptor, George Silas, joins us to take a look at Alibaba released its latest large language model. It claims to outperform ChatGPT and DeepSeek Plus. Taking a look at the latest run in the meme stock craze. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a
What's going on
webcast that's
here?
right for you. Are you an active
What's
trader?
going
Our
on?
active trading webcasts are designed to help you develop a deeper
Let's see.
understanding
We go to
of
Super
technical
Trend.
analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Okay. NVIDIA. Yep.
Welcome back to Trading 360. I'm Diane King Hall live from the New York Stock Exchange. For a look at stocks on the move, I want to bring in Sam Bonis, contributor on the Schwab Network. We're taking a look at the meme stock space. The meme stock making a comeback. You brought back the word YOLO. YOLO. I know the companies won't like to hear this, but it does feel like the YOLO trade is in effect here.
Well, it wasn't me. It was something that I read. It certainly seems to be what set off some of this excitement. Diane, as you and I have been talking about, obviously the meme stock craze making a bit of a comeback. And obviously yesterday we were talking about Coles and also Open Door. Now, as far as some of the movers and shakers in the market, we are seeing a lot of attention and focus on D-Nut, obviously Krispy Kreme's up 6% or so. GoPro flying.
What's D-Nut doing? D-Nut.
Strong double digits there. We are also
Okay, big fade from the high of the day. D-Nut might be an opportunity here. D-Nut. All right, NVIDIA. Watching NVIDIA. Looking for another pop on NVIDIA. Apple, looking for a turn, no turn yet. Watch Microsoft.
Seems to be a lot of attention around this, but it was interesting when I was listening to Nicole and Kevin even speaking about this morning when she asked him what to make of it. He said, "Well, I have no idea." And I think that really just speaks to some of the head scratching that goes on here when you look at some of the notes that have hit my inbox over the last few weeks. As we've seen this sort of retail FOMO, those meme stocks are on the rise. It has been really some of the moves on absolutely no news, as traders say, just because they feel like it. And so what we saw with the issue with Coles, and you and I were discussing this morning, Diane, was the fact that these retail investors seem to have caught on to the fact that these are heavily shorted stocks. And that begs the question, I've heard about this, in the sort of trader talk this morning here on the floor about why these stocks are even being shorted in the first place. And you give a company like Coles and some of the chatter is like, well, the fundamentals of this company looks okay, so why are we shorting the stock anyway? But they seem to have caught on to this whole idea that these are being heavily shorted and sort of jumping on the bandwagon here as to why they're basically a good target.
Well, I guess so. I mean, look, Coles has challenges, right?
Yes.
And I mean, it feels like trading to get Coles cash ultimately at the end of this one. This one caught my eye. Headline from Krispy Kreme enters meme stock frenzy with hot glazed hype. It gives us some great.
Okay, Microsoft. Watching Microsoft here. We need buy order blocks.
You have to be careful with stuff like this.
Absolutely. These retail investors are piling into what are really beaten down penny stocks. And, as you say, when you look at some of these short coverings, yeah, it's
Oh my
very
gosh,
interesting as to what is driving.
75.
Yeah.
That's the 28% gain today.
Okay, we got a buy order block on Microsoft. Okay, supply overhead, supply.
Well, the look across the yellow tree, the meme stock frenzy making a comeback. It's 2021 all over again here in 2025. Time now for the disruptors joining us with today's
Okay.
conversation. We're still in senior markets
So I'm going to buy some Microsoft.
Look at Alibaba. This was not a meme stock here. It is moving higher after some news around it's latest news around large language model. What is it?
40 deltas or 50 deltas at the money. Okay, I'm going to buy some Microsoft here. Let's see what's going on with Microsoft. Microsoft. Let's see if we can get a move on Microsoft. Friday calls just for lottos. Oops, damn it. Microsoft. Okay, let's get a little dip here. Maybe we get a little dip for a pop. Microsoft. 40 delta is 287, so I'll probably do a vertical. Buy a vertical. Vertical. Okay. All right, so $100 to make 300. Okay. Oh, 505. 506.
Based on this news, but this is a company that has, I think, benefited and will continue to benefit from reprieve on tariffs.
Microsoft.
Export and import. I'm sorry,
Microsoft.
Especially with export-led growth countries like emerging markets in China, which it still is. I think these start negotiations.
Okay, so let's adjust this. Okay, we got a bounce so far, Microsoft. Okay, so here is our entry right in this area. See how far we can get. Hopefully we can get back up to the high. That'd be 3-1 up volume, 3-1. Entry right here.
Okay, George, I know we don't have a lot of time left. How about you take us through an example trade for Alibaba?
Yeah, so I'm going to go with the trend. If you look at the 50-day moving average, the stock is trading above it. It seems to have great momentum, and I think there's going to be positive movement in the international sector and the emerging market sector going forward with a weaker dollar and even lower interest rates will benefit China and Chinese stocks. So I'm going to put on a bullish trade. I'm going to go to September.
Gonna buy order block there.
Days expiration. I'm going to buy in the money $115 call option. So this is a trend trade. Call option altogether costs you about $11.50.
Buy order block right there. We got a squeeze. Buy order block right there. We got a squeeze.
126.50 is the break-even price. When we're buying about a 70 delta, which is in the money, and ideally speaking, if that delta hits 85 or 90, you could consider closing this position or rolling it to further out in terms of time, but also a lower delta. So it's a trade that manifests if the stock goes higher.
Stop right here.
Because it's in money and it's bullish. So again.
Okay, here we go. Starting to lift. Microsoft's starting to lift. Let's see. 505. 750s or 505s. Okay, just looking for it to follow through. If we get any kind of follow through, we got to stop below.
Trading a shrimp is now powered by America, giving you even more specialized trading support. Connect with the Schwab Trade Desk. Our team of passionate
Okay,
traders ready to tackle
looking for Microsoft. Let me just check the flow, dealer hedge flows.
and access support by phone, email, and in-platform chat.
Dealer flows need to keep
Trade brilliantly
Dealer flows need to keep moving higher.
You'll love Carl's Way. Take a look here, please. But there's Carl's Way is the best way.
Is it? Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do. Where are you going?
Schwab.
Okay, need to see some more upside on
Schwab, a modern approach to wealth management.
Microsoft. Need to see a little bit more upside. Come on, Microsoft. Let's do it. True. Okay, Meta's still going. Meta.
Welcome back to Trading 360. Tesla set to report second quarter earnings after the closing bell today. Here's the expectation. Adjusted EPS expected to come in at 39 cents a share.
6,300. Yes, yes.
Elon Musk has said he's back to working 7 days a week and sleeping at the office ahead of today's release. Tesla are down more than 15% this year, but are up year over year. Time now for our 360 round, focused in on Tesla. For that, I want to bring in our panel. We've got Sean Galore, Chief Market Strategist, Future Equities, and Lucas Lloyd, President and CEO of Lloyd Financial Group, joining us today. Guys, thank you so much for joining us.
Thanks for having me.
All right, Shai, let's talk about these expectations, right? In terms of the expectation, I gave you the numbers, but to put it in perspective, if revenue comes at that level, that's down 10%, more than 10% year over year. EPS, would be down more than 20% year over year. Does that match up with what you're expecting?
Yeah, I mean, the earnings will be messy, but again, this print won't be about what Tesla's reporting. It's about what they're going to be building. And that is why us at Future is willing to take the Elon tax on the name, because we are getting a front row seat to a company trying to build an AI body and brain for mobility and robotics. That TAM is massive. Like when we're talking about how much dollars is spent in human labor, we're talking trillions. So 50 trillion specifically. So in 5-10 years, like if there is actual momentum, and if Elon is in founder mode or wartime CEO mode, we do think that history speaks for itself, where he does deliver. However, the timeline is the only variable in the calculus.
That is always tricky because he gives these timelines for things, and then he often says, "Oh, sorry, I actually have to pull this timeline out further." Right? And look, no one can argue that Elon Musk is not a visionary. He is very much a visionary, but it begs the question on how do you value Tesla, Lucas? Right? Is it a car company? Exactly. Is it a car company or is it an AI company? In terms of the future, maybe it is an AI company, but right now we have to look at deliveries, right?
Well, that's exactly right. I think you have to
Okay.
the short-term view, the long-term view. Kind of like
Watching NVIDIA, no follow through yet. Microsoft, looking for that. There goes Microsoft.
The hurdle is a lot lower right now. I think the revenues are projected, like you mentioned, and margins are projected like 10 to 20% down on the year. So the hurdles are much lower. So in the short term, I actually do expect this to probably rally on the earnings report.
Okay, Microsoft pop in.
6%, the options markets expect about 6% implied volatility. That's actually lower than usual. The implied volatility is like 8 or 9%. The overall
There goes Meta.
volatility is actually lower. This earnings season, about 4% implied moves compared to 6%. So I do think it's got a lower bar. It's probably going to over deliver in the short term, but the long term, the biggest things we have to pay attention to are these EV credits. I mean, I spotted car. We were talking about this earlier.
Nice push on Meta. Okay, Meta. All right, looking good. Looking good, Meta.
So I mean, I can't buy an EV when I can't charge it anywhere besides maybe my house, right? So there's a lot of macro factors that play the long term. I would not own Tesla for the long term. Trading it, look at bull case.
So you make a good point. The infrastructure is technically here on the East Coast, but I just wasn't there yet. For me personally speaking.
Okay, this is a big move in the S&P right there. All right, so those lottos. Okay.
Are you expecting that volatility to kind of continue that pattern, no matter what happens?
Yeah, I think we saw a glimpse of that a couple weeks ago in the delivery numbers. It was under estimates. However, economy in Japan, I think it was up 7% after the day. So you have to ask yourself, zoom out, what's being priced in the stock? This is the worst performing Mag 7 name in the market. So you have to ask yourself, what's being priced in? Is this a catch-up trade? Elon's going to go his Elon mode today. This is kind of the first time he gets his like forum to speak since that whole Trump and debacle middle school fight. And you're going to know that he's going to have this kind of alpha energy like he's been accustomed to. And we know that EPS is going to be down like low teens year over year. Delivery is down 20% year over year. So it's the world's worst kept secret that he sacrificed his EV business to fulfill his autonomy vision. And I think that he's focusing on the right pillars to dominate the new digital economy, because every company, you're seeing signs across the board on all these Max 7 companies. You need it on the data, you need it on the chip, you need it on the hardware.
Okay, S&P looking good.
He has 3 of the 4.
High tick alert plus 800.
High tick alert. Okay, here we go.
I think a lot of today's commentary will possibly be about potential merger between XAI and Tesla that would provide them.
Oh, there goes the Microsoft.
And some infrastructure to really be that winner in the next 5-10 years.
Lucas, I'm glad you brought up the fight shy, the middle school fight. I call it a first friends fight. Let me ask you this. He's gone from that to what Shy mentioned about being a wartime CEO again. Does that change your view at all when you look at Tesla, or are you still kind of sidelines?
I actually would rather
be
closer to the
Cool.
administration, unlike he kind of got away from it. When you're look, why do all the tech CEOs get friendly with the administration?
All right, nice move on
Not necessarily
the
saying
markets
they
here.
would
Apple turning up too.
but,
All right,
you know,
looking really good.
people at the top. So I'm actually less
Big move.
that he's now a wartime
All right, take the opportunity to reduce some of your risk as well. Nice move here in the S&P. Nice. Okay, RK. Rocket. Okay, what's Rocket doing? Rocket RKT. That's going to benefit from these lower rates coming our way. Rocket. All right, big move on Rocket. Did fade. Extreme high tick alert.
Whether it's going to be robotics, whether it's going to be battery technology, solar. How do you specifically think about all this? It's hard to put a valuation on these things.
All right, we'll have to leave our conversation there for today because we're short on time. I have enjoyed this so much. That's Lucas Lloyd and Shai Valor joining us now with
All right.
across Tesla, the expectations for earnings due after the close today. Thank you, guys. And thank you so much for joining us today on Trading 360. Download the free Schwab Network app. It's available in the Apple App Store. Tune in 24/7 on SchwabNetwork.com. Stay with us. We've got Fast Market up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by JD.
Beautiful. Nice move here.
With Investor Checking, you get the
Woo. Wow, that was a nice pop. Take some profits off into strength. Brother Bill, nice. I know that you took SPXL. Nice one there, Brother Bill.
Security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means
Okay, Microsoft, nice move on Microsoft.
Bonds, money market funds,
See if we get a follow through.
with Schwab Bank Investor Checking, the checking account built for investors.
All right, see how far we go with
I have a
this.
question for you.
Meta looking good. Meta. Yeah, that was a nice move on Meta. That was $100 per contract right there on that pop. Meta.
She was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Okay, looking for Microsoft to continue. Microsoft,
Opportunities don't stop when the market day ends.
Apple, all these turning up. Apple. Okay, I haven't added to my Apple position. I do have Friday calls. I don't know if these will do well from the gap down. Meta's doing good. Google turning. There goes Amazon. Okay, cool. Nice. Nice job on AMD.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Okay, S&P 500. Nice pop on S&P. Russell 2000 hits a 21-week high.
Fast market, ready for you, ready to go at 12 p.m.
15% tariff with EU. Okay. So these guys, these countries continue to come in with, that's what I was worried about there, Scott. Wouldn't want to go short. So there you go.
Recording in progress. Okay, we look like we're good. So today is probably one of my favorite days. Today we get to talk about volatility dashboard. This is the first or the fourth session and the first one after our little break. So we did 3, then we had a break for OPEX, and then we're doing the next 3.
JP Morgan on the move.
We're going to be doing volatility dashboard, and then we have a couple of key elements that we'll be unlocking in the next couple.
JP Morgan, nice move on JP.
And some of those things.
JP Morgan surging, about to break out to new highs.
And I really feel like traders sleep on this topic because when it comes to dashboard topics, or when we're talking about gamma or hedging influences, all of these things, those things are a little more ephemeral, right? You have to take a little bit more I believe button pressing than volatility. Volatility is something that every single person, given a little bit of effort and a little bit of time and a little bit of experience, can learn everything you need to know. And it's a great topic, but it does require time, effort, and experience. And not in equal measure. Some people are going to need a little bit more of one or the other. So it's a really, really important concept, and we could spend 6 hours talking about it, and we have. SpotGamma has this volatility challenge that we hosted about a year or two ago, a year and a half ago, I believe, where we talked about a lot of these concepts.
Okay, here we go. JP Morgan on the move.
It's still
JP Morgan.
Now we're going to stay pretty high level today. We're going to talk about what is implied volatility. We're going to get into specifics on the dashboard and some use cases of how you can do those things. And then we're going to talk about just 2 examples I literally looked at last night, knowing the current environment, knowing currently what's going on within the tool itself, and potential trade ideas that you could look at and see if you're interested in yourself. So that's kind of what we're going to look at here. Here's our general risk disclosures. These are just the copy-paste boilerplate you've probably seen Brent show 50,000 times in the webinars. If you have any questions about them, you can just visit this link, and that hosts a whole bunch more of this wall of text. I've read it multiple times, and I've had to give it out to other people. So it is interesting if you're into those things, but I've lingered here long enough. Have fun. So like I said, what we're covering today. So we're going to talk about what is.
Okay, we've got JP Morgan ripping here. JP Morgan ripping.
Those key components and key concepts. We're going to talk about the fixed strike matrix. We're going to talk about term structure and kind of how to understand what's going on and where your use cases there would be. And then we're going to talk about volatility skew. And volatility skew is really kind of how we want to lean into the tools itself, because those parallel into other tools that are also very easy to use. And I'll show you how we can use all of these things all in
right, JP Morgan looking good.
And then I'm going to talk about 2 specific tech areas that are looking pretty decent right now.
This is JT speaking over at SpotGamma. So he's discussing, he's talking about the platform.
And then we're going to briefly talk about help and support stuff. So when we're talking about implied volatility, what are we talking about, right? Now, when we're talking about it from the market maker standpoint, they don't have a specific equation, right? What they have is a series of buy and supply and demand. And from there, they balance price. More demand, they're going to increase.
Okay,
price,
looking for NVIDIA to push a bit more, Apple to turn back up some more.
Less demand or increased supply.
Okay, Apple looked pretty good a few minutes ago. Okay.
Depreciate some of this value. Now that's how their end handles it. But from us, we can look at it from a very basic standpoint.
We can use a system of equations. Now, that might terrify some of you, but it's the easiest one you've ever got, and it was the first one you were ever shown. It's one equation and one unknown. Because when we look at it, we have stock price. We know what the current price of the stock is. We know what strike we're going to pick for our option. We know what expiry we're going to pick. It's either a 0 day or a weekly option or something like that. So we also know if we're going to buy a call or a put. And while this is not necessarily an impact to us in this concept, we have the risk-free rate. Like, we know and understand.
All right, buy order blocks on JP Morgan.
Now, in addition to that, we know what the option price is. Now, we have a range of option prices. So we have the bid, the ask, and the mid. Now, we try to get filled at mid. And that can be difficult at times, right? Sometimes you got to give a penny, sometimes you can get a penny. It just depends. How liquid a stock is and how liquid its options market is going to help determine where you can get some of those fills. But if we look at just one price, let's say we just look at mid, we can now derive or back out and solve for X.
Okay, listen to this in a few minutes. This is all basic stuff.
It's always the cheapest of the max. Something that you buy in half, right? I mean, that's basically what it is. That's where they made the money. But this may all turn around. It may be down 15% tomorrow.
You also have the DOJ ruling that is ultimately we're going to learn in August what the resolution of that is going to be. Do they need to be broken up? That's important as well. But this quarter,
But that's 50-50 if the sum of the parts.
absolutely. But why has it gone up 10 straight days? It's about this quarter. It's about Google Cloud being really strong. It's about digital ad sales coming back very strong in the quarter. And I think tonight they're going to report a really good quarter.
Yeah, Bryn, we almost buried the lead. It's coming off 10 days in a row up. It's trying for the longest winning streak ever today. And now it gets added to the top picks list at Oppenheimer. What are your expectations for this evening?
Well, I think that with Google, the expectations are for 11 and 16% revenue and earnings growth. But I think as everyone's talking about, whether it's Claude, Gemini, et cetera, all of these LLMs are going to look more and more the same. And so I think where Google long-term has a challenge, if you look at these companies, Google's actually the most vertically integrated to win. And if you think about Gmail, Google Calendar, Google Search, you have YouTube. Google has all of our data. They could easily flip that on and make a really powerful AI assistant. Because I think it would freak everybody out because at the end of the day, guess what? They still sell our data. And so I think that where you have, Mark Zuckerberg is just like full force coaching talent. They can get their AI in Instagram and Facebook and monetize that. I just still feel that with Google, it will remain a cheaper name because I don't think their ability to actually monetize their AI is clear.
All right, so waiting for Microsoft to go again. JP Morgan looking really good. Coming up against supply.
Via Instagram and Facebook because we all buy stuff every time we go on there.
That is the key. Can they maximize their monetization model? It's unproven. Mackenzie Sagalos is following that for us from San Francisco today because that's the key question. Mackenzie, isn't it?
It absolutely is, Scott. The biggest question for Alphabet is whether its artificial intelligence push will cannibalize its highly lucrative search business. So investors are really watching to see if this AI pivot can power growth without destabilizing Google's core. The company rolled out AI overviews and a new AI mode tab this quarter, but there's still no clear monetization model. Analysts expect softer click volumes, but better conversion rates. Still some signs of resilience. You got Raymond James noting that impressions are rising as advertisers boost paid search budgets to offset lost organic traffic. Cloud remains another key focus. Alphabet's spending $75 billion to expand data centers for Gemini and enterprise tools as it tries to catch up to AWS and Azure. As shares are lower today.
Okay, that was a beautiful little move there on the S&P. Still grinding up against the highs. I would take the opportunity to exit some of these, okay? S&P, I'll probably take a little bit more off if we don't make a new high. Okay, let me see if I can get spot gamma. Spot gamma wasn't working this morning on this machine. Let's see if I can get it to work. I think it was due to my needed to empty my recycle bin. I didn't have enough. Yeah, here we go. Okay, so there we go. Okay. Okay, see the dealer hedge flow?
Are closing in on a deal that would lead to 15% tariffs on all imports coming in from the European Union. Now, stocks are up on this because that would be a big step down from the 25% threats, 25 to 30% threats, I should say, that we've seen against the EU so far. Now, the FT does use some interesting wording here, saying Brussels could agree to these tariff rates. So there's nothing set in stone. The White House official just a few minutes ago. The official said to me that it's very fluid and close is relative. So this is a very fast-moving situation, and nothing has been finalized yet. But they are looking at a 15% tariff deal here. Now, the FT also reports that both sides would waive tariffs on some products, including aircraft, spirits, medical devices. So more to come on all of this, Pat, but we do know this headline was just after European officials have continued to meet with their U.S. counterparts this week, including Commerce Secretary Letnick earlier today. And we do know they were briefing EU member states today, leading now to this headline about 15% tariffs.
All right, good stuff, Megan. Thanks. Keep us updated, please. Megan Nasella down in D.C. We said stocks at the high. So the Russell, too, because the Russell's the best of the bunch today. It also has the most ground by far to make up. Year to date, there's no question about that. It's barely up 2% relative to everything else, which has pretty much done well. Obviously, the market over the past few months has ripped in general. Year to date, it's a little bit of a different story when you look at the full scorecard.
Russell's up 4% so far month to date.
You start to get more of these deals where you start talking about tariffs in the past tense rather than what's still to come. Is that the thing that ignites the broader rotation? Because there are some today, like JP Morgan says, investors should still be on the lookout.
Oh boy, pretty nice. I hope everyone's having a good day. A nice little pop to take profits off in the strength. If you took some lottos this morning.
Because so many times over the last several years, we have believed that this is the moment that the Russell is finally going to have its.
Okay, Microsoft fading a little bit. Watch your stops on Microsoft.
My strategies, looking at momentum so far, month to date,
Microsoft.
it is the Russell that is leading higher, up 4% relative to the S&P, up 2%. Underneath the surface, you have materials, real estate, utilities, industrials that are kind of moving that and advancing it forward.
Okay, Microsoft.
To a certain extent, some of the financial companies.
Microsoft watching the hedge flows here. Microsoft. Okay, hedging. Whoops. Amazon. Okay, Meta starting to come back down now. Meta. Meta.
We're getting there a little bit faster than we expected. And if we do that, then you can expect that you are going to see that mean reversion catch up.
You know, I'm not going to nitpick with faster than expected because the market's already assumed it's going to happen given that it's trading at highs. These deals are very, very complicated. In closing a normal transaction is a 6-month process. Here we're trying to, what's ever been done typically takes multiple years. So regardless of.
Okay, Broadcom looking good for Rob, moving higher. Watching Meta and Microsoft hedging flows. NVIDIA, look for that to turn back up, hopefully. Microsoft flagging at the high. Microsoft. Lulu still drifting a bit lower. Might get stopped out of there. JP Morgan. Note the hedging flows on JP Morgan. Just dipped a little bit at the highs. JP Morgan.
It's the S&P. Well, the more deals you get, the more clarity you get. And here we are, season. As we just said, forget about the notion that CEOs can't give guidance because they don't know what the environment is going to look like in the months ahead. The more deals you get, you cross those off the list, and you're like, well, I have a better idea of what my capex is going to look like. I have a better idea of what my margins are going to look like. That's the whole game.
And equally important, or perhaps
and you also, but you also get with the bill that was passed, clarity from a tax perspective of I can write off R&D, I can write off this, I can't write off that. And so I think between the huge amount of stimulus that the economy, not equally, but the economy, parts of the economy are going to get from the bill that was passed.
Okay.
Clarity. Plus, we saw a budget surplus last month. If that can continue, we'll see. I think that all of a sudden, it wasn't that CEOs knew that things were going to be bad last quarter. There was uncertainty. And so I think if the economy is doing fine, I think the economy is going to pick up. It has to pick up. You can't pass this multi-trillion-dollar bill and not have it be stimulative. That creates problems. And so I think it does set up for a back half that just continues to be robust. I mean, our way to play the broadening has been, we've owned it. January of 2024 has been
Okay, we got the markets kind of hesitating now. Maybe take a little bit more off those lottos if you took them. Okay, it looks like Apple's going to turn some more. Apple, I might buy some Apple here. Okay, I'm going to buy some Apple here. Apple, let me just take a look. The hedging flows on Apple are, whoops, damn it, I just erased them. Shit. Okay. Apple, let me pull this over here. Just deleted it by accident. Apple hedging flows turning up. Apple hedging flows turning up. Let me take a look at Apple here. Okay, JP Morgan pushing higher. Apple hedging flows. Apple hedging flows turning up. Look for the buy order blocks. Moving a bit higher now. Let me just pull this up for an entry in this area. Put a stop underneath the 21-day, the 20 EMA on the 5-minute chart. Okay, I'm going to buy some Apple here. Apple. Going to buy some Friday calls. 40 deltas are $1.29. I'm going to buy some of these. Single. Confirm. Send. I bought some 40 deltas, 215s. Apple. Apple bought 215s. 2 DTE Friday. 215 call. $1.22 filled.
They know what their input costs are going to be. They know how things are going to play out, and so it's a healthier consumer. It's a healthier COGS, cost of goods sold for them. It's just a healthier environment.
Okay, Apple looking for a follow through. They're cheap calls. They're only $1.20, $1.22, $1.25. All right, need to see this move up to 214. Take profits off in the strength. Microsoft not following through yet. Nice little pop on Microsoft. Okay, flagging at the moment. Flagging for the moment. Okay, looking for a follow through. Microsoft looking for a higher low. Okay, got a buy. You see the fair value gap there, Lucas? I don't know if you're listening. But when we get these fair value gaps, price runs up so fast, it creates this big green candle. It's a gap, basically. If you take these 3 candles, 1, 2 is the big green candle, 3 is the red candle. There's a big gap between. That's called a fair value gap right here. This is a fair value gap. A lot of times these get filled. We'll come back and fill it because there's orders sitting here that need to be filled. Look for that to continue higher now.
On any corporate balance sheet because their tax rate isn't suddenly lower. So not actually making any more money. They're just not going to make less money because taxes went back to what they were. So I think that was incorporated in. And then with tariffs, they're still significantly worse. So prior to April 4th, prior to April 3rd, right? 2nd, whatever day it was, the historic tariff on average in the United States was 3%. On April 8th, it was 30%. Today, even after what we've just seen, it's about 15%. So tariffs today are 5 times more than they've been for the past 5 years.
Yeah, but the level of but what happens? I mean, the level of economic growth, the potential of it, is so much greater than it has been.
Why? Why is it so much greater than it was?
I mean, so you got the tax thing done. You're gonna have a
status quo now.
Is it? Is deregulation status
No,
quo?
we haven't seen a lot of that coming. So for the banks, for the midstream energy, like I'm psyched, right? And the deregulation should be really great in those areas. That's really going to impact them.
Rates coming down. Like,
I'm not gonna argue with you on rates. The Fed cut 100 basis points last year. The interest rates that actually matter, the 10-year, the 5-year, didn't move.
What's the impact of the most important tailwind in the market? Earnings. What's the damage to earnings from what you're talking about? Because we're looking at.
Okay, here's the answer, Joe. Nobody knows.
Well, wait a
Yeah,
second.
yes.
20%
Exactly. It's just a gap.
The EPS beats are close to 90%.
Okay,
But the rating hold on, there were still major events buying in front of the tariffs. In front of the tariffs coming into effect, you saw major advances.
Okay, so now it's pulling back a little bit more.
On a stale economic environment.
Okay, it's not bouncing yet. Looking for Microsoft to bounce. Okay, New York Fangs. Most of them look like shorts had covered, and now we're looking for follow through. Can we get a follow through? It'd be nice to see a follow through.
You're raising costs. But as far as the market's concerned, the base case has shifted and been accepted at a much higher level than 5%.
Okay, so Microsoft looking for that bounce.
I also don't believe it matters right now. Could it matter in earnings in subsequent quarters? Absolutely, and I think it will. That's very clear.
Let's talk about clarity.
Okay, we're back to even on Microsoft.
Whatever you want to say about Tesla.
Let's see, Microsoft back to even on those. Okay, I'm just going to go ahead and take these off. If we get a bounce, fine. I'm just going to take them off. 505s. My finger's on the trigger. If it moves any further, I'll take these off at break even. I'm going to go ahead and take them off at break even. Okay.
Do we get any answers? Do we get any clarity tonight?
No, I don't think on the, where I've been, I think really clear is like the fundamental business
Okay.
today is in decline.
Okay,
So the
Microsoft took that off at
-13,
break even. Didn't work.
revenue and earnings. So going in the wrong direction. But I think on top of robotics, they opened up really.
Didn't follow through. Microsoft, I took that off at break even. Unfortunately, that's what happens. Sometimes Nvidia, same thing. Okay, the S&P is pulling back.
The benefit of the Dow. As I said the other day, I bought it at 293 the other day.
Want more of these? Okay, hold on a second.
Because he's going to give some money to politicians like everybody everyone else does. And look, the stock is already at 333. And so I think as an investor, know where you are. I think the stock continues to trade in the 260s, 270 to 350s. And so 360s. And so I think we're at the top end of that range. So I would be selling calls up here because I don't think it's going to go through that until you actually start seeing new revenue streams actually even remotely begin to monetize. So I just still say trade the channel in the company because you can make a ton of money selling calls on the stock.
So Joe, in the most recent rebalance.
Okay, Meta fading as well. Microsoft fading. Nvidia fading. So with the S&P fading.
To Brent's point, though, the momentum, it has bounced.
Okay, that was a nice pop though. S&P, it was a nice pop. Wow, can't believe we're up here near 6350 already.
Well, look, fundamentally, this company has challenges in front of it. I don't think Brent would disagree with that. When you have
Okay, let me just see what this guy's talking about right now, JT.
Now, you'll notice NVIDIA has earnings like the day after, 2 days after this event or this particular expiry. So overall, its IV is really depreciated. It looks like it's about the same as it has been overall. So this is going to lead into one of the trade ideas we're going to talk about in a minute. So kind of going over term structure, you'll notice what you get is the just straight up.
Okay, watching S&P.
And what the out the money volatility is for each expiry as you go. So instead of just this single curve, you get all the.
All right, let's see if we can get another higher low.
So you can see where.
Need a B pivot. Bitcoin's not doing much today. Bitcoin.
Now, one of the other elements with term structure that you can do. Let's go to SPX.
Coinbase.
Larger view term structure.
Basing here,
You
Coinbase.
can also add forward IV. Now, there's information within the Sports Center to kind of talk about forward IV. This is a metric that you can look up. I believe Talib was the one who basically popularized it in his book. I think it was Dynamic Hedging, but I'm not positive on that one. But it was one of those books. Now you can see that right here, the market has an implied probability of, this percent, but looking at forward IV, it's significantly lower. So these can potentially show you some ideas for trade. You can also use things like bar shrink. Now, both of these elements are, again, one of those areas where you can do a lot of research on your own to leverage some of these things.
Nail,
by
JP
having
Morgan.
This platform and by seeing volatility and seeing these elements, you can now start to incorporate some of those kind of concepts within your trading. That's kind of how these things.
Raytheon breaking out. Okay, let's check out Raytheon. RTX is breaking out. Okay, nice reversal on Raytheon. Okay. Volume is about a third or a quarter of yesterday's volume.
Kind of the next one, we've talked about volatility skew, but what you're seeing here again is that volatility.
Palantir.
So if we're taking just that one
Palantir trying to push back up. Palantir.
Expiry for 821. If we look at just that expiry and plot where each of the out of the money.
All right, what's Constellation doing? Constellation Energy.
Now the cone here.
Okay. Gravestone Doji today. Gravestone.
And you can set what that is by enabling statistics.
JP Morgan.
It's set for 30
flagging
days.
at the high. JP Morgan.
60 days or 90 days. Now, what's a situation where you might want to look back for 90 days? Well, if you have earnings coming up, let's say you're Google and earnings are today,
Looks like S&P wants to turn back up.
You could utilize that to see
S&P looks like it wants to turn back up. Let's check out the dealer hedge flows.
Was expected. This is the 10 and the 90 delta of volatility.
Dealer hedge flows just kind of flagging right now. Okay, if these dealer hedge flows start to ramp higher, I would say this dip is probably going to get bought. S&P basket, equities basket, SPY, SPY. Dealer hedge flows look like they're going to turn up on SPY. Watch the SPY here.
If you're just a theta trader and you're just kind of rolling the same kind of iron condor style trades and you just want to see if IB is over or underpriced, you're going to be want to use that 30-day window. Aside from that, that kind of covers how volatility skew kind of is understood. Now, overall, you can, of course, obviously see like where we currently are. You do have the moneyness option here, so you can see where the current price is, and you can see where the moneyness of the option is. I don't really use moneyness personally. I just like Delta. It's just the best to use because I center around Delta, right? I leverage the probability concepts, one standard deviation, two standard deviations, understanding those. They really help facilitate.
Okay.
A quarter in which you're down 20% on your revenue growth, and you're down 9%, rather 20% on earnings growth, 9% on your revenue growth, and now you're going to do that again the current quarter. There's a growth challenge in front of you, and you have to question from a fundamental perspective.
Okay, watching Apple, Microsoft. That was a nice pop. That got sold.
Saying, hey, I'm back and I'm paying attention. No, well, I'm driving the train. Talk a lot that's about, not enough. You can talk a lot about autonomous. We can talk that's the obvious future. Well, we know about the rollout of the robo-taxi in Austin. We know that, but we also know, Brent's waving her hand over there. We also know that Waymo's got some really good technology, and Waymo has a nice partnership with Uber.
Target.
You wave.
Listen, well, yeah. Okay, well, two things on Waymo.
Target. Let's see what Target's flow looks like. Target.
Okay, so let's just like realistically, this company.
Target. Hedging flow continues to ramp higher. Target.
We need to talk about China. They actually I think they're just starting to sell, or going to start selling the YXL. So they're making in China a third row and slightly longer Model Y. I think it's going to have really good reception. But ultimately, U.S. sales, European sales. The issue is like what's happening in China. So from a fundamental perspective, I do still think that's the biggest risk. I don't know what these numbers will be because China just continues to flood their own market with these EV companies. And so, but once again, this there's no better innovator of our time. And so I think this is where the market is like, Jensen Wong has said ad nauseum, it is impossible to see how they stood up XAI in 30 days. And so I just think that's why the market will continue to give the benefit of the doubt with this company. It's going to continue to be one of the most valuable companies in the world.
Okay, we will take a quick break. We come back. We have a stock hitting a new 52-week low today. And Jenny's buying more of it. I'm going to tell you what it is next.
Okay, watching Microsoft on this dip. Okay, Target, the hedging flows are bullish on Target. Okay. Target. Tesla, we got earnings tonight. They're starting to fade right now. Tesla. I'll probably put together an iron condor later. Novavax. Novavax. All right, what are you guys looking at? Let me take a look at this, what you're looking at. Novavax. Jan calls. All right. You got a little bit of open interest. Not a lot. Let me just add that here, open interest.
But you'll notice this is a very flat overall smile. Like this is a very smile-like, not smirk. It's really not peaked at all until you get to the tails after it. Right? And that's what you would expect with some of these because they're just so far out of the money that they're publicly poorly priced.
Okay, yeah, you got a lot of open interest on my bad. Okay, so we look pretty 11,000 at the 10 strike. Novavax.
Take a look at where you struck some. Now, in addition to a calendar spread, you could also shift it. So instead of just doing an at the money one, you could shift it if you have a little bit of bias. If you might think, I think we might drift
40 Delta.
Shift it up a little bit with the call calendar. You can change the strikes and kind of get
44 Delta. That's the 10 strike for January.
This kind of leverages that short-term volatility. Now going into the next thing, iron condor. This is something that's very neatly done. A lot of times what you want to do is you want to do it in situations where you have a belief that volatility is going to be overstated. Now typically you're going to want that in a higher elevated volatility.
Okay, Microsoft starting to bounce. Microsoft. Okay, Microsoft might try again on Microsoft. Let's see what the flow looks like. Microsoft flow. Okay, it's flat at the moment. Flat at the moment. Price is rising, but dealer hedge flows are flat. Okay, Microsoft. Okay, we're starting to go here. I might try this again, Microsoft, see if it goes this time. I was too busy juggling a few other trades. Microsoft, I'm going to try this again. What's going on here? Do I still have some weeklies on? What's going on here? Five 17s.
here, but it's here. So let's just move forward.
Okay. Try Microsoft again. Try Microsoft again and see what happens here. Okay.
See that over the last 30 days, really volatility has performed.
Put a stop underneath. Put a stop underneath that little wick right there. I'll move back up to the high. Move back up to the high now. Would be about 2 to 1. A move to the high. If you enter right here on Microsoft, that's 2 to 1. 2 to 1. Oops.
You could go to 20 delta if you want to be aggressive on the put side. If you're more bullish, right?
Fair value gap got filled. That fair value gap got filled.
And then down here, you can see that 20 delta, you're not really getting paid for some of that, right? It's a little bit more depreciated than the previous one. You can see that. It's in historical. You can see that just looking at the
But we don't want it to be a bigger position than it is right now.
Boston Scientific record high today after they raised their guide, Joe, as well.
Organic sales growth, 19%.
Microsoft going.
That cardio division, remarkably strong. There are names in healthcare that can work.
Intuitive Surgical, one of those. They raised their gross profit margin guidance range. Gross profit margin guidance range.
So in the healthcare sector, this has been a momentum favorite name for the last several years, for sure. Now it's struggling. It was high twice. It was high. Well, Steve knows because he owns it. Steve owns it. Yeah, he does. And it's been
Okay, S&P is starting to bounce. S&P about to bounce.
Your ETF is hitting a record high today.
Okay, S&P. Let's see what the hero flow looks like on the S&P. S&P. Looking for the flow to turn back up. Okay, flow is starting to turn back up. Watch the flow here. S&P. Let's check resistance. Resistance. Okay, we got resistance right here at 63.60. We're currently trading 63.37, 63.60 overhead. 63.60. Trading 63.37, 38.
One's up 8%, the other's down 8%. It's a completely idiosyncratic story.
Okay, trace.
General Dynamics, they have momentum right now.
Watching the flow. Flow is just kind of flat right now.
Yesterday, Northrop Grumman benefiting from the Sentinel missile program and the procurement, obviously impacting Lockheed Martin. That's the one that has lost all of its momentum.
Well, Morgan Stanley makes Northrop a new top pick in defense.
63.60.
Morgan Stanley also says that Lockheed is too cheap to ignore. There was a call on the other side of that name, but that's just a look at that since you brought it up. Freeport, Jenny, you own Freeport. Bryn, you own Freeport too. Let's go to you on that.
Okay, watch S&P here. It might turn up. Maybe some cheap calls. We're midway through the day, so calls are going to be cheap now. S&P 500. S&P 500 0 day are going to be cheap. Okay, I'm going to just take a look at the chart real quick. Okay, it's still 2 to 1 up by most indices, 2 to 1 at least. Okay.
But I do think from a stock perspective, that 45.46 does seem to be a very strong feeling that it can't get over.
Jenny, you have a thought on that?
I don't know. Brent's looking at it from a technical perspective. I'm looking at it more from a fundamental perspective. And I actually used this as my final trade last week because basically, if copper stays above $5 a share, sorry, $5, whatever, if it stays above $5, they produce $9 billion of free cash flow, which is just tremendous. I think there's amazing upside here. It's not that cheap. It trades at 20 times earnings, but earnings growth is like 20%, 40%. It's just huge. So I'm all in. I don't like that. I don't like the technical 45 top, but I think from a fundamental perspective.
All right, 62.50s, 63.50, sorry. 63.50. Sorry. That's a typo, 63.50.
Of international visas. Secretary of State Marco Rubio today gave the university 1 week to produce records in relation to the program.
$1.20 on S&P. Let's see if we can get something going here. The dealer hedge flow is starting to turn up. 63.50s are only just above today's high. If we can get another follow through push here, we got the leg down. Let's see if we can get a leg up. $0.50 stop on those. Okay, looks like a bear flag for now. All right, this might roll over and stop me out. So they're cheap lottos. We'll see what happens. Apple's still trying to turn up. Apple's still trying to turn. Okay, we got some risk reward here. 2 to 3, 3 to 1. See if this can get going. Okay. All right, let me pull this back in. That's 2 to 1 right there. Okay, JP Morgan trying to push a bit higher.
When you skew it like this, you'd still need that move to the upside because the break even here, 52.60, which is basically where the stock's trading right now.
Yeah, this is a slightly bullish play, and the attraction here is pick a spot that you think Chipotle is going to go, right? In this case, 55 trail.
Tesla fading from supply back down to a buy order block from earlier. That buy order block was around 11:20 a.m. Okay, Netflix. I'm going to take this Netflix put credit spread off. It's not working. Once we start to turn, S&P starts to turn, looking to take some profits off into strength again.
260 and 57.40 to the upside. So got a nice wide range here, but as I mentioned, you're going to have some cyber risk. So if this stock opens up at 53 and a half, 56 and a half, something around there where you get the credit to kind of collapse a little bit because implied volatility levels will most likely fall post earnings. Time decay is also in your favor. If it gets cut in half or goes down a little bit, you've got to start thinking about ways that you can close this ahead of the expiration date on Friday. So keep that in mind. The idea is you buy it back cheaper than what you sold it for on this trade. But a good look at the short iron butterfly for nice credit. All right. Let's take a quick break here. When we come back, we're going to take a look at Tesla. EV maker stock is down over 30% from those all-time highs that we saw in December. They report after the close also. This will be a big one also. Stick around.
Okay, S&P is starting to climb. S&P is starting to climb. Okay, Apple still sitting here. Okay, S&P starting to climb. Okay, looking for buy order blocks. We got one earlier. S&P 500. Okay, we got one earlier right there at around 11:20. That was about an hour and 10 minutes ago. So we're looking for this higher low to give us another buy order block somewhere. Okay, I don't see. Well, obviously, there's not going to be supply. We're trading at all-time highs. Okay, we got no overhead supply. We're at all-time highs. These are just degenerate traders here that'll sell into strength. Okay, let's see what these guys are talking about.
Good to get your perspective on this. We'll keep talking about it. Thank you.
Thank you.
And speaking of continuing the conversation, listen to that now. Enterprise software company Pega reporting double-digit percentage gains in its annual contract value and cloud units in the second quarter, citing its AI
Tesla fading.
Of the continued acceleration. Joining me now is Alan Trefler, Pega founder and CEO. Alan, I don't know if you heard the conversation we were just having. I'm sure you have many thoughts on those issues as well, but I do want to dig in first to the company's numbers here. You guys do a lot of sort of automation of business functions, enterprise functions. What for you is the sort of real demand driver right now on the part of your clients?
So we think that legacy transformation, which is looking at the systems you have and figuring out how you make them more effective, more efficient, how you consolidate them, how you move some to the cloud, is something that every enterprise is interested in. Because
okay, JP Morgan about to break the new highs.
And at the same time, they're looking to incorporate AI into the way their business is run to make their businesses more efficient. And we have a really terrific way to bring AI into the picture in a very predictable and a very safe way that doesn't fall victim to the sort of hallucinations you guys were just talking about, and is really generating a lot of excitement.
Well, Alan, I was looking at some of the commentary from your call, and you were talking about that your platform is model-based instead of hand-coded. Now, I have to admit, as someone who is not a coder, that went over my head. But how would you explain how your approach is different?
Broadcom sitting here at the high.
So the way we think of life is very much vested in workflows, life cycles. So if you think about the things a business does, maybe they onboard a customer, or maybe they sell something, or maybe they open a relationship up with a new supplier. Each one of those is a workflow that has stages, and steps, and activities that may actually talk.
Okay, JP Morgan breaking higher now.
People in different settings.
Okay, goes the S&P is starting to move too. Okay.
People who actually are involved in it and the more technical
those calls are working.
To be able to understand what the business is trying to do. And then what our software does is it executes that model. And now with AI, we can use AI in building that model to make it just smarter and more responsive and tremendously easier to do.
Well, and you heard us just
okay, S&P is starting to work.
Sort of employment trends could change as a result of AI. Are you able to do this kind of thing now with fewer workers, and are your clients able to as well?
Well, I think this will make our customers more efficient. And I think in the short term, it's more that things that they would not be able to do otherwise, they suddenly are able to do and get that efficiency.
Okay, these lottos are doing well. S&P 500.
Then suddenly making the whole business tremendously more productive.
Okay, this guy's boring me. Sorry, he's boring me. Let me listen to JT.
Roll my potential short option if it kind of moves against me. It gives me a lot more leverage.
Yeah, Apple looks like it's looking good there, Corey. Okay.
There's also more liquidity.
Maybe some Friday calls at the money.
Those are the considerations I do when I'm looking at earnings, but those are what I would look
50 deltas at the money.
Can you share
Apple
Equity Hub Gamma for Google with vol skew? It looks like negative gamma.
Yeah, it looks good.
But flattish.
Okay, S&P. All right, just kind of sitting here. S&P was starting to work, and now it's just sitting here. Okay.
Yeah, I would say this is positive gamma.
Okay, JP Morgan breaking higher. JP Morgan breaking higher.
Because we're looking at an iron conduit trade, we want positive gamma to dampen realized volatility and not move a lot, right? So this is encouraging. I'm going to continue looking at this when I hang up this call. Let's see, is there any more questions? Jay asked the question, what does DP and DC mean? Delta put and delta call. So if you're looking at the 40 delta put, it would 40 DP, 40 delta call would be 40 DC. Now, why would you look at, why are we calling it the put versus the call? Well, if you look at IV for an in-the-money option, you'll notice that its IV is wrong. It's also bid-ask is considerably
What's
lower.
up, bro?
And that's because it has intrinsic value. When an option has intrinsic value, the way it's priced, it
What's the matter?
doesn't match
Netflix.
actual
Earnings?
expectations of its actual true price.
Isn't
The
Netflix
way to
earnings
get
soon?
that is to always use the out-of-the-money.
No, that's
You can do some
Google and
interpolation
Tesla
and some
today.
fancy magic and stuff, but that's essentially what you're going to do. So that's why we use
You want me to make you some lunch? Do you eat anything?
specifically
I'll make a tuna fish sandwich,
indicate
dude.
that it's puts versus calls. You can see which side of the curve.
Okay, JP Morgan at the high. Meta's starting to give you a potential higher low. Meta.
Can you help me understand how IV is trending forward? Yeah, let's take a look.
Okay, I might take this S&P Lotto trade off only because I have a nice profit and it's just kind of stalling here. So I'm going to take profits now and come back and look at this in a few. Okay. All right, I'm going to take that profit right there.
This also indicates that probably earnings is in this, just looking at the fixed strike matrix, because you'll see that typically like demand will be out of the money.
Microsoft, no follow through yet.
There's a lot more risk reward value there, right? Buying an out of the money call, if you get a RIP, it works out great, right?
Okay, S&P. I just sold a few S&Ps for about $25, $30 per contract. Profit. The second trade, the first trade was really good. That one zipped higher with the EU news that came out. The S&P 500. That those lotto trades, those lotto calls did very well. Didn't get the high of the day. They were up like $800 per contract, and then quickly came in on a wick. So looking for more upside. If we start to move here and start to catch some momentum, I might trade S&P again. That'll be the third trade today. Let's see what that dealer hedge flows say. Dealer hedge flows are flat.
So if I were looking at options in the equity hub, I would expect that this 30 DT cycle might be slightly more bullish, and then the shorter term might be slightly more bearish. If I was looking at the equity hub, let's kind of take a look. Hey, we nailed it. Cool. So we are getting that kind of negative gamma. We can kind of see that impression here. It does look like as you get further out of the money, you do have that longer term is more positive gamma. It is more indicative, but you are seeing that shorter term be negative gamma. You can see next expiry is negative 2.7 million. That's how you can kind of reconcile what you're seeing between a volatility dashboard, whether you're looking at fixed strike, volatility.
Okay, Broadcom's trying to go. Watching the hedge flows here.
Trades are good for a typical smile. So a typical smile, the best trade is, hey, we're not going anywhere, right? Like, so it is the flattest part of the curve, right? So
Okay, S&P. Watching the flow here on the S&P. S&P cash.
That's the best trade for it. Now, defined risk.
This is S&P cash right here.
That kind of iron condor standpoint.
Okay, there goes Amazon. Amazon on the move.
Who likes to be more bullish in the market? Maybe you only want to put the put spread in. You don't necessarily want to put the call spread in. And that's totally valuable. You could look at an iron fly, but when you're looking at an iron fly, realize that all of your volatility is now concentrated at the money, and you really need to carry that trade throughout expiration because you're at the money with both of your strikes. You don't get any of the decay that you would get. So
Okay, JP Morgan at the highs.
You don't really get any of this because you're at the money, essentially, unless your trade's blown up and then your options just decrease in value.
Okay, let me look at JP Morgan here.
But if it stays at the money the entire time, the kind of iron fly stuff is.
Yeah, JP Morgan starting to run the upper Bollinger Bands. This is JP Morgan. Starting to run those upper bands. The 9, 21, 50, 200-day all pointing up and to the right. JP Morgan. Looks good. RSI is rising. MACD's turning. Stochastics is moving higher. So we could swing this another day. See if we get a resistance at 296 tomorrow or today. If the Bollinger Bands start to open up, look for a fast move. If Bollinger Bands open up top and bottom, look for a fast move.
should be overall. And if we like go out to 90 days, like it's even worse. So maybe with it being this low historically, I would potentially want to buy volatility, right? Like, because it is very, very cheap overall. But I don't know what kind of volatility I would want to buy. In this case, you typically might want to buy something that's the money and then out of the money sell something. So like you could be a diagonal or you could look at
Apple looking for it to lift. Microsoft looking for it to lift. Maybe the S&P will bounce another leg higher.
But you need to determine, is the smile cheap volatility or expensive volatility, right? If this solid line was directly above this cone.
For some of you swing traders, people who are investing time frame, okay, there's nothing here that tells me to be bearish. New York Stock Exchange breaking out to new highs, okay? We're breaking out to new all-time highs. Bullish trend, 921.50, 200-day are all bullish. Prices above. Okay, so that looks good. IWM, let's see what that looks like. I saw Mike, was it Mondo? You had puts? Okay. At highs, double top here, triple top if you look over to the left. Weekly IWM. Okay, maybe some resistance here at 229, 230.
You want to buy the option.
The Qs look good. Okay, let's look at the New York FANG. Everything is looking bullish to neutral. Okay, we got a nice little bounce. It's still inside this channel, 921.50, 200-day, all up and to the right. RSI is fading, a divergence there, so that needs to be corrected. Watching Microsoft here. Microsoft. Okay, S&P looks like it wants to go again. If I can take another trade on S&P if this starts to go. Same strike, 63.50. It looks like it wants to go here. 63. Wow, can we get up to 63.55? Those are cheap. That today's 0-day 63.55s are cheap. They're cheap at 70 cents.
Be aware of those kinds of concepts and just understand this. Now, if you're looking at these, you can find times where, hey, this is not just a good trade now, but I still think we're going to not move very far. I would just want to let this almost expire. And then Friday afternoon, I just want to roll it because we're not going. And like you can follow a calendar spread and do that and maximize some of that value, but you're adding some risk. You're changing your trade slightly. You're not just using the calendar spread, you're using the multi-durational calendar spread, right? So there's elements there that you got to look into. But yeah. And I think that is all of the questions, and we ran right at time. So if anybody has any further questions, I know today was a lot of theory and a lot of discussion, but just let us know. Kind of going in here, this is all the stuff we covered. And then here's where you go for all the other stuff. Now you'll notice when you go to sharpen your skills, the actual sign up isn't necessarily released. We have a couple of things that kind of in store.
Okay, S&P looking for a push higher.
Retackle one of the topics again, just for clarity's sake, and open it up to other members as well and non-members. We're also going to be looking at ordering and specifically tailoring which next tool we're using and which next tool we're going to talk about. So keep an eye out on the page. You'll also hear from us in Discord. If you have any other questions, let us know. Have a nice day, guys.
All right, S&P is just kind of stuck here. If we get a little snap to the upside, those 63.55s are very cheap for a reason. They're 0-day. Okay, sorry, Avinash. I got sidetracked here. Let's see. Users. That's what's going on. Okay, analytics. Users. There we go. All users. Okay, looking for some movement here. Okay. There goes JP Morgan. JP Morgan moving a bit more. Okay, with the exception of Tesla and Google, most of these are moving higher. Amazon looking good. Apple's trying to pop. Meta dipped, looking for a B pivot on Meta. JP Morgan at the high of the day. Microsoft just sitting here, but looking okay. Look for a nice little pop. If we run up to new highs, wouldn't be surprised. There's nobody up here to sell to us except for people who bought on the high right over here. On the break higher, we sold into strength, waited for the pullback. Looking for another pop now. The 63.55s are a 40 delta. Actually, that's for 25. That's for Friday. Sorry. Misspoke. 63.55 is a 11 delta. It's just above the high of the day. So if we do get a push up to the highs, these could double up pretty quick. They're trading 65 cents right now. 63.55s. They are a lotto. There are 12 deltas. So the 40 deltas are 63.45. And those are going for $3. Looks like we could get a move here. About to pop, looks like. Watch S&P. Okay, here goes the S&P. Futures are starting to go. Futures are turning. Futures turning. Futures a bid right here. Okay, looking for a pop. AMD looking good there, dollar. Thank you. AMD, for those of you who stuck with AMD over the last few weeks, once we moved above the 50-day back in May, this one just keeps respecting the 9 and 21-day. There's no reason to believe that that won't continue. Okay. Okay, looking good. There goes IWM pushing a bit higher. Okay, let's check the hedging flows. Hedging flows here. S&P 500 starting to move higher, as you can see. Okay, looking for a pop. Okay, looking good. Trading at all-time highs. Watching that dealer hedge flow. Okay, let me go check SPY here. Let's see what the SPY looks like, if it's doing the same thing. SPY should be doing the same. Yeah, SPY, see the dealer hedge flows on SPY? Okay, those are starting to rise again. Okay, so if we can pop above this level, maybe we get one more shot to the highs. S&P. Tesla. Okay, Netflix flat at the lows. We got Apple showing signs that it might pop. Okay, hedging flows. Nothing here at the moment. We're at the highs. SPY. Let's see. Tesla pulled back. Okay, Tesla pulling back pretty quickly here. Tesla pulling back. Apple hedging flows should be rising. Last time I looked, gradually rising. Okay. Okay, you can see they're gradually rising. They're flattening out, but starting to turn up now. Okay. Apple on screen. Apple. Okay. Okay, can we get a pop? I'd like to get a pop on the S&P. Head towards that 6350. 6350. Let's go take a look at that real quick. See what the hedging, see what Gamma is telling us. Okay, 6360 is still the major level here. Okay, so if we run up against that, that's a 99 percentile. You see that? 99 percentile? That's telling you it's more than likely going to see resistance. 60 minutes ago, we had 150 million in Gamma right there. It tapered off 30 minutes ago. Now it's moving back up again. So they're buying. Looks like they're buying up here, 63, 65. Dealer hedge flows. The dealer is long. This is positive. So whoever is short up there. So that's resistance overhead. Tesla pulling back. Okay. Come on, let's get one more leg higher in the S&P. Let's get one more leg higher, S&P. Okay, JP Morgan's still pushing higher, JP Morgan. Okay.
It's going to be interrupted. And, even if you see inflation, I mean, and then what role does gold play in a portfolio also if you're trying to hedge against inflation?
Yeah, and I would say not just gold, but also like things such as like Bitcoin and so on and so forth are all really interesting things. And it's not to say it will happen. It's saying that if it does, what do you have in place to defend against that? And that's what's great about, let's say just even taking buffer strategies as an example, you're still
Microsoft's starting to move. Microsoft.
That's the
pop.
thing is that like getting people to stay invested.
Microsoft popping. Let's see what the flow looks like on Microsoft.
Can be a really big benefit to everyday investors.
Microsoft.
Keeping them invested.
Microsoft flow.
With these types of risks on
not quite.
We're at all-time highs.
Price is moving, but watch the hedge flows. That needs to turn up too.
Coming up, travel stocks reporting earnings today. What that tells us about the
NVIDIA turning back up. NVIDIA hedging flows. Let's look at NVIDIA. NVIDIA hedging flows gradually moving higher, but it's basically sideways for the day. Basically sideways. Okay, Meta turning up. BC pivots. Meta turning, BC pivots. Let's look at Meta real quick. Look at the flow on Meta. Okay, Meta flows are turning up. You can see that right there. Meta flows are turning up. SMR pulling back. SMR, S&P, no follow through. Okay, Apple's starting to push a bit more. Apple starting to push a bit more. Okay, dealer hedge flows on Apple. Watching that. Okay, where's the call wall? Call wall's 220. Okay, we got $7 to go. The upper call wall's 220. Apple. Meta's looking good.
Transition story. Solid state batteries are very much being seen as some of the answers.
Okay, Apple.
To, range
Apple's going more.
we've seen around the EV space. This is obviously part of the energy storage story as well. As I mentioned, it hit a 52-week high last week. They do like the positive.
ABVX. ABVX. Nice move on ABVX. Wow, that's a big gap up. Okay, S&P, Apple. Apple's starting to move through this pivot. Okay, Apple's starting to move through this pivot right here. Okay, starting to move. Tesla pulling back. Okay, I'll probably put together a trade later on Tesla. It's only 6%. Normally I wouldn't do much with it, but we'll look to take some we'll look to take an iron condor on it. Google, same thing. Probably some profits on Google, some premium selling. Okay, watching Apple here. Okay.
Yes, absolutely. Investors very much looking ahead to that report. And, they do want to get more updates, certainly on the company's progress, where it's at as far as the solid state battery technology, which is really behind the EVs. Some say they want more details before becoming more constructive, certainly on this stock. So hopefully that can happen this afternoon, because, while there is a lot of merit in sort of these important milestones that it's been making with sort of the Cobra technology, etc., there are some risks and concerns, as far as sales are concerned. It does expect its first customer launch next year, but, investors certainly want to hear about that, where they're up to as far as an update on that.
Your peers in the hotel business, what are you seeing in terms of the timeshare business? How would you characterize it?
Extremely resilient, extremely consistent, and although we just reported Q2 earnings, We're deep into the summer travel season, 3 weeks into July or 3 weeks into quarter three, and nothing seems to be changing. The uncertainty that's out there today in the macro environment, I think caused a lot of people to pause early in Q2 and say, where's travel going? Leisure travel, as we learned coming out of the pandemic, is something that people will not give up until they absolutely have to. And what we're seeing is some minor modifications on how people are traveling, but demand equally strong this year as we saw this time last year.
And Mike, how much of it is new timeshare owners versus that sort of steady revenue that you get from folks who already have them and sort of revenue from them swapping, trading up, for example?
Well, it's a great question, and it's a real testament to our brand. About a third of our transactions are to new owners, and the remainder is owners buying more. And when you think about what that says, is that when 2/3 of your owners are buying more time every year, it says they're satisfied with what they own. Interesting statistic is our owners take about 4 to 5 on average vacations with us on an annual basis, which represents over 50% of their vacation time. When you first buy, you're buying maybe half a week or a week of your time and testing the waters as to, is this the type of product I enjoy? But the consistency, the value that's created, and the flexibility means that people come back and they buy more. So yeah, we've seen an incredible loyalty, incredible level of satisfaction. In fact, about 98% of our fully paid off owners stay with us on an annual basis. It's an incredible retention rate.
And we were just showing some of the demographic data too on that screen, that 65% of your new owners aren't boomers, right? They're younger, Gen X,
Right.
Millennial, Gen Z. Presumably when they sort of trade up, when they buy more time, maybe that's because they're also entering retirement and that's one of the ways they want to do it. So does that give you confidence though that there is that pipeline for the next generation when they retire and can spend more time on the road and traveling?
You've gotten it exactly right. We see a different purchase reason depending on your age. Across the industry, the average new owner purchase is 38 years old, which is right in the heart of the millennial generation. Those people are buying really to enjoy amenities and consistency in a brand they trust, whether it's us or another one of the brands in the space. That's their motivation usually for buying. As you use the product and realize you have a lot more time, or you move into the boomer years or the late Gen X years, you start to have grandchildren and you want to vacation with them. So you buy either more time or more space so that you can have multi-generational travel coming together. And our product allows for the flexibility from a family that's recently formed that's looking to vacation in some quality accommodations. That's your younger first-time buyer, and then as people buy more, they're buying for different reasons, really to spend time.
All right, just watching Apple and Microsoft grinding up. Amazon looks like it wants to go. Meta looks like it wants to go. Tesla with earnings, Google with earnings, they're not moving much. Tesla did fade from the high of the day. Netflix is flat. Coinbase pulling back with Bitcoin. Give it a few more days. Probably going to base up here, Coinbase, and give us a better setup. Google has earnings tonight. I might do an iron condor on this one. It's just kind of sitting here right now. Bollinger Band's pretty wide. We'll just check Google real quick. Google. Google.
We've seen it noticeably fall off in the U.S., but for us, who has plenty of resorts in Canada, they're still vacationing, but they're doing it within the Canadian borders. I think lastly is we've been watching very closely
Google. Okay.
To our resorts, because that tends to indicate for us that, hey, I'm a little more hesitant.
Okay, let me take a look at Google while Apple is doing what it's doing. Google, I'm going to sell some iron condors on Google. What time is it? It's going into 2 o'clock soon. Google. All right, so the expected move on Google is what? Expected move on Google. Earnings.
they're still vacationing and they're not getting distracted by macroeconomic news to forego their leisure travel to 2026. They're getting on vacation this year and they're doing it in very similar
Okay, just
ways
waiting
that
for
they've
this
done
to
it
display.
Interesting. Mike, always great.
Tesla, a little short covering here.
Thank you, Julie.
Let's continue this travel conversation because Hilton is posting higher profit and revenue in the second quarter. It also raised its earnings outlook for the year. Still, the hotel operator's revenue per available room fell 0.5%
Okay.
due to occupancy declines. Joining me now, Chad.
Google, we got about
Analyst. It's good
5%,
to see you.
6%.
So, as we are looking at
Okay, looking
these
at Google
numbers,
right
it
here.
looks like
Earnings
the
implied
company did
move.
trim its net income
IBM,
forecast a
Tesla,
little bit,
Google, CMG, all of
although
these.
some of its metrics look good. What's your read on the
That's cool. I didn't notice this feature before.
Thanks for having me.
Tesla 6.4, Google 5%. These are kind of low. You could still do a Condor or whatever on it, but you're not going to get paid as well.
Business travel. Their third quarter guidance came in a little below expectations and where consensus was.
This is for the stock, not the option. Okay, so Corey clarified that yesterday. Talking to, there goes Amazon going.
Particularly calling for more of a business travel recovery in the back half of the year. And then as it relates to the leisure traveler, as your last guest talked about, I think things are fine. I think consumers continue to prioritize experiences. And
Yeah.
This summer, FX could be.
I base the Condors on the stock price, not the option price.
Leaving the country is a little bit more expensive this year. So as we've seen, people might stay closer to home and vacation with try-to or shorter haul flights.
Well, and I was talking earlier too about what we heard from the airlines, which seemed to be that sort of full service premium customers were holding.
Okay, Microsoft still grinding higher. Microsoft.
Lodging world as well.
Absolutely.
S&P looking for another leg higher. S&P.
Trends, revenue and occupancy in the United States. Those higher end full service brands continue to outperform. I think that's been
Okay, Apple starting to grind. Apple looking good.
Certainly calls into question what's going on with that lower end economy chain scale focused.
Okay, Tesla short covering on Tesla. That little drop in Tesla. Somebody probably took some profits off into that little fade. Amazon looking good. Amazon flows.
I think people extended their budgets.
Amazon flows look a lot better. Amazon flows.
So people in that luxurious level were spending a little bit more.
Amazon flows look the best. You can see the flows here on Amazon. We just checked the chart. Let me check the chart. Amazon flows are bullish right now. Okay, where's the nearest buyer block? And where's the nearest supply? Okay, we're right at supply right now, so be a tough trade unless it gets through 228.50 to 228.60. Watching Amazon here, probably gets going through here.
Which is a key focus for analysts.
Amazon flows.
I think one of the reasons why lodging stocks outperformed in 23 and 24.
S&P popping back up. Microsoft looking better. Microsoft looking better.
Continues to receive praise from investors. It was about a 10% outperformance for the group in 23 and 24. So we're looking at these stocks trading, around 30 times earnings, which is where we see high growth stocks.
Okay, Microsoft, go rip again. See if we can get a nice little rip like we had earlier. Apple moving now. Apple on the move. Amazon looking good. It is up against supply. Look at the difference between Amazon and Apple. Apple has a better setup. Apple pushing through this area. You can see where supply is relative to where price is. Supply is way up here versus Amazon, where supply is right where we are right now. Amazon's, if we get through here though, we could see a pop and head towards that 228, 230 level. Okay.
Really bigger and slightly broader. I think high is kind of
Amazon.
So bigger isn't better. Better is better. It's kind of their mantra. They've also made some acquisitions in the past couple of years. They acquired a company, Playa Resorts, that would be Caribbean markets. They get into the all-inclusive
Microsoft.
and they've acquired some other boutique types of portfolios around the globe. We like them because of where valuation is. It's a
Apple's still looking good.
transformation, right? They're selling.
Okay, Netflix turning the corner. Google's starting to turn up. Google.
So I think as they sell these assets, and we're seeing prices for luxury goods, whether it's hotels or sports teams, right? They rank for prices. So we think there's a good market for.
Nice job there, Mondo.
To hit the mid there, and then as they bring in the fees.
Tesla turning up. Tesla short covering.
Multiples that we're seeing for some of the other hotel corporations.
Tesla shorts covering. Apple driving higher.
Obviously, on the sort of macroeconomic front, there are a lot of conflicting signals. So, what is all of that going to spell for consumer spending, not just on watching, but on all of the stuff that you cover?
Amazon.
Every month is different than the prior month, right? I think in every quarter we're seeing.
See if Amazon can get through here. Apple looking really good, though. Apple's looking good. All right, Apple's on the move. Okay, so the entry.
In 26 and 27. Across our coverage, particularly in the gaming space, we're still
entry earlier at this level right here. Okay, that was the entry right in this area. Okay, so use your risk reward template. Using your risk reward template, you can see 2 to 1, 3 to 1, almost 3 to 1. If we get up to the high, that's close to 3 to 1. Apple's starting to move now. Apple.
What we've seen in the past couple of years, there was a lot of turmoil around the election and then around Liberation Day, but there's a lot of wealth that's been created. Employment still looks good, gas prices are low, and the wealth creators have been high. So we expect people to spend on that discretionary tail, which is a little bit more cyclical than other consumer areas.
Chad, good to see you. Thanks.
Thanks, Julie.
Coming up, we'll be checking in on the NASDAQ and some movers, including Lucid. You're watching Market Catalyst.
Apple. All right, looking good, Apple. Supply.
This is your AI advantage. Get a free demo at oracle.com/application.
Dispatch, this is Mindy at Swift Service. Coming to terms with the dying AC unit is tough. I know because I've been there. I tried to get my old unit to last just one more summer, and boy, did I pay the price. The longest summer of my life. So trust me, if you need to replace your AC, just call Swift Service.
Okay, here we go. Apple's on the move. Corey. Okay, Apple driving higher.
Visit followthesnowman.com to schedule your free estimate.
Okay, looking good. All right, so if you took that entry earlier, we talked about Apple. Okay.
This is the ultimate challenge. Can you hear that?
This cold ain't no joke. Might be frostbite.
This place will crack.
Apple moving. Apple. Okay, looking good. Okay, Apple's still going, looking good. S&P should lift a little bit, especially if we can get Microsoft to move. That's 13% of the weight of the S&P 500. All right, so it's been a nice day. It's 1:30 on the East Coast. I'm your host, Cousin Benny, coming to you from theclosingprint.com. Looking good, looking good. It's Wednesday the 23rd. Fed is next week, right? The 30th.
Welcome back to Yahoo Finance Live. I'm Allie Canal, live at the NASDAQ. Let's get a quick check on the market action about 2 hours into the trading day. And we're still seeing those gains holding up across the board here.
There goes Apple. S&P's on the move. Okay. This next leg up, maybe take some of these lottos. If you took the lottos, you want to take those off into strength. Okay, on the leg up. Don't get caught on the leg down. Apple on the move. Okay, so Meta's starting to push. So is Google. So is Amazon. Okay, everything but, basically everything but Netflix is moving off the lows. Looks good. Netflix, I closed the put credit spread on Netflix. That's not working. Was working when it was above the 50-day, but decided, I guess they had other ideas for Netflix. Netflix probably going to build a base. It beat earnings, so I'll be buying Netflix in a couple of weeks, probably, I would guess.
This is one name that we're going to be watching very closely today. Those results due after the bell. Year to date, we are down around 17%. But since some of the lows that we saw when Elon Musk and President Trump had their falling out, we are up from that moment. So if we take a look at maybe a 3-month chart, you're going to see some of that choppiness. 3 months, though, up around 33%. So this is one name that's usually pretty volatile after these results. So we'll be tracking those very closely. Alphabet is another company that we will be hearing from after the close. So the start of a lot of these magnificent 7 players. But keep it right here on Yahoo Finance. We'll be tracking all of the market moves throughout the session. Now, for today's trading tickers, we're watching Goldman Sachs and BNY Mellon, Lucid.
Okay, JP Morgan at the high of the day.
Goldman Sachs and BNY Mellon joining forces to launch tokenized money market funds. BNY clients will be able to invest.
Okay, Apple, nice follow through on Apple.
Reported on Goldman's blockchain platform. Besides BNY and Goldman, BlackRock, Federated Hermes.
Okay, Google's starting to turn up.
Participate in that launch.
Google
now,
earnings.
Allie's still with me. Allie, the sort of tokenization of everything that maybe is coming. Interesting trend, especially coming to the sort of normally very staid world of money market funds.
Apple cruising higher now. Apple zipping higher.
Shift that we've been seeing across the financial space here, and the goal is to enable faster 24/7 trading, make money market funds usable as collateral or in digital payment systems. It ties into the broader push that we've been seeing in this post-Genius Act era towards more regulated financial tools with like stable coins, programmable finance. Goldman saying this would add real utility to a $7 trillion market that hasn't evolved much until this moment. And we were talking about the modernization, I guess you could say.
All righty, looking good.
Tokenization, stable coins, these are words that are more in the vernacular.
What happened to my Bitcoin
institutional
chart?
investors. It's a big
That's
moment
weird.
and a big shift that strategists have been telling us
Bitcoin.
has been a little underappreciated at this point, that this is going to be the future when we look at some of these trading possibilities here. So this partnership only illustrating that. Yeah, we'll see, I guess, what the demand is for this.
Next up, Lucid is partnering with several North American critical mineral producers to establish a stable supply of certain minerals that are essential for
Bitcoin.
making new batteries. The focus on domestic production will help reduce reliance on international sources. The shares up just a little bit here, but obviously this is a bigger story, right? And part of the bigger trend on the part of the Trump administration to beef up the homegrown minerals industry. The problem is there just aren't as many choices, right? Most of the critical minerals that are used in this country in manufacturing are indeed imported. So there are only so many sources domestically for this stuff.
Ah, okay. I see what happened.
Right, and like you were saying, a
I
big
see
push
what
from the Trump
happened.
administration to onshore a lot of that production, really improve that EV supply chain. The group is called MINEC. I believe that's how you pronounce it. Minerals for National Automotive Competitiveness. Partners include Alaska Energy Metals, Graphite One. So they want to U.S. source those minerals like lithium and graphite, which are key for a lot of the production of these EV vehicles. So really try and sync.
Okay, Bitcoin trying to bounce. Taking it pull back into yesterday's price action. Nothing to do there. Coinbase might be a dip buy if you're interested. Apple, nice move on Apple. Okay, I'm gonna took some lottos here on Apple for Friday. I'm gonna go ahead and take some profits into strength here as we approach supply. I'm gonna take a little bit off of Apple. Okay, that looks good. Nice move, Apple. Thank you very much. Okay, what's S&P? S&P is driving higher. All right, so got some lottos on S&P again. 63.55s. Need a little bit more on this one.
For AI data centers, those shares moving up by about 7%.
Okay, so Apple, nice move on Apple. If you traded that. I just want to point something out here. If you're taking a 2-to-1 trade, 2-to-1 trade basically sets up for a $2 move. Okay, a $2 move from 213.50 up to 215.50, 215. That's $2. A 50 delta call, 2-to-1, 50 delta call will make you $100, not including the implied volatility as it starts to expand. Apple's still moving. So a $2 move from the second buy order block. If you took it from the first buy order block, your risk reward's much better. Okay, you got a 3.5 to 1 up volume, 3.5 to 1 risk reward, plus you've got a 3-point move to the upside. So a 50 delta call would make you $150 per contract. Netflix is falling off a little bit more. So the decision to take off Netflix, put credit spreads, looking good in hindsight. There goes Meta, Google, Amazon, Apple, Microsoft starting to push now. All these are working. Okay. Apple. Let's see what Microsoft is going to do. Microsoft, a little shimmy shake earlier. Microsoft. Okay. Had a fair value gap earlier. Pulled back into, but didn't take out the stop completely. Okay, didn't get below the stop. Now we're moving back up into the range. Microsoft looking a lot better. Stop is below.
If a patient takes the proper preventive measures, you can keep our
looks good.
If patients use for clinical strength, it will actually
It's a much easier day to trade because the markets are moving higher for the most part. S&P is grinding higher. We've got most stocks moving higher. New York Fangs, so the nice bounce. Just got a few stocks that aren't working, like Netflix and Tesla. Tesla, still considering what I'm going to do with Tesla, if I'm going to do an iron condor. Google, I like the idea of Google iron condors, but we're only talking 5.5%. So it's not a big payday for the risk that you're going to take in trading the condors. So I might pass again. What did Texas Instruments wind up doing? Texas Instruments. Okay. TXN. Oh, big gap down. So down 11.5%. So the options were pretty good. Your numbers on the options, Corey, were pricing in 12%. So that's pretty good. What were you taking? The at the money options? I assume it would be at the money options you're giving me numbers for. So you got a 11% move. So you can see there, they priced in a 5% move on Texas Instruments, but you got an 11 to 12% move. So more than double. That's, yeah, wouldn't have been a very good trade unless we bounce and move back up above the 50-day before Friday. Apple's still pushing. I'm actually frankly surprised that Texas Instruments moved back as much as it did today. Texas Instruments.
The industrial sector is up over 30% off of those April 8th lows, while healthcare has barely budged. On today's episode of Stocks in Translation, we are taking a look at cyclical versus defensive sectors. And first, let's define cyclical sectors. It is those sectors or industries whose sales and profits swell in economic expansions and shrink in recessions, making their stocks swing more than the broader market. And a few examples here. We have consumer discretionary. That's the stuff that you want to buy as opposed to the stuff that you have to buy. We have industrials, materials, financials. So think the big banks there. Tech, and I'll come back to that in a second. Communication services, which is kind of an odd category, and real estate. So let's get back to tech there. Some have argued that tech should be in a class of its own, and also with the push.
So you were looking at the money at the time? Not sure.
But
Google.
especially at the upper end of the scale where you have the mega caps, a lot of those have become quasi-defensive in nature. So it's kind of there's some gray area there.
Yeah, that's for the options move. That's what I use. I use that.
Verizon, Netflix, and sometimes
I use that in the weekend watch list.
So let's get into the defensive sector definition. These are industries whose demand is steady in booms or busts, so that earnings and share prices move less with the economy. So they're a little bit more stable there. So we're instead of consumer discretionary, we have consumer staples. That's the stuff that you need to buy. Healthcare, utilities, and energy. Energy is an interesting one because it's almost counter-cyclical, but it is defensive in nature. It tends to outperform when the Fed is doing certain things in the business cycle beyond the scope of this conversation. But for here, we're going to classify it as defensive. This leads to the next chart, which is really jaw-dropping. This comes from Todd Sohn over at Strategas ETF Research. I call him the ETF whisperer. And this shows you all the defensive sectors combined versus two stocks, NVIDIA plus Microsoft, how much they are taking up in the S&P 500. So let's do the defensive. I'm going to trace these sectors out first. They started at 40% in 1990. And then since the early 2000s, they have just drifted down. They're only at 20% today. Then you take the Microsoft and NVIDIA combo, and NVIDIA only came to market in the late 1990s, and it was kind of steady here, but really took off.
Meta looking good. Meta working.
And all that. And we have seen that
Is that a California word? Bonkers.
Two stocks are now approaching the entire value of all the defensive sectors, and it just shows you how much investors have come to really rely on those cyclical names. Now, I'm going to show you a chart since the April 8th lows. This shows you ETF flows into cyclicals versus defensive. And in white here, we have cyclicals, and then in green, it's defensives. And what I want to show you first, both of these went down. Now, the April 8th low was a low.
All right. Microsoft going. Microsoft going now. Microsoft is going. Okay, here goes Microsoft again.
Now you contrast that with consumer cyclicals.
Okay, Microsoft looking good. Here you go, Microsoft. Big move, Microsoft.
About $2 billion versus about $4 or $5 billion of outflows for those defensive. So a pretty stark contrast that we're seeing there. Now I want to show you the S&P 500 in white here versus something I call relative, well, that's called relative strength. It is consumer discretionary divided by consumer staples. So XLY I'm using as a proxy for consumer discretionary, and then XLP is a proxy for consumer staples. You can see the S&P in white there, but I'm going to trace out what happened in this ratio of XLY to XLP, and you can see it got really interesting.
That's 4-to-1 if we make it back up to the highs.
Before the pandemic, we had that ratio consolidating. Meanwhile, the S&P 500 was hitting record highs, but then precipitous drop, and then we saw a huge rebound in cyclicals. And then after the bear market of 2022, right here, we got a rebound to massively new highs in the S&P 500.
Okay, nice move on Microsoft. Google, nice. Wow, that was a nice little run up on Google. If you took it, there goes the S&P. Okay, my S&P Lottos are doing well. Okay, S&P Lottos are doing well. I'm going to go ahead and take some profits off into strength. S&P Lottos on the leg higher. I don't care if I leave some on the table. That's okay. Nice profit. S&P Lottos. Okay. Okay. S&P Lottos just took some profits off.
Did you know there's more than one Captain America? My dream is a super team with all the Captain Americas. That
We can make it happen.
SPX Lottos. 63.55 took profits. Okay, those went for 85.
You can keep our enamel for a lifetime. If patients use Pronamel clinical enamel strength, it will actually help to protect the enamel for a lifetime. So I would recommend Pronamel clinical enamel strength.
Okay, there goes NVIDIA's turning back up. NVIDIA turning now. A, B, C, D. Microsoft looking good. Okay, Apple, nice trade. Okay, JP Morgan looking good. I'd like to take a lot of stuff off, actually. I know that, I know. What I mean is, I know if I take these off, that the market's going to just keep going. That's okay, though, because many of you are still in some of these positions. Love to see more upside for you. I'm not greedy. Okay, Palantir, that was a nice move off the low. Palantir, thank you very much. The dip buy on Palantir worked out. So that's still going. Palantir is still going. Palantir, dip buys on Palantir. I got stopped out yesterday. Palantir earlier working. Okay, S&P, I'm out. 63.55s, all out. We hit 63.85 futures. $63.85. Futures just hit 63.85. S&P 500. S&P 500 just hit 63, almost 63.49 there. All right, 63.60 as resistance. 63.60. All right, so I love when the markets are bullish because it makes trading so much easier. You just buy dips, look for the buy order blocks, set your stops, use your risk reward template if you use that on TradingView. Coordinate with coordinate with the hedging flows. Okay, hedging flows. All of these look good. Let's take a look at Meta. Let's see some comments on Meta. Okay, Meta grinding up, looks good. Meta's grinding up. Okay, Microsoft did well. Microsoft, let's see what else it's doing here. Palantir, still moving here, Palantir.
The early bird catches the games. This is Morning Brief Market Sunrise. Live from London, we deliver an early read on global markets. From overnight action in Asia to real-time sentiment across Europe's major trading desks and a live look at US futures. We cover the stories to help you, the individual investor, get the edge.
Okay, you're looking at PayPal for earnings? Okay. Okay, good exit on S&P. That was a good exit.
Meme stock mania is back in the market as retail investors pile into little love names like Krispy Kreme and GoPro. Meanwhile, the meme darlings of yesterday,
Okay.
literally open door and cold yesterday, are falling. Joining me now in this ever-evolving story is Tom Sosnow of Casey Live, founder and CEO.
All right, got extreme low tech alerts. Okay, so we got some selling coming in.
This thing keeps sort of rearing its head periodically.
Got some
right? And
selling
part of it
coming in
has to
here.
do not necessarily with fundamentals for these stocks, but maybe more for high short interest where traders see an opportunity to sort of push a squeeze through. What do you make of it? And does it tell us anything about bigger picture investor psychology right now?
Well, I think it's probably, it may speak to a couple
What the hell?
distant red
Toss.
flags, but I
Trying to
think for the
sell
most
here,
part,
and it's just
I
like
don't actually like the argument
bogging down.
that it's a short squeeze per se,
Create a
because
closing
most
order.
of these stocks, especially when you're talking about like
Okay.
GoPro at a buck and something, and you're talking about Open, which was $1, $2
Microsoft.
at the time. Most people aren't short.
Okay, took some
$1 or
profits on
$2. I mean,
Microsoft.
that would be pretty rare to have a short
All
squeeze.
right.
On a $1 stock. I mean, Cole's
All right, somebody sold right there. What was
when
that?
you start to think about, really cheap stocks, most people
152.
by that time. I think it's
Somebody speaking or something?
There's a lot of speculative money sitting on the sidelines, and it's
Meta still pushing.
more of a game.
I would take the opportunity to reduce your risk into this. We are trading at all-time highs. Meta.
Is that there's sort of a millennial nostalgia quality to this, right? When you talk about Kohl's or a GoPro, for
710.
example, that maybe is
Meta.
into this a little bit.
I think that's
Meta looks like it wants to go some more.
Discussion on Tasty this morning about it. We were talking, and I was saying, you know what? This is also the time of year. I know it's going to sound
Okay,
crazy.
Meta pushing a
This is
bit
also the
more.
time of year where there's no real sports to bet on because it's really just baseball, and we're kind of in between. All the other sports. Football season hasn't
What's
started
the matter,
yet.
Goose? You still hungry?
What
Jeez, cat.
better place to gamble than a zero commission, zero fees, in and out of all these little penny stocks for basically no money. I think it's just a lot of, again, it's a little bit of speculative fever, and it's not from a brokerage perspective, we like it not because of the buy-ins, because they don't really mean anything. There's no money in this. They're just getting people engaged, and if it brings young people into the marketplace, it's not necessarily a bad thing. I just think it's hard to make money.
Yeah, I mean, I guess maybe somebody is making money in this stuff, right? I mean, but it's also interesting to me because that, Tom, is a little bit of a shift as well. Like in the beginning of the meme stock boom, there was a lot of sort of hand wringing, like these people don't know what they're getting themselves into, and they could really lose their shirts. And I feel like we've sort of evolved from that, right? Like I think everybody knows you could lose some money. Like it is a possibility. Or do you think that that's not still well understood?
No, I think there was a couple of factors, like a perfect storm. If you're talking about like 2020, and you're talking about GameStop, and there was a bunch of factors, and there was a lot of professionals that got involved, on the short side of GameStop, from hedge funds to market makers, and that was a very different animal back then. Now it's a little bit different. This is very similar. I mean, this is almost pure retail, and this is very similar to just kind of like a meme crypto coin or something like that. And it's kind of just like it's pie in the sky. It's just a cheap shot. I think the way people are looking at it, and I wouldn't read that much into it, except when this stuff happens, the markets are usually getting a little frothy. Like a lot of the big names are kind of off the table because they've had such incredible runs and they're so expensive.
Right. I mean, it's funny also that you're not seeing a GameStop or an AMC or whatever really as much
Right.
participating in this current situation. If people are going to play this stuff, if they are going to, for lack of sports gambling, or if they're going to do this kind of thing, I mean, what advice would you give them as an experienced investor? If they're going to do it, what's the best way to do it or the best approach to take?
Well, I'm an experienced player because I've been around the block for a couple of four decades. But when it comes to this kind of stuff, like penny stock stuff, I'm just like everybody else. I mean, I don't have any edge. My preference, I'm mostly a derivatives trader, so I trade mostly options and futures. But when it does come to penny stocks and stuff like that, and this kind of meme stock stuff, I actually like trading the stock more than I like trading the options. I think the option markets on a relative basis are a little wide, just given how cheap the stock are, and there's a little less edge. I think these stocks are a better pure play. And like I said, they're transaction free at virtually every firm. So, and the bid ask spread's only like a penny wide. So I think if you're going to play the game and you want to take a small shot, you just want to, throw something out there and see what happens, I would do it using the underlying stock.
Do you think that any of these companies are in a position to capitalize on this? I mean, I think that AMC is probably the best example of that. I off the top of my head, can't think of any other companies that have really done a good job of that. Do you think, though, there's opportunity here?
I mean, I think that GameStop, when you look back, when history kind of talks about all this stuff, I think GameStop is the one that was able to kind of float some stock and raise some capital and change their model and all this kind of stuff. So I think GameStop got lucky. I think these other companies, it really doesn't have much impact. It's if any one of these companies like Kohl's or any one of these other companies were to try to go out and float either convertible debt right now or stock or anything like that on any kind of an uptick, they would just slam the stock. So I don't think it changes the company. It brings some of them back into play. I mean, it's great PR. If you've never heard of Open Door before, if you forgot what GoPro was or something like that. I mean, the PR part of just getting your name out there, that's not bad for these companies. But I don't really think that this is not a transformational or life-changing moment for any of them.
Right. Tom, fun to talk to you about this. Thanks for joining us.
Thanks for having me.
And that's it for Market Catalyst. I'm Julie Hyman. Thanks for watching. We got more Yahoo Finance coming up.
Are you ready to master the markets and, dare I say, become a better investor in the process? Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor picking up new trends or you're just starting your financial journey, we offer invaluable market insights and strategies from some of the most influential minds on Wall Street and the boardroom for key insights to help boost your portfolio, build your wealth, and make you a successful investor. Join us on yahoofinance.com, the Yahoo Finance app, your favorite streaming platform, and wherever you get your podcasts.
If a patient takes the proper preventive measures, we can keep our enamel for a lifetime. If patients use Pronamel Clinical Enamel Strength, it will actually help to protect the enamel for a lifetime. So I would recommend Pronamel Clinical Enamel Strength to all patients.
100 days. This is the ultimate challenge. Can you hear that?
This cold ain't no joke. Might be frostbite.
This place will crack.
By the History Channel only on Samsung TV Plus. 24/7 daily coverage on the NBC Sports Now channel. Go beyond the podium with daily highlights of stunning to win triumphant journey to July 5th to 27th.
It's time for Yahoo Finance's Market Minute. CME Group reporting better than expected earnings for the second quarter. The company also noting demand for its benchmark futures and options reached an all-time high. During the quarter, its average daily volume rose 16% to a record 30.2 million contracts. And Lamb Weston shares, they're surging as the company says it aims to deliver at least $250 million of annualized savings by the end of fiscal 2028. In addition, the food processing company is slashing 4% of its global workforce as part of a new cost-saving program. Lamb Weston also reporting a beat on net sales and earnings for the fourth quarter. And lastly, Cal-Maine Foods surging as well in today's trade as the company reports better than expected earnings for the fourth quarter. Net sales also topping expectations. The egg producer reporting a 9% increase in dozen eggs sold. And that's your Yahoo Finance Market Minute. For more what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing stocks.
Welcome to Trader Talk, where we dish out the latest Wall Street buzz to keep your portfolio sizzling. I'm Kenny Polcari, and I'm coming to you live from the Yahoo Finance headquarters in the heart of New York City, a global hub where deals are made, fortunes are built, and the next market move is always just around the corner. Next, I'm going to share my big take on Trump versus Jerome Powell. Sit down with Slate Stonewall's Dan Payne and then chat about risk and management, and then reveal my pasta crudaiola recipe. Right? So let's just jump into the big take. Trump's repeated calls to fire Fed Chair Jerome Powell are more than political theater. They warn markets, institutions, and anyone who believes in economic stability. Whether you love Powell's policies or you hate them, one fact is apparent. Central bank independence is one of the anchors of global investor confidence. When a president publicly threatens the head of the Fed, the message isn't about policy, it's about control. If the Fed is just another lever for political power, then the market's faith in the long-term stability crumbles. Rates become campaign tools. Inflation targets get hijacked. At home and abroad, every investor has to price in a new kind of risk. Will tomorrow's rate move be about economics or about politics? That's how you inject chaos straight into the heart of the financial system. History is clear. The more politicians meddle with the central bank, the
Look
more
at NVIDIA's flow.
and volatile markets can become. It's not about liking Jay Powell or agreeing with every Fed decision. It's about protecting the delicate machinery that keeps capital flowing and inflation expectations anchored. The bottom line, when Trump threatens to fire Powell, it's not just drama. It's a giant red flag for anyone with skin in the game. Respect the independence of the Fed or get ready for the kind of volatility that doesn't end with a tweet. The market might love excitement, but it craves stability. Undermine that, and all bets are off. I would love to welcome my guest today, Dan Payne. He's the Chief Investment Officer and Partner at Slate Stonewall. He's joining us right from Florida. He leads our firm's overall investment strategy. With over 30 years in the asset management industry, Dan has managed portfolios across the spectrum from institutional mutual funds to high net worth and ultra high net worth individuals and endowments, overseeing nearly $2 billion in assets. He's held senior roles at firms like Morgan Stanley, PNC Wealth Management, and U.S. Trust, and brings a deep experience in financial analysis, research, and portfolio construction. Please join me in welcoming Dan Payne to the conversation. Dan, it's such a pleasure to have you come up from Florida to join me.
It's just great to be here, and quite frankly, I think I brought the humidity with me.
Yeah, I think you did too. Actually, I think it's cooler in Florida than it is here right now.
Absolutely.
Oh my goodness, it's so hot outside. Anyway, look, let's get right to it because I want to talk about process and risk management. And given the volatility that we've seen, over the last couple of weeks, over the last couple of months, first it was with COVID, then it's with Liberation Day, most recently in April. How do you, as a portfolio manager, manage risk and really deal with that volatility?
Well, that's a great question, and I really think we're in a phase right now in the market. We're going to see more and more volatility. Agreed. So to take a step back, I think first you have to define what is risk. For a lot of individuals, risk is defined as losing money, or some people might define risk as not meeting a financial goal. academia and us practitioners, we define risk as volatility or standard deviation around an expected mean return. Correct?
Yeah.
But a lot of really elite investors define risk as the probability of a permanent loss of capital. And that's very important. And the biggest way to mitigate risk is really the only free lunch in finance, which is diversification.
Right.
And to be properly diversified, I think there's really three levels of diversification. You have level one, which is basically your broad asset allocation, your stocks, bonds, cash. And over the past decade, we've seen a move towards alternative assets and other illiquid assets as another asset class. So you want to be diversified amongst the asset classes, okay? The second level of risk control, and specifically within the equities market, is being diversified within your GICS sectors, your global industry classification sectors. And as of now, there's 11 GICS sectors, and people might think of them as the financials, the technology, consumer discretionary, communication services, industrials. So you want to be diversified amongst the different sectors, right? But then there's the third level of diversification, and that's where you come into the security-specific individual issues, and then within industry groups. So an example of that is that within the technology sector, you have multiple industries.
Right.
You have software, you have subsectors or industries. You have software, hardware, networking, consulting, semiconductors. So it does you no good if you have a portfolio of 15 to 20 names, but they're all technology stocks or they're all software stocks because you're not diversified.
That's right.
And people found out.
Okay, NVIDIA continues to ramp higher here.
Where the S&P was down.
Just listening to Kenny Polcari and some dude. Okay, NVIDIA, nice little move here on NVIDIA. Off this last buy order block, continuation. Nice pop on NVIDIA. What's the ATR on NVIDIA? NVIDIA's ATR is $4. NVIDIA's up 330. Nice little bounce here on NVIDIA. Okay, bounce at the 9 EMA, just above the 21 day. We got an ATR of $4. $4, we're up 330, so we could see a little bit more upside. I would sell some into strength if you have Friday calls, which I do. I'm going to go ahead and take some profits off into strength.
Because volatility actually, as a long-term investor, is your friend.
Okay, selling some NVIDIA into strength as we approach yesterday's high and the ATR for the day, $4.
That can overcome the emotion of the day and focus on the long term because they have a specified process and a definition of what they want to own and why they own it. I mean, Peter Lynch came up with that definition.
Right.
Know what you own and know why you own it. Right. So that gives you the conviction to be able to shop for merchandise when the merchandise is on sale. Because our industry, I think, is really the only industry in the world that when the most reluctant
they
to
run
buy.
out the door.
Yes.
They want to sell everything.
And it needs to be the opposite.
Right.
Of course, Warren Buffett.
Okay, looks good.
You want to be greedy when others are fearful.
Right.
Correct?
Yeah. No, 100%. And and I use another analogy, and I use it all the time because you hit the nail on the head. When Bloomingdale's has a sale, they mark everything down 30%. Everybody runs into the store and they buy 3 of everything because they're on sale. Right. And I think to myself, well, why do you have that same mentality when Apple goes on sale or Amazon goes on sale or JP Morgan goes on sale? Only because there's nervousness in the market, not because anything fundamentally has.
I think that goes back to how we started this conversation. It's how do you define risk? Right. Okay. If you define risk as losing money, yes, you're going to be very reluctant. But if you define risk as a permanent loss of capital, when the merchandise is on sale and you're buying very high quality companies cheaper, you make your money not when you sell the stock, but when you buy the stock at a cheaper price.
Right.
And that's a very hard emotion to overcome.
It is a hard emotion to overcome, and you and I deal with it every day. Well, deal with it when the markets are under pressure, when the volume. Certainly in April, I was fielding calls all day long. People get nervous. What should I do? Should I sell? No. Just sit tight because to your point, know what you own and why you own it. So let's talk about that. Let's look at this portfolio. Let's talk about what's in there, right? The biggest names and the biggest sectors, all fine. And in fact, we've seen the market rally. Most people, I would say the majority of people, if you stuck to the plan and you didn't panic, you're better off today than you were.
Much better off. I mean, a great example of that is what we were down with 19.8% from closing high to closing low on April 8th. And currently, as we sit here today, we're up 25% and roughly 67 trading days since that intermediate low.
Right. It's been a very much of a V. And I'll tell you, I was one to say I didn't think the V was going to happen. I thought it was going to be more volatile. But in fact, the V did happen, and now markets are higher than where they were, and many of those names are higher than where they were. Right? Sure, they get beaten up, but again, the good names get beaten up, and they're the first ones to rally right back. Because when people settle down and they're not emotional, they realize, why did I sell that stock? I got to get back in.
And the cream rises to the top. Now, high quality
all the time
recovers quicker
all the time. Okay,
and that's where quality wins out.
Quality always wins out. All right, hold on 1 second. We'll be right back.
Mis hijos no me pueden ocultar nada. Especialmente cuando han estado usando papel higiénico que se rompe. Un momento, jovencito. Usa Charmin Ultra Strong. Limpia mejor, es más seguro. Charmin Ultra Strong tiene una textura de tejido en forma de diamante más duradera y limpia mejor para que puedas usar menos. Mucho mejor. Hey, vas a hacer de limpieza y este también. ¡Súper! Disfruta ir con Charmin.
Okay, NVIDIA's still going, NVIDIA. All right, NVIDIA is still moving. Okay, Meta's at the highs, near the highs of the day. I took some Meta off into strength. I still have some calls for August, I believe. Let me just check here. Meta, NVIDIA. I have August calls for NVIDIA, the 175 strike. Okay, so a little bit more upside. These NVIDIA calls are doing well. All right. Amazon. Nice move on Amazon. The 230 call. I have the 230 call on Amazon. Can we push a bit more? Okay, Google. What time is it? It's 2:15. All right. I need to start thinking about a trade on Google and Amazon. Google and Tesla, rather. Google. Let me take a look at the weekly.
emotion and the fear.
Google, we're trading 191. Can we get above 200, 205?
How you overcome that is by having conviction. So how do you have conviction?
Let's see.
So you have to have a defined investment philosophy and process that you hang your hat on, that when the going is tough, we know with conviction you can buy on the cheap.
And so I think the key word is there is you have to have a process. And you have to feel comfortable about your process. And so you've designed, I mean, you obviously have a process, but you've designed this process over your industry. So talk a little bit more about that process for you.
Sure. So the process is one part of it. So I mentioned the first part. So we like to call it the 4 P's, which leads to the 3 R's. So the 4 P's is philosophy. You got to have an investment philosophy. The second P is your process. Okay. The third P, and this is very important, is the people behind the process. You got to have a good team of analysts, portfolio managers, and an investment committee behind you. Okay. And then the 4th P is obviously performance, because what will happen is that the 3 P's will lead to the 4th P. And the way you generate performance over time is through that process and philosophy. You buy things on the cheap. You make your money when you buy a stock, not when you sell the stock. Right. You buy at a good, attractive valuation. And so the 4 P's, philosophy, process, people, performance, what you have to have that is the 3 R's. Your investment process has to be rigorous, routine, and repeatable. Okay. So
Okay, NVIDIA's still going here. NVIDIA's just cruising.
Through that, that's how
NVIDIA cruising higher. I don't know what happened where with NVIDIA. Something's going on with NVIDIA. Big move on NVIDIA.
Census and the herd says sell. Things are falling apart. The world's coming to an end.
Right. And it's so funny because when Liberation Day happened and everybody panicked, the mood went from, in the weeks prior, the mood was very bullish and then suddenly the mood turns negative and everybody's screaming out, which is to the point.
Okay, NVIDIA 173. You can see over here on the left. Okay, you got a lot of positive gamut 173. 173. 173, 167, 173 is the peak there. 173 is that peak.
Because the market is nervous. That's not a reason to buy those stocks. That's actually more of a reason sell those stocks. That's more reason to buy them.
Yes, that's exactly right, because the underlying fundamentals of those companies have not changed. And so all you have is just a temporary disconnect from price and value.
Right.
So in your investment process, you should be able to determine what a stock is valued. Okay.
Right.
And then there's temporary dislocations both above and below the intrinsic value of the stock. And so therefore, when you have a market dislocation, that is the opportunity to load up on a company at a lower price than where you
Okay.
Right.
167. Okay. Negative gamma gets intense here above 173. Okay.
Sell your Apple. I said, sell my Apple. I'm going to back up the truck and buy more. Absolutely. It's crazy that listen, first of all, I said to him, Apple makes $100 billion every 3 months. Think about that just for 1 minute. $100 billion every 3 months. And so, no, I'm not selling Apple. But also, the story happens.
That's NVIDIA. NVIDIA starting to stall here. NVIDIA stalling a bit. Should I sell some more into that strength? Looks good. BP is fine. Webull. I had I sold some 17 covered calls on Webull. Brought my cost basis down below 14 on Webull. JP Morgan. That's trading at highs. JP Morgan.
You see the separation, right?
PSLL.
From the very beginning. That's why they get people like you and that's we have the process. That's why the people like you and me. But if people are doing this on their own, then they recognize
Microsoft's still going. Microsoft.
And that's when it becomes, I think,
still going.
But I think what's really interesting, and I think you make the point, it's really about having a process. Whether you're doing it with a wealth advisor and manager like you, or whether they're trying to do it on their own, they have to have a process that they're following. Yeah, and
Apple flagging at the high. Meta, nice move on Meta. Amazon back up to the highs. S&P at the highs. Sold my S&P lottos from earlier. That was a good trade. About $1,000 per contract on the first one. The second one, $200 per contract. Nice day today for the S&P. Uber, nothing on Uber. UMAC. United Health with a little bounce today. United Health did bounce, right? Yesterday, UNH. Last time I looked at it, we had a bullish day. So it looks like it's basing down here. Remember, 320 is the level where I'll start to consider adding. Now that we have this additional pivot at 326, I probably won't add until after it gets above 327. If it does, I have January calls on United Health. Tesla turning back up. Let's see what Tesla's doing. Tesla. Okay, Tesla.
You get frustrated when it happens, but then if you're agile enough, then you take advantage. Correct. One factor.
Okay, you can see where was that? 185. 185 things start to taper off. There's very little volume out there. 185. 200. 190 might be the short side. The call side, these start to flatten out about 400. 375. That 20-year window, the annualized return for stocks was 9.9%. Right. The annualized return for bonds was 6.8%. This is Tesla. Nvidia is still going. Nvidia is still going. Let's look at the flow on Nvidia. Flow on Tesla turned back up. Broadcom back up to the highs. Rob, Broadcom. What's CoreWeave doing? CoreWeave just turning the corner, building a base. CoreWeave. We got a buy signal on the futures 60-minute last hour. Okay, so for the 1 o'clock hour, we had a buy order or a buy signal on the 60-minute futures. We got a buy signal. We're currently on a buy signal for the last hour and a half. Okay, Nvidia. Something's going on with Nvidia. Okay, something's up with Nvidia. Wow, look at that move. Look at that move on Nvidia. Something's up. Okay, we got that, and we've got hedging flows on Nvidia. Nvidia hedging flows. Okay, looking good.
Okay, listen, we got to get to the pasta. Today I'm giving you the pasta criolla. Now, this comes from the southern regions of Italy, especially Puglia and Basilicata, where hot summers and abundant local produce inspired meals that don't rely heavily on cooking. The name criolla is derived from crudo, which means raw, because the sauce isn't cooked at all. It celebrates the
Pasta criolla.
herbs and grassy olive oil. The dish, born out of necessity and tradition, farmers and field workers would toss these just picked tomatoes, local cheese, and pasta together for a fast filling meal that required little more than boiling the water so that you could cook the pasta. What it can't be, also known as little ears, is the classic Puglian pasta shape that perfectly cradles the tomato juices and the cheese. The ricotta salata adds a salty tang at the end, and the arugula provides a peppery contrast that brings a whole dish to life.
Nvidia.
Has become a staple of cucina bocca, which is simple and honest food. It is a shining example of how less is truly more in Italian cooking. You can scan the QR code that's on your screen for the full recipe, and you can thank me later. Look, Today's Trader Talk, but the conversation continues. Subscribe on Apple Podcasts, Spotify, Amazon Music, or wherever you get your podcasts. If you got questions or topics you want covered, email me at tradertalk@yahooinc.com because I'm always listening. Until the next time, stay sharp, stay disciplined, and stay in touch. Take care.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.
All right, nice move on NVIDIA. Okay, NVIDIA, nice climb there. Nice move. Thank you, NVIDIA. All right. Yesterday's performance wasn't that great. We had some decent run-ups towards the end of the day and then fade around 345. Today we have some pretty decent flows. You can see the delta flow here on NVIDIA, how it ramped up. Earlier, we had Amazon ramped up. Earlier, Amazon flows from left to right. That purple line started turning around 11:15. And if you had paid attention, we had a nice little turn there around 11:15, around 227, and it made it up to 228.50. Not a big move, but positive. Your trade would have been positive as a bull. Let's look at Meta. Meta, positive flows on Meta. Came in. Okay, we started to turn back up. Started to turn back up around 12:30. Overall, you had higher lows, higher highs throughout the day. Had a really nice pop around 11:45. Meta around 11:45, it popped up and then faded again. The second turn in, you can see the daily hedge flows are turning down now. We turned at 12:40. That marked the second run up in Meta from 709 to 713. So you had a 4-point move there. A 50 delta call would have net you $200 per contract, not including implied volatility.
Scan the code on your screen right now to get a complete set of console catchers for both front seats. And scan the code on your screen. With this special TV offer, you can take 20% off. If you have a car, truck, minivan, or SUV with that frustrating gap between the seat and console, you need the console catcher. Simply push it into place. The console catcher moves with you. Scan the code on your screen now. Enter console catcher today.
When it comes to bath time, our dogs deserve better. Giving them this personal unit.
NVIDIA is starting to fade now. Okay, Netflix is turning the corner. I'm going to leave Netflix alone for probably about a week. Give it a little time to base to see if institutions are interested in buying. Same kind of idea we have with CoreWeave. CoreWeave. What is this stupid commercial? These commercials on. Ay, ay, ay. Crazy. What are they talking about? If you're not going to tell me actionable setups, I don't want to hear the jabber jabber from these talking heads, because all they do is fill airtime a lot of times. Occasionally you get some information that'll help you with the trade. Schwab's a little better. They outline trades during the day. You can decide whether or not you want to take them. They're basically just telling you risk reward and the kind of trade that you might want to put together. CNBC, except for a halftime report, all they're doing is talking politics and jabber jabber. As Ron White would say, jabber jabber. Ron White. I don't know if you're familiar with Ron White, but he has a skit where he's in the theater with his wife, and these two ladies are talking behind him. Talk about jabbering. Oh man, so funny. I think he's from Texas, right? Ron White. Funny as hell. That made me laugh thinking about him. A drink in his hand and a cigar, doing his skits, comedy. Ron White. Very funny guy. Okay, having a good day. Don't want to jinx it, but I don't think I will just by saying it's a good day. Do take profits off into strength. Today it's all-time highs again, so the news keeps coming in better than expected. So the bears are having to cover. We're making new highs. The markets are bullish, so buying dips and selling rips are working. So you want to remember, if you're buying the dips, you want to be paying attention to where you might want to be thinking about taking profits off. If you're swing trading on something like, say, Target, for example, I have a Target position. This is going to take a while, but it is moving in the right direction. 921.50 are pointing up and to the right, ever so slightly. The 50 days about a 2 degree off a horizontal. The 9 and 21 day about 5 to 6, 7 degrees off of horizontal. So I'm looking for these to turn up the slope of the EMAs as the phase 2 kicks in, the markup phase. Let's see what NVIDIA looks like. And stocks like NVIDIA, reversals giving you nice opportunities if you're paying attention during the trading day, like we are. Okay, you get these dips. These dips get bought. You see the flow, the dealer hedge flows. Look at the dip right here around 12:30. See that dip right there? 12:30. Now let's go look at the hedge flows. Let's look at the hedge flows on NVIDIA at 12:30. Okay, hedging flows at 12:30. Look at that move. Look at that move. Okay, here's 12:30 right here. Okay, there's 12:30. Look at the run up. Look at the run up. Just paying attention to this one metric, the dealer hedge flows, and you could also split it up, the calls to puts. You can see calls firmly outweighing puts. Okay, very nice.
So rule of 40 for us is the combination of our growth rate and our free cash flow margin, and the two of those need to add to 40 or above. And so that's been, and I think it's becoming a more standard way that software companies at scale think of their business. You know, we're proud to say at the end of the second quarter of 2025, we've actually exceeded our rule of 40 benchmark, and we think that we are in kind of the best in class category for companies in terms of that measure. However, that said, growth is the most important aspect of those two. So you want to make sure that you're balancing your operations, making sure you're getting your margin, but you've got to skew to growth, because growth is really where the value is.
Okay.
Our platform really provides such a tremendous technology differentiation because we allow our platform to really propagate throughout the organization and help manage and orchestrate work across numerous applications in our clients' environments. So we feel like the strength of Pega is our workflow platform, which we believe is
Alrighty. Let's see if we get another wave up. It's 2:35 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on a nice Wednesday. A nice Wednesday. Wife's birthday tomorrow. She's all pissed off about something. I don't know. I did something wrong. I'm always doing something wrong. Cleaning out the refrigerator. Somebody put something in the refrigerator and it didn't leaked or something. I got blamed for it. Oh well, such is life as a husband. Palantir. Palantir. Palantir, nice move on Palantir today, right? Check out the hedging flows on Palantir. Okay. Hedging flows on Palantir, same thing. It was a nice trade on Palantir. From the open, Palantir from the open. Okay, dealer hedging flows on Palantir, another one that did very well today. Palantir, if you took that trade earlier, it got stopped out yesterday, but the trade from this morning, nice move. Okay, wait for the buy order blocks. Look at that move. Look at the move. Buy order blocks from the open.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network. Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Fresh take on the hottest trends in the market, from every click to every tip.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalides. The Dow's up 453 points. Few movers for you right now. We're watching GE Vernova rally to all-time highs today. The latest earnings report. GE spinoff saw all three of its segments, power, electrification, and wind, beat expectations driven by strong demand for its offerings. The company also said that it expects revenue for the full year to be near the higher end of its previously guided range. Shares of GE Vernova are up nearly 270% in 1 year. Pfizer, well, that's selling off, hitting new 52-week lows today after disappointing with its outlook on the latest earnings report. And even though it did beat the estimates on both the top and bottom lines of the fiscal second quarter, Pfizer issued new adjusted guidance for EPS, and that was higher than its previous range, but missed the street expectations. So Pfizer also announced that it reached a deal with TD Bank to provide payment tech, including its Clover point of sale system, to some of the bank's clients.
Okay. Dealers have to hedge. Dealers have to hedge whenever the markets start moving, whether they're hedging for a bearish trend or hedging for a bullish trend. Paying attention to what the flows are telling you takes the guesswork out of taking your trade. Looking at Palantir and then looking at the Palantir hedge flows here. Okay, here's your Here's your Palantir hedge flows. Let me just zoom out a little bit. I don't know why that did that. Looking at the Palantir hedge flows from the morning around 10:30, this reversed. At 10:30, this reversed and moved up and to the right. Palantir. Okay, this is Palantir. Just doing that and looking at the buy order blocks. You can see the buy order blocks here right at 10:30. 10:30 right there. Hedging flows, same place. 10:30 right there. Start rolling higher. Okay. So taking the buy order block, putting a stop underneath. Currently, let's see what this is. It's probably about 6-1. Okay, so if you took that trade early this morning when we saw that dip getting bought, and currently this is up to 6-1, 5.5-1. Okay, so nice trade there, 6-1.
It has created over $100 billion in revenues so far. The CBO, which is always, they always underscore, they always undershoot the numbers. They're estimating $300 billion tariffs and just over $3 trillion within the next 10 years. So I think this is a win for the Americans, for taxpayers.
There's been at least one report, I think it was the Financial Times, that said the U.S. and EU were getting closer to making a deal overall, and that could in fact be imminent, and that the deal mirrors that of the Tokyo framework.
Okay.
That be good news.
Absolutely, and that's my understanding as well. My understanding is it may be as good as the Japan deal. I've also heard Indonesia is next, and that's going to be either a close third or it could be second. So we're starting to see the chips fall exactly where everyone has been hoping that they would. And again, we're starting to see strong economic numbers coming through. And so the economy is heading in the right direction. So again, our outlook, we've been bullish since May. And actually since the beginning of this year, we really think going forward that these next 18 months, a lot of people are concerned that they missed the uptick since April. I think this is just the beginning. I think we have a long way to go.
And now here, I saw you have Alphabet as a name that you like, and we're going to hear from Google Alphabet after the bell today. Tell me where you think this could be headed, and if it does pull back after this report, because sometimes you need a Goldilocks report or a beat to actually jump higher. Is that an opportunity? Right now it's at $190. Is Alphabet a buy?
It is a buy. Even if they take a step back, I think it's a strong buy, especially as it relates to AI. Just like Pfizer, right? There's, again, the negative reaction. When we see companies like that with strong balance sheets, these are great opportunities going forward. And then you have the other end of the spectrum. When you're looking at Microsoft, a lot of people believe that that's oversold. But again, we believe that there's a lot more room on the upside as well.
Let's talk about some of the other tech names that you like. You're not stepping away from tech just yet. It's been the leader. You still like it. Tell me about some of the other names you like.
I really like Celestica. We thought, originally our original estimates were 160 a share. We think it's now going to be over 200. We think that still has a lot of room to move going forward. And on the other end of the spectrum, the banks, as these tariff deals hit going forward, deregulation starts to come into play. We think financials, they are severely undersold right now. So there's some great opportunities there as well going forward. And the biggest play for us, we still believe this, are small caps. They really have not gone forward as much as we thought so far because there really hasn't been a strong revenue earnings so far. But again, as deregulation kicks in, they're going to increase, and just buying the index, the RUT going forward, the Russell, is really going to be a big play for us over the next couple of years.
Small caps, I mean, you might have to be patient because you've been patient for a decade.
Really been in favor of small caps up until this year. We believe that small caps going forward, because they have the biggest room,
that is going to be a really good play going forward. But again, everything's based on risk. And as long as you're allocated properly, it's a great risk to take.
You also like Microsoft. Was that in the notes? I think you like that one.
We do. We believe a lot of people think that it is oversold, but we think that there's way more room on the upside for Microsoft, especially with the AI situation, how they're playing the AI. We really like it. We think there's probably another 15-20% move over the next 12 months.
Ed Siddell, CEO, Chief Investment Advisor, EGSIS. Great to see you always. Thank you so much. Appreciate it. Still ahead, we're bringing our panel on a preview and talk more about the earnings are due after the bell. This is a giant one. It's a Mac 7
JP Morgan, NVIDIA.
What do we need to know?
All right, Apple's going to go again. Looks like Apple wants to go some more. We've got about an hour and 13 minutes to go.
Yeah, Schwab lets you invest and trade on your own. And if you want, they can even manage it for you. Not to mention, Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Let's see. Let me see if I can find a sell order for you here, Andrew. Okay. All right, so you can see the band overhead.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
We will hear from Google and Focus here. Alphabet, what can we expect? And is this stock John Freeman, co-founder, senior analyst at Ravenswood Partners. Thank you both for being with us. John, you said it looks attractive, Alphabet. EE, is that still the case? And if it pulls back on these earnings, I guess you really get in at buy. Is that right?
Well, actually, recently, so we kind of changed our view on Alphabet and recently exited our position. I think it was a little kind of attractive at 17, but at 20x, and honestly, this is really more of a fundamental call. We just started building evidence of some really, existential risk that OpenAI and ChatGPT and that, generative AI in general opposed to the whole search business model. And, I don't know what the probability of that, of it taking out search is, but it's high enough and plausible enough and disastrous enough for the stock that we thought that you know, the upside didn't really justify the downside risk.
Okay, yeah. Andrew, you can see overhead. You see the supply overhead. Those are sell orders overhead. Okay. The buy orders are below. Okay, and we don't see anything on the daily, so that looks pretty good. So this trade so far is a pretty decent return. Okay. So had you bought on this last buy order block, put a stop underneath the buy order block. Right now, the high, that's a 5-to-1. That's a 5-to-1.
So when you and then search around $1 trillion, so right now it's around 2.3 is my sum of parts plus Waymo on the other 100 billion for Waymo, which you just form the basis of the magnitude of that upside. Obviously, it's not making any money now, but there's enough potential there. So I don't see it. So I can see an opportunity here, but a little lower. Yeah.
All right, we'll see. Gordon, are you in wait and see mode? Do you want to see how the company is using AI, monetizing AI? You in or waiting?
No, we're in. We like this. I think John's points are well taken. However, you know, what we're seeing here is growth, Nicole. And really what we're looking at when we have cloud revenue expected to be at around 13.1, which is around 26, 27% year-over-year growth. Operating income from cloud around 2.2 billion, nearly doubling year-over-year. These are places when we're talking about ad and search, you know, and YouTube, of course, you know, that we're expecting big time growth from this. We think this earnings call is going to be great, and the opportunity continues to present itself for this stock moving forward.
Now, when you think about the AI, I mean, John was using the term, you know, taking AI, taking eyes away from Alphabet. Are you sort of in that framework as well, or do you like other AI names, Brett?
No, I think John's point's well taken. We think that the AI views basically how are they generating the revenues they want per exposure versus how they have them. You know, where does the AI overview and AI mode go for Google moving forward? We want to see how the call goes when they present optimism. Are they talking about how they're monetizing these trends, how they're going to be more impactful in their top line figures? These are what we're looking for out of this call. And, you know, we really think that if there is a miss or an opportunity here, it could trigger a swing of around 4 to 6%. But monetizing the AI is really what we're looking to see out of this call.
Okay, Nvidia is still flagging at the highs. I would take profits off. Looks like we're going to stall now with 1 hour and 6 minutes to go. I'm your host, Kazavini, coming to you from theclosingprint.com. It's Wednesday, the 23rd of July. We got FOMC rate decision next Thursday, next Wednesday. Okay, Apple looks like it wants to keep going. Let's take a look at Apple. Apple.
So anyway, yeah, I think Microsoft and even Amazon are more so they're better opportunities with less downside risk is the best way I put it.
And Greg, just quickly on the cloud profitability, I mean, you talked about cloud revenue rising, you talked about Vertex, Gemini. Why are these important right now?
That's the next stage. You know, Nicole, that's what we're going through. That's what we're looking for.
We're
looking to see how they're being impacted inside Google's cloud. What is the next step of monetization for Google as they move towards these next level of AI generation tools and softwares?
You know, do you like the
Okay, so far Apple looking good on the second. If you took the second trade, so far you're looking at 3-to-1. Okay, that was a 3-to-1 trade right there. Very nice. Somebody's tapping me on the leg. I got a kitty cat tapping me on the leg.
Gordon,
All right, so Apple's starting to stall right here. Apple. That's a 3-to-1 move off of this buy order block. That was nice. That was nice. You yelling at me? Hmm? Okay, let me feed this cat. I'll be right back.
So I'll see you tomorrow. Keep it right here. Market on close is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investors
The futures continue to push higher. Okay, we've been on a buy signal for the last 3 hours, 4 hours. The REF Pro signal gave us a buy signal. All right, so Apple's still looking good here. Apple.
with Schwab Bank Investor Checking, the checking account for investors.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next trend.
Available anytime, anywhere, on any device. Empower your portfolio with Schwab Network. Tea House Coffee, I'm Jenny Ford. Join us next Wednesday.
1 p.m. Eastern. Only Schwab Network.
All right, so I keep expecting that the easy days like today, tomorrow are going to be a difficult day. Yesterday we started off with a difficult day. This morning even we started off with a difficult day with Apple. Hard to believe Apple's all the way back up to where it started this morning, right? Apple complete retracement. So that's telling you there's an appetite for momentum traders to buy the dips. Still, with the markets moving higher, you would expect to see dips getting bought. There goes Broadcom. Broadcom for Rob.
Including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Broadcom's about to go there, Rob. Okay, Netflix turning. Netflix buyers at the low of the day. Okay, Netflix. Can this thing climb back to where it came from? Netflix by Friday. Okay, Netflix is turning off the low. I might take some lottos for. I'm going to take some lottos for Friday. Netflix. Friday lottos. Let's see. A lotto I would categorize as anything above a 40 delta. So, or below a 40 delta, like a 39 or 35 delta. These are pretty expensive. So they're expecting a move, looks like. A 30 delta is 11.95. Okay, so I'm going to buy a vertical. Buy a vertical. Looking for Netflix to turn up. Let's see what that would cost. 100 to make 400. Okay.
Crude oil just up a change line at 65.39 a barrel, and Bitcoin down about 0.3% on the day, trading just over the 118,000 mark. Now let's kick off our show today with a broad look at the market. We'll bring in Kevin Hanks, our senior equities contributor here on the Schwab Network, joining us from the floor of SIBO as usual. Now, Kevin, thanks for being with us. What are your thoughts on today's session?
You know, Marley, I'm a big fan of the news flow and how it breaks throughout the day. And once we got yesterday afternoon the announcement of the Japan trade deal, and then late morning we got the potential for the EU trade deal, and the rumors starting to swirl. I think this market just bet on itself. Now, Scott Besson told us Monday that in the next couple of days we were going to see deals.
Okay, looking for Netflix to turn back up. You got a buy order block. Put your stop underneath here. Okay, buy order block underneath. Put your stop underneath. Look for the upside. There's resistance. I don't know if there's enough time left, but that's the potential. If you make it 50% back, if we make it 50% back from the high, okay, let's see. Okay, if we can manage a 50% retracement, maybe. Okay. Okay, 50% retracement. Looking for. Okay, 50% would be 1188. 50% would be 1188. From that sell order block overhead. Netflix looking for it to run. Okay, Netflix.
It was the guidance, Marley. Make no mistake. Their numbers, 141 versus 132, solid. Revenue, 4.49 versus 4.31 billion, solid. But it was the guidance. In the lower end of the range in terms of full year, third quarter. The guidance was looking 136 to 160, came in 151. The revenue was, they were looking for 4.65. It comes in 445 to 48. The guidance was just not robust enough for what we need now to stake stocks higher. And they've got Texas Instruments, a legacy semiconductor chip maker, down about 13% on the day. Pretty big haircut they're taking here.
Well, while we're talking haves and have-nots and winners and losers, let's bring one on the flip here. GE Vernova up more than 14%, clearly a winner on the day on the tail of their earnings.
So watch the details here. Again, beat on earnings, 186 versus.
Okay, so Netflix is starting to go right now.
9.1 versus 878 billion, but the guidance, they guided to the higher end of the guidance range for 2025 revenue for the year. And so the street just loved. Now we know the flow chart for what these stocks need to higher in this market. They've all rallied into their numbers. What do you need? Beat on earnings.
Okay, let's see if Netflix can rip back up to the upside. That'd be awesome. I got about $150 loss per contract. I had put credit spreads on. I didn't have the common sense to take it off on Monday when it was above the 50-day. I should have done that. I thought I'd stick it out. Held on to it Tuesday into today, and I wound up taking it off for a loss of about $150 per contract. Put credit spread. Maybe these calls will make up for it. Most likely will. Okay, looking for Netflix. Netflix is turning. Okay, want to see flows turn up. Okay, let's go take a look at Netflix. The flows on Netflix. Netflix survey says, where did my Netflix go? Okay, let me add Netflix here. Must have deleted it. Oh yeah, I deleted it earlier by accident from my list. Netflix. Okay, add a tab. Netflix, add a tab. Okay, Netflix, let me put it right here. Netflix. Okay, Netflix, you can see the flows are turning up on Netflix. You see that? Netflix turning up from the lows from 1345. Netflix flows turning up.
everything else that they have in their pipeline that makes this not work. You know, the valuations that people are paying, because it won't be because of the cars, Marley.
Okay, we got less than an hour to go. Let me change channels. These guys are just yapping along. Yap, yap, yap. All right, Dan Ives is on. Okay.
When it comes on the consumer side and even on autonomous. I think what you're going to see tonight is a management team more on the offensive than defensive. Now, clearly, DOJ and other regulatory issues. But I get what Snipe's saying. He brings up great points. But in my view, when you think about DOJ and you think about the regulatory and you think about just the worries about AI, the upside downside here is significant in terms of what I view as bullish.
But you paint it as almost binary. You're talking about the worries of this whole thing, meaning the end of search for Google. I don't think people think it's the end, but maybe it's just different. Maybe it's a
JP Morgan making new highs. JP Morgan.
That you're not willing to pay up. Not that Alphabet's considered expensive in many accounts, but you're still not willing to pay up for a business that's not going to be as robust as you once figured it would be because of the large language models that are eating into the search.
Yeah, and I think that's a great point. I think initially maybe that's the perspective. It's our view that the second, third leg of the stool, when you see it play out, from a cannibalization perspective, I think it's the words are overdone.
Wapner is focused on just a small segment of Google's earnings potential. Okay, you have to remember Google has a lot going for it. YouTube search, we got ads on YouTube. I mean, that's huge right there. YouTube is used more than Netflix is. You combine Netflix and in Disney and Apple TV, YouTube still gets more views per day and users per day than Netflix, Disney, and Apple TV. So YouTube search is a big deal. YouTube ads are a big deal. Android and Pixel smartphones, I don't know what kind of market they have for those, but you got the Google web browser. Okay, good or bad, it's still used. Got Google Workspace, you got Gmail. Gmail does have promotional content aside from your primary email. You got Google Cloud, you got Google DeepMind. You've got they're shipping countless products: Gemini Live agents, Gemini apps, the Gemini 2.5 Pro, Ironwood 7th generation GPU chips for the large-scale AI inference. They're well positioned as a leader in agentic AI. And last time around, they had 90 billion in revenue, 12% year over year. That's hefty. That's nice. So with Wapner focusing on one part of looking at one part, the Google search, that's only part of what Google does. It really bugs me sometimes. Palantir is still going.
You're not exactly sure when you're going to get the return for it, and then you're not sure how much the return
Google.
You can't just spend until
200s, 250s.
More and more, you're seeing the data points supporting it from the use cases. And it's our view for every dollar spent on NVIDIA chip, there's an $10 multiplier across the rest of tech. And the last thing you could have Google on the outside looking in at this AI party, and we talk about it's 10 p.m. and it goes to
Netflix. Okay, watching Netflix.
Participant. I just think I think the market is still massively underestimating what this growth's going to look like throughout tech. I think this earnings season is going to be a get out the popcorn moment for tech.
Let's go back to Tesla for a moment because there are significant questions about that. You
Hi,
call
Felicia.
Musk
What's
right
up,
now
baby?
a quote wartime CEO. He's taking some fire.
Yeah.
Can they get past that?
I mean, I believe look, it's a key earnings call, and as we like, everyone's a key earnings call, but this is a dramatically different 3 months when you compare back to April. I mean, now you have robo-taxis, which our team saw front and center in terms of launching. The key on the call is when the other city's going to come on in terms of robo-taxi. I think you're going to have 25, 30 cities over the next year. When I talk about wartime CEO, is that this is the recommitted Musk. and he recognizes this is an AI arms race.
Yeah, but when he made the announcement
Netflix.
about the new political party, you questioned as to whether this was a recommitted Musk. So what makes you change from then to now?
Yeah, and obviously he didn't like that we suggested that. And my view is that I think he started to read the room. If you look since that moment, you've really seen him shy away from, I think, a lot of politics. And I think Musk recognizes now this is the window. This next 3 to 6 months, especially going into the November board meeting, where I believe they will take a significant stake in XAI, he recognizes that this is the time for him to lead. And I think
S&P turning back up. NVIDIA looks like it wants to go again. NVIDIA. Coinbase, big move off the low. Coinbase traded at 387. Around 1 o'clock, this started to turn, 115. It's up almost 10 points off the low.
It's our view this is a $2 trillion market cap. $1 trillion of that is going to be autonomous. And when you think about robotics and Optimus and what I view as the future, I view that as relatively breadcrumbs relative to where I view the market cap of Tesla over the coming
Okay,
years.
Tesla turning back up. Let's see, what time is it? All right, we got 3:15. I don't know. Tesla, you could trade. Let me see what I'm going to do here. Tesla. Let's see what I can get for a Tesla Iron Condor. Tesla. For a Friday. Tesla Iron Condor. Let's go. Okay, I need to add some more strikes here. Need to add more strikes. Okay, so what's a 20 delta on the put side? Okay, I want to sell 20 deltas. All right, so I want to sell 20 deltas. 20 delta on the put side is about 310. Okay, so sell Iron Condor. I want to select a 20 delta on the put side. The put side is 310. Puts 310, sell the 310, buy the 300 maybe? 310, let's see, 300, 310. Buy the 300. Okay. And let me just take a look here. The upside, 350, 360. Okay. Tesla, 350, 360. Tesla, 350, 360.
Critical of Silicon Valley firms using the term BS, but not using the phrase BS to describe the position of Silicon Valley companies who are laying off American workers.
350 is right. Oh, that's a big strike right there. 310, 300. There's a huge strike right there. All right, maybe I'll go down a little further. I'll go down a little further. I'm going to sell the 300 and buy the 290. 290. Okay, now overhead, a big strike at 350. So let me sell the 350. Sell 350. See what this comes out to. 350, 360. Okay, 360. 360. All right, that's $3.20. So that's pretty hefty. That's telling me that I could probably see a bigger move. So let me go to 360. Sell 360. Okay, and then I'm going to take a look at the chart. 360, 370. 360, 370. 70. Okay, so let's see. 360. Let me just double check here. 360. Where is it? 360 is a 21 delta. You see it right there. 20 delta, 360. And the 370 call is a 13 delta. The put side 300. 300 is a 300 is a 12 delta. So what is this? 300. Okay. Tesla. Tesla. All right, let me just double check here. Okay. $2.30 per iron condor. So I'll do 10 of those, maybe. $2,000. Let's see. 300, 290. 300 is within the Bollinger Band. So I'm going to widen this a little bit more. 290. 280. 280. Okay. All right. It's 188. 188 per iron condor. 290 is the lower Bollinger Band.
Interest rate related dynamics that the market's going to have to grapple with. Are we incrementally knocking the wall of worry down?
360, 370. 360, 370 up there. Tesla. 360, 370. All right. So over here, there's 370 right there. 370. Got some 400s.
Earnings were going to be less robust than they've been. I feel like the wall's going in the other way, not up. I mean, we have more concerns to really worry about. It feels like it's not the case.
Nvidia,
The wall of worry has been
Tesla,
effectively addressed and resolved for
Tesla.
now. What we're worried about is more a matter of timing, and isn't that always the case for the market? So I'll take your ideas one by one.
360, 370.
We are starting to see inflation creep into the economic data in June's data. I expect that to accelerate in Q3 and into Q4 because new ordering, holiday ordering, has only just started to happen. The backlog of inventories that companies had before tariff risks began to materialize, that's starting to be
All right,
clear.
380.
So that risk is still ahead of us. Importantly, immigration and sort of the tightening of the
370,
labor market,
380.
especially from the supply side, is a risk I think the market actually isn't in the wall of worry, but is an element that's going to impact the sort of interest rate sensitivity of the market moving into the second half of the year. It's not an overly bearish view on the U.S. economy, and in near term, it's actually
385.
quite a bullish view on the market.
75.
But as those risks start to materialize in the economic data, I think we'll see a rate
So
response.
370.
Response.
375.
No. So I
think the Fed's going to cut rates this year?
I think the Fed might cut rates one time this
375.
year. And the reason I think, look, when it comes to the inflation and labor market data that we've had so far this year, I think the Fed might have cut rates twice this year. But the policy risks on sort of the path ahead are top of mind, and those are what I expect to materialize over the second half.
But the inflation fears,
Okay, so
the most
Tesla.
severe ones haven't really materialized.
Tesla,
Has suggested that they would have already cut.
24% plus or minus.
So if you continue to go in that track of deals on trade, tariffs, not that big of a problem, not like people expected, why wouldn't they cut?
So here's the three reasons why I think it's difficult for them to cut assertively into the second half of the year, even though I completely agree that the data so far suggests that they would otherwise be. The first is that tariff rates are higher than they used to be, but probably more importantly,
310. 310 is really close. Can't believe it. 310 is a 20 delta.
Because if you have really severe tariffs, then you have demand destruction. It's really difficult for companies to operate their supply chains. That's not what we see here.
290.
We see a muddle through snenario where
290 is a 7 delta.
higher costs, or in some cases taking hits to margin. That just hasn't materialized yet, but I do expect it to. The second reason I think it's really
Put-wise,
difficult for
10
the
delta,
Fed to cut is that
297.50.
tightening labor supply means the unemployment rate is going to actually be moving
297.50
lower
put.
into the second half of this year, and I think that's an underappreciated risk. And the third is just financial conditions are so
297.50.
easy. Equity markets have been doing good. Credit spreads are tight.
297.50
If you want to
and
grow, and there's really nothing pointing from a financial markets perspective that the Fed assertively needs to be cutting
287.50.
rates right now. And so I think that they will stay on hold.
That's 134.
They still admit that
Call side. I'm sorry. It's got a headache, so it's taking me a little bit longer than usual. Okay, so upside
all of that, they're still
365. Yeah, I don't see this getting this up here. 365.
sooner than later. I'm not saying we're going to get them
365.
next week.
375.
It sure sounds like they're ready to go the minute that
Okay.
they either worry about
Okay, I'm gonna go ahead and do that.
market getting bad, or that
All
they
right.
can be confident that inflation is not going to get worse.
Yeah, I think the
Okay, so with Tesla, I took basically 15 deltas.
data, I think, to show that the Fed's two mandates are moving in the opposite direction of what a cut would provide. And we'll be here to talk about it when it happens. But in the meantime, for investors, again, this is not an overly bearish view, and it's one where the equity market, I think, can continue to do well. But when you have valuations where they are,
22-ish, right?
the question is, where's your incremental value? I agree with Dan that I think we're going to continue to see the large large cap U.S. stocks, including tech stocks, continue to do well.
Mhm.
But I think investors need to be considering their inflation hedges, their income generation opportunities in equity and fixed income, and really, as boring as it is, leaning into diversification because there's still so many unknowns.
All right, Lauren, we'll leave it there. Thanks. That's Lauren Goodwin joining us. Let's send it now to Christina Partsinevelos for the look at the biggest names moving into the close. Hi there.
Hi, Scott. Well, GE Vernova on pace for its best day since April after a big beat on sales as well as earnings in the second quarter, driven primarily by strong results in its power and electrification segments. Recall that GE Vernova spun off with General
65,
Electric over about a
375
year ago, but the
call.
stock has literally just been on fire over the last
297.
over
All right, so that's what I did. Okay, so Tesla, this is where I am. 297, 297.
And that's why it's on pace for its worst day since April, but still down about almost
Okay.
15%, Scott.
All right, Christina, thanks. Back to you soon. We're just getting started here. Coming up next, class is once again in session because Wharton School professor Jeremy Siegel, he'll join us to
297
tell us
and
what he thinks about this
365. 365. Now, if you think that's going to move more than this, just adjust your prices accordingly. Okay, 397.50, 387.50. So I'm looking for prices to stay between these two levels into Friday. And it's $184 credit. Okay. Credit. $184 per contract. Okay, $184 per contract. All right, got 5 of those for now. I might double up, we'll see. Call side, calls. 365, 375, 365, 375. Okay. So I sold the 365. I bought the 375. That creates a credit. And put side, puts. Sold the 297s, 297s, 297.50, 287.50. Now we want prices to stay between these two. We have a $185 contract per contract credit. Okay. And that's the trade. That's what I'm doing for now. Let's say tomorrow we open up and Tesla gaps down to 300 or close to one of our strikes. I'm going to take some calls too, probably for earnings or a lotto. Or do I want to do that? I'll just leave it alone. I'll do an iron condor and that'll be good. Okay. All right, Tesla. Spreads condors. Okay, let me just double check before the close. Let me just check this. One more time. Tesla. Okay, so that's a 16 delta I'm selling on the call side and a 10 delta on the put side, just in case, a little bit more, just in case. So 90% probability of a win on the put side, selling the 10 delta, 297.50, buying 287.50. So let's hear what Jeremy has to say. He's grown on me.
Maybe these things on, I mean, why should Japan get 15%? It's still at 25. I mean, there's now hope of a lowering of that, and we're beginning to see some clarity in here with these deals being made, and that's certainly bullish. And certainly, I mean, that keeps the momentum going, I think, in the stock market.
What about the valuation? I just had a conversation with Lauren Goodwin, and others have suggested this too. We're a little rich, to say the least. Growth is going to still slow as a result of the tariffs, even if they're less than what we originally thought. How do you square those?
Well, we talk about 22 times forward, but what we have is the Mag 7, is in the 30s, and the other 493 stocks are around 19, which I think is a very reasonable estimate. So the question is AI going to continue to power the Mag 7? And Tesla is 130 times forward. I mean, that's kind of like an option on all its AI.
Okay, S&P turning back up. There goes Tesla pushing back up.
They're 30. So, I mean, it's really not a market, I think, on the whole is challenged. The only thing that's challenged is AI going to keep up at all. It looks like it is. The only part of the market where I think you have valuations that are aligned with what I think is
All right, let's see what we want to do with Google. Let's see if we can do something with Google. Similar. Google.
That you mentioned that you think offer better value to investors?
Google.
Yeah, what we need to see
RSI feels a bit overbought. We've got a lot of buying the last 2 weeks, 3 weeks on Google. Let me look at Google. Google. See if it's even worth trading. Google. All right, so let's go Friday. Iron Condor. 15 delta would be 207.50. Okay. Call side. 207.50. Sell a Iron Condor. All right, 207.50. 207.50. Okay, what about the put side? Put side. Delta. Let's see. 177.50. 177.50.
Short-term rate should be in the threes, not in the fours.
177. Let's do 175. 175 is the 200-day. So if it comes back there, it'll probably bounce. 175. 175. 172.50. That's 2.5 wide. That's not worth it. Let's go 170 and 207. That's not worth it. Let's see. 207.50 is way up here. Probably way too much for Google.
If the economy continues to boom, that Trump's going to get credit.
What about 205s? Let's try 205s. 205 call side. 205. 210. Let's see, a 205. 205 is a 19 Delta, 205. We think we can get to 205. Google, I doubt it. 205, 210.
Still in candidates, for Fed chair. So I don't think there's going to be a break with continuity here.
No, but I mean, what kind of precedent would that set? So that a president doesn't like what the Fed chair is doing, so then the next one should resign as well? I mean, that's a
Yeah, Google, I'm going to pass on. I'm going to pass on Google.
All the Fed chairs, all the vice chairs, all the governors, all the time. So it's not, if I were, Chair Powell, and I believe I would not continue on under the withering criticism that he's offered. Know that I'm going to get blamed if things go wrong, even if I think it's his tariffs. And the fact that he's almost a lame duck already. I mean, he's 10 months away. It's not like it's 3 or 4 years. If Trump names someone new, he's really going to be a lame duck in any case.
Okay, back to Tesla. Let me just mark this up here.
Trump and his man and see what he could do.
Yeah, but then the next one, I mean, it's not like you mentioned Kevin Warsh, and obviously he's at the top of the list. Or
Annotate.
near
Okay,
the
so let me just
speculative
put the
names
break evens here.
So then Warsh doesn't cut when the
Break
president wants to cut. What's he going to do? He should
evens.
resign too? And we just keep going
Break
down the
evens
list
are
until
295
chair does exactly what the president
and 366, 360, 366, 84, 66.
What he wants if you have, if you know that what you're doing has the full support. There's a lot of people that do think that he should be lowering rates, and including myself. And I just feel that the Fed will be in worse position if
Okay, Google.
rates, economy goes south.
I don't know, Google.
And we have to remember that the Federal Reserve is a creature of the U.S.
All right,
Congress.
Netflix pulling back. Netflix, no follow through. All right, so that trade's going to kaput unless it takes off tomorrow. Nvidia's holding the high. Apple fading a bit. Okay, Google did make a new high right there. Google.
Maybe what he's doing is
Google.
well, but let's put it this way: there's never been.
What about a long iron condor? Buy a condor. Let's see what that would cost. Or a strangle.
Let's face it, the Federal Reserve got them called second most powerful person
$10.
in the U.S. government after the president. And
it's only because there's never been another president who's been willing to level this degree of withering criticism.
That's absolutely true. But again, what is the upside for Powell?
Okay, Google.
It's the only downside for the
Google. All right, we're trading 192 basically. 192. If I buy an iron condor, 215 per contract.
You name it. I mean, Trump will take all the credit here. Again, there's 10 months to go. Let's face it, Powell made some bad mistakes. He made a bad mistake with the inflation. I'm not saying he's necessarily making a mistake here. But in my particular opinion, I think that if things go south, I think it's worse for Fed independence if he doesn't resign.
All right, we'll leave it there.
It's my opinion.
We'll leave it there.
Yeah, I'll pass on it. I'm going to pass on Google. Passing on Google.
I'm a believer in Fed independence, but it's a particularly unique time where the Fed has been under a lot of criticism. They haven't changed their models and thinking for 50 years. I mean, listen to Kevin Warsh. was an excellent interview last Wednesday. You know, I thought from him, Squawk Box, I didn't agree 100% with everything he said, but a lot of things I think do need a change. Let's see what a change is. We need some, fresh air, I think, and a lot of thinking at the federal.
Okay. Professor Jeremy Siegel, assistant marketing chief for the network. Obviously, you mentioned the other shows that you like and the interviews that have been on them. We'll talk to you soon. Muhammad El-Arian is going to be on this network, by the way, on this program on Friday. So we'll look forward to talking to him about his views, and we'll talk to him about yours as well. And I'm glad I made up for a conversation that I missed. Professor, thanks. Up next, the big business of sports investing. We'll hear from two experts in the space about their new fund. Closing bells coming right back.
Yeah, it's 50-50. Service now. Okay, let's see. Let me just look at Google real quick here, where all the positioning is. Okay, 175. Yeah. From 180 to 200, a lot going on with Google. 180 to 200. You can see between these strikes, 180, 175, 180 right in here, all the way to 200. Okay, 200. JP Morgan. You know what I'd rather do? What I'd rather do on Netflix didn't work, by the way. Netflix is not working unless it gaps up tomorrow and moves in this direction. We got 2 days. With Google, what I'll do is wait for tomorrow. If we get a pullback after hours, then I'll look for a setup, maybe a fade from the lows or a fade from the highs, depending on how it trades. So I'll take a trade tomorrow. In other words, Google's still pushing higher. I got a feeling they're going to beat. But I don't want to bet on it. I don't want to roll the dice. I'd rather have a setup like I'm looking at on the screen right now, where I have buy order blocks. I can see where supply is overhead. Take a 50 delta. I like that much better. Okay. Looking at service now. NOW. Here's service now. Okay, you want to sell options where the curve flattens out. That's 830 on the downside and 1120 on the upside, more or less. So let me take a look at that. Service now. NOW. Oops. NOW. So service now. $11.25, 800. $11.25, 800. Let's just say 11.20, 800. 11.20, 800. 800's way down here. 1,200 way up there.
Sale of the LA Lakers for a record $10 billion valuation only underscores the still strong demand for sports assets. My next guests just launched their own fund to invest in what they see as undervalued areas of sports. Rashawn Williams is Harbinger Sports Partners founder and CIO. Steve Cannon is Harbinger Sports co-founder and CEO. Steve, also the former vice chairman and CEO of AMB Sports Entertainment. It's great to have you guys. Rashawn, it's funny. When you guys say You're looking for undervalued areas. I laughed and I'm like, where are they?
Not in sports. In sports. And the reason everyone's looking at the past, the media rights driving all the value creation, but no one's looking at the future. $300 to $600 billion of value creation over the next decade, all with local revenue that teams will be able to create by owning the stadium and all the real estate around the stadium.
So what kind of, Steve, investments are
Okay, Apple fading a bit more. JP Morgan, high of the day. JP Morgan, continuation. Doing well, JP Morgan. Okay, JP Morgan's coming out of the squeeze.
Today's premium environment, premium drives everything in sports revenue, and the viewer and the sports fan is different. So you got to build
Okay,
new economics. So
looking good. JP Morgan.
we find a team that needs to replace
JP Morgan.
their venue, and then that opens up all kinds of upside potential, not just the venue itself, but the
JP Morgan.
real estate.
MACD's turned up. Stochastic's turning up.
That is only just starting to be tapped.
All right, so we're not talking
JP Morgan. Let's look at the 60-minute.
Oh yeah, we're talking about franchises. Oh yeah, the franchises themselves have been growing at a higher CAGR than the S&P 500 for the last decade.
No, I know. That's why so much money gets in. We expect that push valuations up to levels that have gotten a little nosebleed level, no?
Well, the multiples on revenue have remained the same. The revenue.
JP Morgan.
These leagues have the opportunity to
I'm going to hold on to this swing. Looking for more. Looking for 100%.
and put that thing back on the market and potentially get even more revenue. So the revenue is coming in, online sports betting, international expansion. These teams and leagues are becoming media companies themselves. It's a great time to be an investor in sports.
So you're not put off at all when you see $10 billion, Steve, for example, for the Lakers. That doesn't scare you away. It energizes you to think that there are many other franchises in whatever sport that can maybe not grow to $10 billion, but can have that sort of ascendance.
That haven't fully realized their platform or the power of their platform. If you look at the Atlanta Braves, for example, they built a new venue.
Publicly traded.
They built it publicly traded in this example, so we even have access to all the data. They not only have
JP Morgan still going.
Ballpark, they've created an entire mixed-use venue that operates 365 days a year and is non-shareable revenue that they get to keep. That makes the Braves a more valuable entity.
And it was already $1 billion, $2-3 billion team. They were doing $264 million in revenue. Now, new venue, unlock these economics you're talking about, $500 to $600 million in revenue, and it's worth a lot more.
$750 million is the size of the private
JP
equity
Morgan.
fund, and Mark Cuban is partly leading this too.
Yes, Mark Cuban is our partner and the president of our firm.
How'd that come about?
Sit next to Mark Cuban on Shark Tank, battling for deals.
Is that right?
Yeah. I'm a reoccurring guest on Shark Tank, and Cuban sat right next to me. We battled for deals. We talked about sports in between every deal. And he was the first guy we called after
you did your own pitch.
I was in the tank telling Cuban, hey, this is an area that I think is poised for explosive growth. He sold the majority stake of his team.
295.
He believes in the value creation story in the overall
Okay,
league.
297.50.
It was a great compliment to
Okay, we're getting close there. I'm probably going to want to do something with JP Morgan and roll them out. 297.
Was a sign that, okay, maybe these guys see that if we're not at the top, maybe we're getting closer.
Maybe I'll roll this out. Roll them out.
Teams 20 years ago relied on the media rights. And look, the media rights may have taken people pretty far, but the new guys who are buying, who did Cuban sell to? Las Vegas casino owners. What do you think they're going to do? Build, hotels and restaurants and bars.
We'll talk to you again soon. Next time we'll talk BC
300.
That's Rashawn Williams and Steve Gannon. Thanks for being here.
Thanks for having us.
All right, sticking with sports, don't miss Alex Sherman's interview with two-time Super Bowl MVP Eli Manning on the CNBC Sport Video. Now, speaking of somebody who was thinking about getting into the NFL and said, you know what, it's getting a little bit crazy even for me. Plus, you can catch Eli on Squawk tomorrow, 8 a.m. Eastern.
So the 300. I'm just thinking about rolling these.
Over 70% while beloved donut chain. Join the meme stock frenzy. We'll break down what's driving the surge in these meme trades right after this short break.
Yeah. Let's see if I can get filled here. JP Morgan's working there. Yeah, I could buy back the 297.50. Yeah, that's true. 297.50. Let's see, trade. Let's go. Monitor. JP Morgan. Let me cancel that order. Working order. Let me cancel that. Cancel. Okay, so we got 13 minutes to go. I'm just negotiating this JP Morgan trade. Let's see. No, I want to buy those back. Okay, buy. 297.50. 297.50. All right. Hope everyone's having a good day. We got 11 minutes to go. 11 minutes to go. It is Wednesday the 23rd. I'm your host, Cousin Vinny, coming to you from the closingprint.com. It's been a pretty decent day. S&P 500.
Some news out of that AI down in Washington. Eamon Javers joins us once again with that.
Scott, that's right. Treasury Secretary Scott Bessent just wrapped up his remarks here with the All In podcast, folks. A couple of points here that I want to bring to you, and apologies for reading from my notes here, but because I want to get this right. He was talking about U.S. Treasuries, and he said that the expectation is that the Chinese government will slowly divest over time, but he said that he thinks a demand for treasuries will be spiked by the so-called Genius Act up on Capitol Hill and the rise of stablecoins that are backed by U.S. dollars. So he says that will create an increase in demand for T-bills globally. He also made a joke about the Chinese economic model. He said it's like the broom in the water bucket from Fantasia. They just keep going. He said it's an employment agency. He also was bullish on tariffs. He said tariffs are creating onshoring. He says we are seeing big onshoring, and I think we can have a massive construction boom. And then after that,
What's the matter, sweetie? You want some more food?
We'll get
You hungry?
populated with American workers. He said on the Fed, we could see 1 or 2 rate cuts this year.
Who's your daddy,
He said
huh?
once we see over the next 1 or 2 months, the tariffs are not
Who feeds you?
inflationary. He said he has breakfast with Fed Chair Jay Powell just about every single week. He said he keeps telling Powell that a one-time price hike from tariffs is not inflationary. He says,
He used to think that TDS was Trump derangement syndrome. Now he thinks it's tariff derangement syndrome. Says that he believes the Fed is locked in an old way of thinking. And he said ultimately the Fed is just.
Oh, there goes the S&P.
That it was wrong. No talk here from Bessent, though, on the idea of firing Jay Powell or any of the
S&P is going here.
that we've seen from President Trump.
Okay, let's see what those calls are going for now. SPX. All right, S&P 500, the 63.55s for today, 63. Oh, man. Nice. 63.55s.
Suggests that he expects that China will slowly diversify away from U.S. treasuries or divest some of their holding in U.S. treasuries. I mean, that has been a critical question slash
Nice.
issue.
Okay. Nice pop. There goes Palantir, still going. Palantir. There goes Palantir breaking out.
Yeah, absolutely. I mean, and it's been a big question whether the Chinese government would use that tool politically to put pressure on the U.S. government. Obviously, the U.S. government depends on the ability to borrow because we borrow an enormous amount as the United States. And the question has always been, will the Chinese over time put pressure
Palantir breaking out.
costs by lowering their purchases of treasuries? And it looks like, you know, the conclusion is that they will do that over some time. How much time? He didn't say. It was sort of a glancing remark, I would characterize it. But he also was touting the idea of this new input of demand coming from crypto and this new world. He said that, you know, the man on the street in Kuala Lumpur, Nigeria, is going to be attracted to this new market that didn't exist before, and that will create a robust market around U.S. dollar stable coins. He thinks that will be good for the United States in the long run.
Okay, Broadcom, nice move there for you, Rob. There goes Amazon back up in the other direction. We got 7 minutes to go. Netflix turning back up. Big move today. S&P, all-time highs. All-time highs. I'll tell you what, this is surpassing many people's expectations, including mine. I thought for sure we'd get, well, to be honest, I've been looking for direction. So whether we go up or down, doesn't matter. To me, I'm looking for direction. And we continue to move higher. If you look at the S&P 500, look at the squeeze. It's starting to, the upper band's starting to open up. Look at the New York Stock Exchange, NYSE. Okay, is that bullish or bearish? That's bullish. What about junk bonds? What's junk bonds look like? I know dollar is all over this. Dollar is all over junk bonds and high yield corporate. Many of you will pay attention to these over the years. These are great signals. Okay. Should I take profits? What am I going to do with my 401k? Blah, 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 blah. Just keep an eye on junk bonds, high yield corporate, the risk on, risk off signals like IWM making a new high. Biotech. So we got anything on biotech? Biotech's got a bid. So this looked awful over the weekend. Over the weekend, Friday's close, you can see the close was below the 200-day. Now we're bouncing, popping back up. So another risky asset. Okay. Wow. Biotechs. Okay, looking good going into the close. Biotechs. New York Stock Exchange. NYSE. Okay, junk bonds and high yield corporate. Wow, this is looking impressive. HYG, high yield corporate. Impressive. Okay, trending higher, HYG, and the S&P equal weight index. So let's look at the S&P equal weight. What's New York FANG look like? Okay, nice look to New York FANG. Back up into the top of the range on that channel. Looks like we'll be back up into the range on the channel. Looks like that's where we're headed. given what I'm seeing with all the other indices. S&P 500 equal weight. S&P 500 equal weight. Okay. S&P 500 equal weight. Wow. That's impressive. S&P 500. Okay, we've got risk on signals.
Market zone, and we're locked in on the rush of earnings out in OT today. Kate Rogers on what to expect from Chipotle. Christina Martinevelos on IBM, Phil LeBeau, of course, on Tesla. Kate Rogers, we begin with you and CMG.
Scott, analysts are looking for 33 cents adjusted on revenues of $3.11 billion for the second quarter for Chipotle. Its same-store sales projected to fall 2.9%, while restaurant margins are forecast at 27.1%. Those same-store sales will be a key focus for this quarter. Now, remember, in Q1, Chipotle saw its first same-store sales contraction since the second quarter of 2020, which the company said was due in part to weather headwinds and a slowdown in consumer spending. But executives did say then a strong plan to return to those positive transaction comps by the second half of the year. The restaurant sector is facing major headwinds right now, of course, as consumers are hunting for value amid concerns over a slowing economy. Chipotle has been able to withstand those challenges in the past with its pricing power, but the stock has struggled to make gains this year alongside similar concepts, Kava and Sweetgreen. Chipotle CEO Scott Boatwright will join us exclusively in overtime coming up right after those Chipotle results across the wire. Back over to you.
Look forward to that, Kate. Thank you very much. Christina, what about IBM?
Yeah, it's one of the more polarizing names in tech right now. I say that because the stock has doubled since the start of 2023, breaking through that $250 billion market cap ceiling that it hasn't really hit since 2012. But with shares really less than 5% off their recent highs, the bar is somewhat high going into earnings. Investors are going to be focused on whether IBM, though, can maintain its software momentum, especially with Red Hat and AI fueling growth, and of course how the launch of its mainframe cycle is going. Consulting, which I think it contributes roughly 30%, remains a weak spot with cautious spending trends continuing. Maybe Doge will come up in the call. And I'll still expect IBM to reiterate its 2025 guidance for a 5% revenue growth and more than $13.5 billion in free cash flow. But the quality of those results, particularly margins about and how much is driven by organic versus inorganic growth, will be key for a stock that's already had a big run. Year to date, up 28%, as you can see on your screen.
Yeah, we clearly do. Christina, thank you. Phil LeBeau, Tesla, what should we be looking out for more than anything else?
Well, do they beat on the top and the bottom line? What are three numbers we're going to be looking for? Or is it a miss for a second straight quarter? They missed by a wide margin in the first quarter. What happened in the second quarter? Deliveries were not that great. They were bad in the first quarter, didn't really improve much in the second quarter. What's the revenue from zero-emission vehicle credit? Probably hasn't fallen that much, but with the changes from the Trump administration, that will be changing in the quarters to come. And then they give us delivery guidance for 2025.
And that's a wrap.
The street right now is expecting another year
Looking
of
good.
declines in terms of total global deliveries down to a 1.66 million.
All right, folks. I'm going to stay here for a few minutes. Just listen. I'm going to take the headset off, but listening to earnings. I'm your host, Cousin Ben, coming to you from theclosingprint.com. It's the closing bell. 4 o'clock straight up, Wednesday the 23rd. I'll be here. I'm just going to take the headset off and take a few minutes and put my feet up and just watch the earnings for Google, Tesla, and others. Okay, so I'll be here. I'm not going anywhere.
end of regulation, Gotham FC were in the closing bell for the New York Stock Exchange. Jeffrey Allen of Beast Games Season 1 doing the honors at the NASDAQ, and stocks ending the day higher. The S&P hitting another all-time high. The move fueled by the president announcing a trade deal with Japan, and reports the U.S. may be close to an agreement with the EU. This is the 12th closing record in 2025 for the S&P. Healthcare, industrials, and energy leaders, utilities, and staples lag. A volatile day in the commodity space after hitting the highest level in a month. Gold ending the day lower. Silver also ending slightly tarnished after hitting its highest level since 2011. And yields ticking a bit higher today. That's a scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Ford alongside Morgan Brennan. Ahead, a long list of earnings coming your way, including the first two of the Mag 7 names, Alphabet and Tesla. We're also going to hear from Chipotle, IBM, ServiceNow, and T-Mobile.
Well, speaking of T-Mobile, we'll have an exclusive interview with the CEO, Mike Siebert. That's ahead of the company's conference call.
Plus, the CEO of Chipotle following its results as the stock continues to underperform. But before we get to all those earnings, let's begin with the markets as the S&P hits another all-time high. Progress on the trade deals and better than expected earnings so far this quarter, continuing to fuel optimism. Joining us now is Sarah Malik. She is Nuveen's CIO and head of equities and fixed income. Sarah, welcome. So, all-time highs. Keep pushing here. The meme stock type deal has reignited, though. Can you trust it? Can you keep buying here?
Investors are definitely experiencing FOMO, and the market's supported by three drivers. That's retail buying, strong earnings, and Liberation Day news. So first, retail buying some of those meme stocks. We've seen $50 billion come into the market over the past month from retail buyers. Second is the second quarter earnings setup. Estimates coming in.
Google looking good.
Just less than 5% earnings growth year over year. We're already beating that. I think we'll learn today that tech is going to lead the way in continuing to beat that. Then Liberation Day 2.0, due August 1st, but what's trickling in has not been a disappointment for the markets. About 15% tariffs is within expectations, and that's why the market has just hit its 12th new high for the year.
Alphabet earnings are out. We are going through them. We'll bring them to you as soon as they're ready. So speaking of, does that mean we can keep buying tech for the investors out there right now?
Well, Alphabet, what we're going to be looking for is pressure on their search results because of companies like ChatGPT and other search. But also with Alphabet, though, looking at Waymo, also their cloud business, and YouTube, that pretty much equates to the enterprise value of the stock. So it is not an expensive company at this point. The pressures on search are probably already priced into the stock. So I think tech can continue to lead. We'll see with Alphabet. Of course, Tesla, a bit of a different story.
Yeah, Sarah, we'll probably have to cut you off here as we get those results. But in the meantime, shares of Alphabet are trading higher right now. To me, one of the most interesting things in the trading session today was that it was all of these power-related companies, and actually, I'm already going to cut myself off. Alphabet earnings were ready to go. Mackenzie Sagalos has them for us. Hi, Mac.
Hey, Morgan, you've got Alphabet shares surging in the after hours, up about 1.3%. Now, let me get you those top and bottom line numbers. For Q2 revenue, it's coming in at $96.4 billion. That is a beat. The analyst consensus was 93.9.
They had $90 billion last quarter, $96 billion this time.
Second quarter EPS was $2.31. That's also a beat. The market was looking for $2.18. We've also got another key figure, which is cloud revenue that landed above analyst expectations, coming in at $13.62 billion versus the $13.1 billion analyst consensus. I'm going to keep digging through these numbers and I'll come back to you. But for now, shares actually now trending a little bit lower, down 0.5%.
All right, guys. Mackenzie, we'll be back to you as you get more. Sarah, I want to get your reaction to that with the beat on the top and bottom lines with the shares. They're a little bit.
Wow, her voice goes right through me. Jeez.
It's going to depend on the conference call and what they say about the pressure on search versus the other areas for them that are growing quite quickly, like Waymo and also YouTube and their cloud business. That's going to be what matters. The stock is not extremely expensive here, but tech stocks have rallied quite handily going into this print. And that's what we've seen with the market recently. Momentum and growth stocks actually started to roll over before today as people have been moving more into value stocks as the economy had remained strong. So one main question is, can momentum and tech continue to lead? I think that it can. Tech right now, the Mag 7 is over 30% of the S&P market cap, but the earnings growth driven by AI should continue to deliver, including AI investments, which we should hear more about with Alphabet, which has signaled $75 billion in AI investments this year.
Yeah, I mean, speaking of these giant
numbers from Alphabet. Some of the biggest winners in the trading section today were these energy-related and infrastructure-related plays, whether it's GE Vernova or Baker Hughes. It came up with Baker Hughes, even some of the other HVAC type system companies as well. Is the meaningful trade here around some of these AI infrastructure names as we start to see more and more money actually go into the ground? Public and private interest for infrastructure has been a top pick for our Global Investment Committee for many quarters now, not only based on AI data centers, but also more building coming back to the U.S. in terms of infrastructure. I think that's a great play to offset a continued investment in the winners within technology stocks. AI is alive and well. It's a trend that's not going to go away. It's going to increase productivities for companies and their revenue level, and we're going to need the infrastructure to build that. So that is a really nice derivative play that I think will continue for the infrastructure space around AI.
On the straight up AI front, we've got a couple of interesting companies reporting here in overtime today, ServiceNow and IBM. IBM, long considered a sort of old guard company, but it's been on a very interesting run lately with software comprising now a much bigger percentage of its business post Red Hat acquisition. Then ServiceNow, the market's not rallying overall. It's been one of the few software players at scale to continue reaching new heights stock-wise. So how should investors think about the difference between different types of software companies, you think? How they should invest in them, how they should play them, what they should watch for in these kinds of results?
I think software companies, actually, we are less positive on those and more interested in semiconductor companies where inventory is finally being cleared out. I think the semiconductor cycle from a supply side is going to improve in the second half of this year, and then hopefully we'll see demand continue into 2026. Software, I think, as a trade is starting to peter out. There's questions around how software companies are going to be able to implement AI into their business models and whether that will be a positive or a negative for them. So we're less positive on software companies, more positive on the trade into semiconductors. Yeah, and we're getting some more results from Alphabet. This looked like Google Cloud revenue basically came in line, 13.1 billion. YouTube ads, 9.8 billion. The tech, okay. He's going to bring us some of the other numbers. So we're going to go back to her. Stay right there, Sarah. Mackenzie, what do you have for us?
Hey, Morgan. So two other numbers we're looking at is Google search and other revenue. This is a key read on both the ad market and the shift to generative AI. That was a beat. That segment coming in at $54.2 billion. The street was looking for $52.8 billion. We also saw the company revise up its full year guidance on what it's going to spend on CapEx to $85 billion. And that's really big with respect to the competition as it looks to close the gap with AWS and Azure. I'm going to keep going through these numbers. We've also got the call starting in about 20 minutes, Morgan.
All right. Mackenzie, thank you. Sure. 2.5% right now. Sarah, what can you react to that, especially that CapEx number that's now been boosted to 85 billion. Also, this commentary release that AI is positively.
All right, folks, I'm out of here. Have a great evening. We'll see you in the morning. Ciao.